Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Anushi Vakharia. Good morning, Anushi.
Good morning, Alex.
It's turning out to be another good day of trade, and despite the bit of a wobbly start that we had to trade, we are now trading at very close to the high point of the day for the benchmark indices as well as for the broader markets. And 0.4%, we'll take it at this point, right? So you've had a 3-day losing streak that was broken yesterday, and hopefully we can set off on a gaining streak starting yesterday. But 24,700 reached on the upside for the benchmark Nifty 50, and the broader markets looking even better, and that was the case in trade yesterday as well. The mid-cap index now up about 0.6% or so, and close to 1% of gains for the small cap index. So all told, it's a good screen for the equity markets today. And pull up the advanced decline ratio as well, because the gap is quite considerable at this point. Of course, it closed just a tad bit at the start of the session. As I mentioned, that was a brief wobble. But then if today's session is anything like yesterday's session, then you will see consistent up move through the day. Yesterday, of course, we ended at close to the high point of the day. That remains to be seen about whether or not we see that today. Of course, IT is not participating as much today, neither is the banking index. Yesterday, it was one of the stars. IT index just about 0.1% higher, so is the Nifty Bank. So what you're probably wondering is contributing to this. In fact, let's pull up the sectoral indices and see what is. And you have the realty pack as a whole that is doing particularly well. Media as a pack, which is not something that is a big mover in any case, but on account of Sun TV, I would imagine, is up about 1.5%. Energy as a pack is doing well, and I'll tell you why that is. Oil and gas and energy both probably moving higher on account of Reliance Industries, and pull that stock up. It's contributing quite a bit to the benchmark Nifty 50's move today. It has been under a tad bit of pressure in the recent past, but there you go, 35 points on the upside is being contributed to by Reliance Industries. A few movers on the individual basis, Anushi, and in sectors that you're tracking as well, right? So you have Puravankara, that is one of the big movers in trade today. Interesting moves from the perspective of a Bangalore developer making inroads into Mumbai, right?
And now they have a big project pipeline in Mumbai as well. About 10,500 crore is the kind of revenue potential that they expect from Mumbai itself. You know, if you're just looking at the development size of this particular project, that's roughly around 2,700 crore or so. So real estate stocks, you know, in basis of, you know, what's happening with expansion in this area is something that we are looking at. But other than that also, you know, I want to pull up all the sugar stocks which are in focus. Now, you know, let's include the likes of Dwarkesh Sugar or even Balrampur Chini, all up about 7 to 8% in trade today. So that's where we're looking strong moves at as well. But other than that, you know, there are a couple of order wins as well. That includes the likes of Bharat Electronics, 644 crore is the size that we're looking at. So a lot of movers, as you know, you're just talking about that, right, Alex?
Absolutely, absolutely. Let's get our experts on. And by the way, if you're tuning in for the first time, there are two ways in which you can get in touch with Anushi and me. One is the number that you see on the top of the screen. You can send us a message on WhatsApp, or you can call us, and we'd love to hear your voice. So you can call us on the landline number and get in touch. We're joined today by Astha Jain of Hem Securities, as well as Swati Hodkar, who's the AVP Technical Research at Nirmal Bang. Thank you so much to the both of you, as always, for taking the time. Always a pleasure having you. And we've got an interesting query to start with, because among the stocks that are buzzing in trade, one of them is actually the tire space, right? Where you have the likes of you have JK Tire that's up and about. You have a couple of others, right? So you have Anas, who's riding in from Berampur. He's got JK Tire in particular, and he's bought it at levels of 236 shares, and he's wondering what to do with this. The sector is buzzing today. Should he hold or exit? Swati, this specific stock and also the rest of the tire pack as well, if you will.
Yes, on the technical front, definitely the structure is really positive on the weekly or the monthly chart. The setup is very strong on the technical front. The stock has shown a very strong reversals move from the 320 levels on the downside. Multiple cluster supports has been from. So the overall trend as of now, it's looking very positive. I'm looking for a target of 380. Up to that level, this rally is likely to be continued. So you should definitely hold on the long positions as long as the counter holds the 320 levels, the supports level. The long position should be held with keeping a profit stop loss of the 320 for a target of 380.
Okay, so that's the view that we are seeing for JK Tires. But next we have a caller joining us on this show, and we have Avi calling us right now. So Avi, hi Avi, I hope you can hear us. A very good morning to you. How can we help you on the show today?
Yes, I can hear all of you. Good morning. Good morning to everybody out there.
Good morning.
So I've got 3,541 quantity of Bharti Airtel bought at 1890 rupees. So I want to know, like, is it a good buy at this price, or like what could be a target?
Okay, so
in the
you
long
plan to
term?
expand your position further in this stock. Any particular reason that you want to continue to add more?
Well, actually, I thought everybody is eating data nowadays. Like everybody is consuming content online. So I think people using data has become a part of everybody's life, whether from rural area to urban area.
Right.
So everybody has a phone. So I just thought people might buy the same soap, but they might still upgrade to plans based on whatever they can afford, things like that.
Right, let me take this across to Asta then. Asta, what's your view for Bharti Airtel?
Hi, good morning to
Hi,
all
good
of you. See,
morning.
talking about this counter Bharti Airtel, first of all, they are expanding their TAM. So, in fact, there are various things which are working in the favor of this company. Their net debt is fixed, their free cash flows are increasing, and the way this company has posted its financial performance, it is really looking strong. Here, the caller has asked whether he has bought it at the right levels or not. So, my answer here is yes. These levels of around 1900, if I'm not wrong, with his cost price, is okay, and we are expanding this counter to move till the level of 2040 to 2050 in the short to medium term.
All right. TAM, in case you were wondering, what Asta was just mentioning is the total addressable market, and the space is certainly growing. Of course, the other aspect to watch out for in the telecom space is the increase in tariffs, which some brokerages are penciling in one increase towards the end of this year, another one in the next year. So that's something that could move the average revenue per user up for both Bharti Airtel as well as Reliance Jio. And of course, you've got the Jio listing that is expected next year as well. And if it does list at a premium, the other expectation is that it would bode well for Bharti Airtel, which would look more attractive from that perspective. All right, let's get the next question. Jigar has got a question, and he's writing in from Mumbai, and he's asking about a stock that is in focus today, Praj Industries. And this is on account of the latest update from the government, which has allowed the production of ethanol without barriers for sugar companies. And that bodes well for the sugar makers as well as Praj, which, as you know, produces the equipment that is used to make this ethanol. And so what he's saying is that he's bought at levels of 420. He's got a long-term perspective. Asta, the fundamentals, right? So if you look at the Q4 and Q1, you had a top line reduction, and the company did say in its statement when it posted its numbers for the first quarter is because capacity addition projects that were set up by a few of their clients were pushed down the road. With this clarity coming through on ethanol, would you say that this is certainly something to look for and the earnings potential improves from here out?
Yes, because there is one more point to that. We have seen the lackluster financial performance from this company because there were certain execution delays as well, which the company has faced. But now there is a more and more traction, first of all, from the news from the government side. And secondly, in fact, there is a more traction about its newer products. So I think that is also, one of the key to watch out in the coming quarters. So my idea here is that the long-term growth drivers remain intact for the company. In the short term, due to the execution delays, etc., reasons, we have seen that company is not performing very strongly on their financial part. But going ahead, I think both the news from the government side as well as the newer product which the company will be launching, I think definitely will attract the attention, and hence we are positive on this counter. But in the long term only, in the short term, it may show some sort of upside due to the news right now flowing on. But in the long term, this is a good counter to stay invested in. Price target can be set at around 460 to 470 odd levels.
Okay, 460 and 470 being the target for Praj Industries. So overall, an optimistic view is what we are seeing. But next we have a caller joining us, and this is Pawan calling us from Hyderabad. Hi Pawan, how can we help you today?
Yeah, hi. Thank you for taking my question and good morning.
Good morning.
Yeah, so I have a stock called Jamna Auto Industries with a total quantity of 612 at an average price of 87.44. So I want to add another 50K to the same stock. Will I be able to get some money on it?
Okay, and what's the kind of...
The next 10 year, I'm looking at a 4 to 5 year period.
4 to 5 year period. So it's a long-term picture that you're interested in.
Yes.
Okay.
Yes.
Okay. Astha, let me come back to you for this counter. So Jamna Auto is the stock in focus, and he wants to add further positions to this particular counter. What's your view?
So I think what we are saying that the government is continuously giving trust on the capex, and there is a revival also which can be there, and there are aging fleets also. So I mean all these things are really working well for this company, and we believe that this company is a good long-term bet to put the money in. However, at the current price, it may be showing some sort of a strong upside momentum. So maybe at the lower price of around 103 to 102 zone, one can accumulate this counter. Price target can be set at around 130 to 140 levels at the initial junction.
We've got a question now from Yavi in Mumbai. I must confess, it's the first time that I'm hearing that name, and I really like it. Yavi, thanks so much for tuning in. Tata Elxsi is the name of the counter that Yavi wants to know about. Bought at levels of 8,500 and incurring a significant loss at this point. And so, therefore, what I'm going to do at this point, like I normally do in the event that there is a significant loss, is take a view from both the fundamental and the technical expert. Because Astha, Yavi has bought on the fundamentals and has been disappointed. Is there a potential uptick in earnings from this point? Is there a case to hold on the fundamentals?
So I think, fundamentals, why we are not seeing this stock performing so strongly is that, there are the spendings which are showing some sort of softness from the automobile major sides. And that is why this counter is not getting that good of and that much of good demand that it should get. So, I mean, the major reason being the softness in the spending. And that is why we have seen that this counter has not shown strong performance on the financial front. Right now, and that is the reason that it is fetching losses also. But let's wait for some more time, because already here the investor is in the losses, so there is no logic exiting this counter at the present moment of a time. Idea here is to just wait for another quarterly numbers. Till then, a hold is recommended from my side.
Okay, so on the fundamentals, it is a hold. But let me get your view on the technicals as well, since you asked for a nearer term outlook. Swati, on the charts, is there any sign that a bottom has been found here?
Yes, Alex, on the technical front, we already seen a very strong profit bookings from almost 7,000 to now 5,200 levels. And the interesting fact that the counter is trading nearby the oversold zone. So, which indicates that the downside is limited and we might witness some sort of a bounce back rally or the recovery in the near term future. So, the initial target will be a 57.50. Any move above those levels will change the trend of this particular counter, and which will carry the momentum towards to 6,200 to 63 levels. So, up to that level, I'm looking for targets on the higher side. So no need to book your losses at the current levels, because I believe that the stock is on the verge of forming the bottom nearby 5,200 or 5,000 levels. So no need to hurry and book your losses. Wait for some more time. The short term to long term target will be at around 6,200 to 6,300. So you can hold on your long positions.
We've got a caller next, and Venkatakrishnan is calling us from Bengaluru. Hi, thanks so much for calling, Venkat. How can we help you today?
Alex, very good morning to you.
Good
nice
morning.
Talking to you, and very good. See, I'm holding this big query regarding Natco Pharma,
Okay.
and which have been holding it from 2024 March.
Okay.
And my average price is 874.
All right.
I'm holding about 100 shares. See, I bought the stock because of the book value, looking at the good book value and P ratio, and I mean, that's how I bought it. And I've been seeing that this stock has not been going up. I don't know what should I do with this stock. After about 1 year, I'm not been making a good profit, decent profit also. So I would like to have the views of your expert regarding this. What should I do with it?
So you bought it because the valuations looked attractive to you, but Venkat, did you intend to hold it for many years, or did you only have a perspective for a 1 year period?
I don't mind, holding for another about 1 year or 1.5 years.
From this point?
And I would like to expect at least about 15-20% margin.
Sure.
I think that's very decent.
Got it. I just want to clarify, 1 to 1.5 years from today, right?
Yes.
Got it. Asta, then on the fundamentals, Natco Pharma, when does that uptrend take place, and do you anticipate that a 15% return over a period of 1 to 1.5 years is possible?
See, I tell you one thing about this counter is that we have seen this counter not performing well because their product Revlimid is not seeing a strong, demand. And in fact, there can be a decline in the revenue on that part. In fact, if we listen to the management commentary, also management has, addressed this part in their commentary also, that there is a slower sales of this product. But now what they are doing, they are shifting their focus towards the domestic formulations, etc. So maybe coming FY26, the full year may be not very strong for the company, but for the FY27 or afterwards, we are expecting this company to show strong growth. And here, by luck or by chance, also the investors' time horizon is that much. So stay invested in this counter. Our price target is 950 at the initial level, but for that time period of a 1 year or so, definitely this counter will yield more upside. So as of now, we are limiting our price target to 950.
Okay, but we'll stick to the pharma space because, I believe our next caller also has a question regarding that particular counter. Shankar is calling us from Chennai. Hi, Shankar. Very good morning to you. How can we help you today?
Definitely. I am asking about Glenmark Pharmaceuticals.
Right.
I bought 50 shares at the end of 2222, 1 month back.
Okay.
At the time, I think it will cross easily to 25 to 27, but unfortunately it came down. Now shall I average it? I want a fundamental and short-term technical outlook also.
Okay, so let me take this across to Swati then. Swati, what is your view for the next 3 months or so if he wants to, whether he wants to add further to average it out, what's your view?
My view is definitely positive. No wonder the client has bought at elevated levels nearby almost all-time high levels. Now you need to hold your long positions. If you want to average it out, I believe this is not a right time to take an average out positions. If the stocks witnesses more corrections up to 1800 or 1850, those levels are very attractive levels to take your average positions, because so that your buying price will come down. On higher side, I'm looking for a target back towards to 2200 will be the initial targets, because the setup is really positive. It is trading in a upward rising channel. So 2200 will be the initial targets, and if it's break that level on the closing basis, then the door gets open for 2400 level. So up to that level, probably in the next 1 year and so, you will see the targets of 2400. So hold your long positions, and for the average position, let the stock correct more, and if it's correct near by the 1800 levels, then you can definitely average out your positions.
Good. And by the way, Venkatakrishnan, so therefore the view on Natco was that the upside potential may be capped, so you can take a call as to whether you want to hold or not. You, if, as far as I remember, were not making a loss on the stock, so you might find better opportunities in other spaces. BSE is the name of the counter that we're talking about next, and it is a question from Mahi. Mahi is asking if you bought at levels of 2145, which is below the current market price, would you hold on to this? And there's quite a few headwinds that the company has faced, and of course, because Mahi has bought a significant quantity of 1,800, the gains are about 1.5 lakh. So on the fundamentals, Asta, would you be concerned about loss of volumes in the derivative space and the fact that the multiples had been given to the counter because of the anticipation of very significant derivative play? Now, if that is going out of the window, there could be some problems on the valuation front. Would you agree? And therefore, would you book out profits from BSE right now?
What I believe on BSE is that, but other platforms are showing good volume growth. Maybe it is MF or maybe it is cash. So this is one of the point which I would like to say at this point of a time. And another point which I am liking about this company is that, in fact, they are showing some sort of improvement in the cost also. So cost reduction is one of the phenomena through which the company is trying to show or post better financials going ahead. So we believe that if one can give it a time period of more than 6 months, then it is a bet to stay invested on. But here, if the horizon is not 6 months or like that, then definitely one can book some sort of profit in this counter.
So that's the view for BSE that we are seeing. But next we have Sanjay calling us from Gujarat. Hi Sanjay, કેમ છો તમે?
હા બસ મજામાં.
બહુ સરસ. શું છે તમારું ક્વેરી આજનું?
આજનું ક્વેરી છે એક્મે સોલર.
Yeah.
I am speaking in Gujarati or English.
Whatever you feel comfortable with.
I am comfortable in both the languages.
So then ask in English, because then everyone will be able to understand. Otherwise, I'll have to get Anushi to translate some parts of it, because I can catch every third word, Sanjay.
Okay. Yes, I have Acme Solar bought at the price of 208.95 in April 15.
Okay.
What can I do? Should I book the profit or stay?
Sanjay, can you just repeat when had you added this particular counter?
April 15, 2025.
Okay, and you want to understand for the next how many months or also?
Like 1 year or
1 year.
something.
Okay, so let me take this across to Astha. Then Astha, your view for Acme Solar?
So if he's comfortable, I can answer in Gujarati because I am also Guju. So Acme Solar ની આપણે વાત કરીએ તો મને એવું લાગે છે કે તમે આ કાઉન્ટરમાં તમે ઇન્વેસ્ટેડ રહો અને તમારું રોકાણ કન્ટિન્યુ રાખો, કેમ કે શું છે આ કાઉન્ટર એવું છે કે 300-350 સુધી જઈ શકે છે, એનામાં કઈ વાંધો નથી લાગતો. કેમ કે એ લોકો બહુ સારી પરફોર્મન્સ આપી રહ્યા છે. આપણે અગર ફાઇનાન્શિયલ પરફોર્મન્સની પણ વાત કરીએ તો સરસ પરફોર્મન્સ છે આ કાઉન્ટરથી, તો કઈ વાંધો નથી. આપણે એનામાં કન્ટિન્યુ રાખવું જોઈએ આપણું રોકાણ, અને 350 નું હું તમે ટાર્ગેટ આપું છું આ લેવલ પર. And if I want to translate it in the English, they have given a
let me try. Asa, let me try and see if I've understood everything that you said. So there is no problem with the performance. You can stay invested and you can go for a target of 350 rupees. Not bad, right? Not bad. I can say that I can understand some Gujarati, and you were great. Sanjay, hopefully that answers your question. Deepak is asking the next question and asking about Bajaj Auto and writing from Chennai from the perspective of a period of 6 to 12 months. Now, the entire auto pack, of course, has been buzzing in the recent past on account of the expectation that the GST reform will lead to increased consumption, and of course a normal monsoon bodes well for domestic consumption as well, and rural is expected to fire on all cylinders. But since the question is for 6 to 12 months, let me go across to you, Swati, on the charts. What's the view? I think you might just be on mute.
I'm really sorry, Alex. I'm really very positive on the auto sector assets, especially Bajaj Auto and Hero MotoCorp. Definitely, Bajaj Auto is really looking very attractive on the technical fronts. Trading in the high top formations, upward rising channels. We have seen that the stock has shown a very strong formations in the range of 8,000 to 7,800 levels. Those are very strong support levels for this. The next targets I'm looking forward to is 9,750 to 10,500. So up to that level, very soon the stock is likely to enter into the 5-digit zone. So you definitely hold on your long position. Initial targets will be 9,750, then 10,500 levels can be seen.
Okay. All right, so that's the view on Bajaj Auto. By the way, a message to all of our viewers tuning in from across the country. We will attempt to understand whatever you say in your local language, but then of course, I'm most comfortable in English, though I can struggle to speak in both Hindi and Marathi. Let's see. I don't know how many languages Anushi can speak.
Well, we'll stick to English only for that matter.
Okay, there you go. All right, we have to slip into a very quick break. We'll be back on the other side to take more of your questions, so do stay tuned.
That's huge. That is a biggie. It's out.
Gold Plus Clear Glass, far ho ya near, sab kuch dikhe clear.
Tech has changed, so should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed, so should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
जितिन प्रसाद जी, सेमी के प्रेसिडेंट अजीत मनोचा जी, देश विदेश से आए सेमीकंडक्टर इंडस्ट्री के सीईओज और उनके सहयोगी, विभिन्न देशों से यहां उपस्थित हमारे अतिथि, स्टार्टअप से जुड़े उद्यमी, अलग अलग प्रदेशों से आए मेरे युवा विद्यार्थी साथी, देवी और सज्जनों, कल रात ही मैं जापान और चीन की यात्रा करके वापस लौटा हूं। आप गया था इसकी ताली बजा रहे हो, आया हूं इसकी ताली बजा रहे हो। और आज यशोभूमि में एस्पिरेशंस और कॉन्फिडेंस से भरे इस हॉल में हूं, आपके बीच उपस्थित हूं। आप सब जानते हैं, टेक्नोलॉजी को लेकर मेरा एक स्वाभाविक पैशन है। अभी मुझे अपने जापान दौरे के दौरान वहां के प्रधानमंत्री शिगेरू इशिबा-सान के साथ टोक्यो इलेक्ट्रॉन फैक्ट्री जाने का अवसर मिला और उसके सीईओ भी हमारे बीच अभी बता रहे थे, मोदी साहब आए थे। साथियों, टेक्नोलॉजी के साथ मेरा ये झुकाव मुझे बार बार आपके बीच लाता है। इसलिए आज भी आपके बीच आकर मुझे बहुत आनंद हो रहा है। फ्रेंड्स, यहां दुनिया भर में सेमीकंडक्टर से जुड़े एक्सपर्ट्स हैं। 40-50 से ज्यादा देशों का यहां रिप्रेजेंटेशन है और भारत की इनोवेशन और यूथ पावर भी यहां नजर आ रही है। और ये जो कॉम्बिनेशन बना है उसका एक ही मैसेज है, द वर्ल्ड ट्रस्ट इंडिया। द वर्ल्ड believes in India. And the world is ready to build the semiconductor future with India. मैं सेमिकॉन इंडिया में आए आप सभी महानुभावों का अभिनंदन करता हूं। आप सभी विकसित भारत की यात्रा में, आत्मनिर्भर भारत की यात्रा में हमारे बहुत ही इम्पोर्टेंट पार्टनर्स हैं। साथियों, कुछ दिन पहले ही इस साल के पहले क्वार्टर के जीडीपी नंबर आए हैं। एक बार फिर भारत ने हर उम्मीद, हर अपेक्षा, हर आकलन से भी बेहतर प्रदर्शन किया है। एक तरफ जब दुनिया भर की इकोनॉमी में चिंताएं हैं, आर्थिक स्वार्थ से पैदा हुई चुनौतियां हैं, उस माहौल में भारत ने 7.8% की ग्रोथ हासिल करके दिखाई है। और ये ग्रोथ हर सेक्टर में है, मैन्युफैक्चरिंग, सर्विसेज, एग्रीकल्चर, कंस्ट्रक्शन, हर तरफ उत्साह नजर आ रहा है। भारत आज जितनी तेजी से ग्रो कर रहा है, इससे हम सभी में, इंडस्ट्री में, हर देशवासी में नई ऊर्जा का संचार हो रहा है। ग्रोथ की यही दिशा है तो भारत को थर्ड लार्जेस्ट इकोनॉमी बनाने की तरफ तेजी से बढ़ना पक्का हो चुका है। फ्रेंड्स, सेमीकंडक्टर की दुनिया में एक बात कही जाती है, ऑयल was black gold, but chips are digital diamonds. हमारी पिछली शताब्दी को ऑयल ने शेप किया। दुनिया का भाग्य तेल के कुओं से तय होता था। तेल के इन कुओं से कितना पेट्रोलियम निकलेगा, इस आधार पर ग्लोबल इकोनॉमी ऊपर नीचे होती रहती है। लेकिन 21वीं शताब्दी की शक्ति छोटी सी चिप में सिमट करके रह गई है। ये चिप भले छोटी सी है, लेकिन इसमें दुनिया की प्रगति को बड़ी गति देने की ताकत है। और इसलिए ही आज सेमीकंडक्टर्स का ग्लोबल मार्केट $600 बिलियन तक पहुंच रहा है और अगले कुछ साल में ये $1 ट्रिलियन को भी पार कर जाएगा। और मुझे विश्वास है भारत जिस तेजी से सेमीकंडक्टर सेक्टर में आगे बढ़ रहा है, इस 1 ट्रिलियन मार्केट शेयर में एक अहम हिस्सा भारत का रहने वाला है। फ्रेंड्स, भारत की स्पीड क्या है, ये भी मैं आपके सामने रखना चाहता हूं। साल 2021 में हमने सेमिकॉन इंडिया प्रोग्राम शुरू किया। साल 2023 तक भारत का पहला सेमीकंडक्टर प्लांट अप्रूव हो गया। साल 2024 में हमने कुछ और प्लांट्स अप्रूव किए। साल 2025 में हमने 5 और प्रोजेक्ट्स क्लियर किए। कुल मिलाकर सेमीकंडक्टर के 10 प्रोजेक्ट्स में $18 बिलियन यानी 1.5 लाख करोड़ रुपए से अधिक का इन्वेस्टमेंट हो रहा है।
Okay, so the Prime Minister speaking at the Semicon event, watched very, very closely by India Inc. And of course, this is in line with India's dreams and aspirations to become a hub for semiconductor production down the line as well. Let's go back to the queries that all of you have sent us. And by the way, if you're tuning in for the first time, then there are 2 ways to get in touch. Either you can send us a message on the number on the top of the screen, or you can call us on the number at the bottom of the screen. Nagababu, who's writing in from Andhra Pradesh, is asking about Bajaj Housing Finance and whether it can be bought at the current level for a period of 5 years. Asa, on the fundamentals, what would you say?
Regarding Bajaj Housing Finance, I believe that yes, one can make an entry into this counter for the period of 5 years, because in the short term we can see certain hiccups in the stock prices. But talking about the fundamentals of this counter, I feel that first of all, the group is very strong. Secondly, their asset quality is very good. And thirdly, I believe that the net interest margin is also on a very stronger side. The only problem which I was finding about this counter is it's a high or a steep valuations, and that is why maybe in the short term it may not rise so strongly, but in the long term, from the perspective of 5 years, one can make a fresh entry into this counter. In the short term, we are keeping our price target at 130 to 135.
Asa, let me stay with you as well for the next query. Now, Ram is writing to us from Chennai. He has about 2,500 shares of restaurants brand Asia, and this is at a price of 80 that he's bought the shares at, currently facing a profit of about 7,000 or odd. So, just wants to understand the long-term outlook for this particular counter. Your view?
Long-term outlook is also positive for this counter, because the kind of momentum we are seeing in the Indian economy regarding the consumption story, definitely it is helping all these counters to move higher. So I think we are very much positive on the industry tailwind right now, and hence giving a hold for this counter with a price target of 100 to 105.
Okay, all right. Let's talk about the next one. And we've got a question from Ramesh, who's asking about Ola Electric. And let's pull up the chart and see where it's currently trading, because the stock has been on an absolute tear. Of course, it's off the high point of the day, but over the course of the last month or so, it's up about 50% or more than 50%. Ramesh has bought at levels of 50 rupees. So he's seen an upside of about 13 rupees per share and is in the green right now. Of course, the stock is yet to hit its issue price. Swati, on the charts though, does he take money off the table right now, or should he hold for further gains? You're on mute.
Alex, from the last 3 weeks, the counter is really showing a very strong performance after hitting the bottoms of 40 rupees. I believe the strength is, as of now, it's there, and this rally is likely to be extended towards to 74 to 75 levels, and beyond that level, 80 levels can be tested. So view is definitely positive. Right now, it has started showing a very strong momentum rally, so you should definitely hold on the long positions. If you want to keep any profit stop losses, 55 will act as a very crucial support levels. Keeping that as your profit stop loss, you can hold on your long positions.
That's a view for Ola Electric that we have for you. But next question is from Dikshita, and she wants to understand on whether which textile stock could be added given the kind of scenario also that we are looking at. This is interesting, given the situation wherein tariffs are in place and one of the most affected sector is textile. So, Asta, let me come to you for this query. What's your take on this?
Yes, what we are seeing right now is that tariffs are not playing very much, in the favor of these company. But if I would like to go with only one textile stock as of now, I think that is KPR Mills. Because if I talk about that counter, I think KPR Mill is a better choice at this point of a time. In fact, in today's trading session also, we are seeing that this counter is moving higher. So KPR Mill is one of the finest choice in the textile space. On some dips at around 1000 or 980 odd levels, one can make a fresh entry also for the price target of 1080 to 1100.
Okay, all right. So that's a view on KPR Mill. We've got Pawan calling us from New Delhi. Pawan, very good morning to you. How can we help you today?
Okay, good morning, Alex. First of all, I just wanted to quickly thank you because 6 months back I asked a specific question about Aster DM, and at that time it was trading at 470.
Okay.
And then that was a very strong, you advised me very correctly. Rajesh was there at that time, and now you can actually see the kind of profit. But coming back to my original question now, Siemens Energy.
Yeah.
Okay, I'm sorry. I'm not.
You're not?
Okay.
Sorry, please go ahead.
Yes. Siemens Energy I hold, and this was exactly I got a new entry into it after the company demerged from spinned off from Siemens.
Yes.
Right now, my specific question is, I know the energy theme and it's going to go up, and as per the Motilal Oswal report, EPS, everything is strongly placed. EBITDA is placed. The future things seems very good. But would I book some profit, or I still
Hold on. Add more. Got it. See, first of all, Pawan, on your previous question, I'm glad that you've made gains, but I can take absolutely no credit. I'm merely a facilitator, and it's our lovely experts who are giving you the advice that you can use, and hopefully that bodes well for you in the case of Siemens Energy as well. Since you've got a relatively longer term view on this one and you're making gains, and it seems like you've been holding for a while, let me go to Asta on this. Asta is holding with substantial gains on Siemens Energy, and he's wondering whether to add more or should he hold on?
I think one can hold on at the present point of a time rather than adding more. Let it fall to, on the lower levels, and then make a entry into this counter or accumulate it. Now, the reason why I'm saying this, because yes, we have seen that they have got a very, very strong presence in the power voltage lines, and in fact, their power transmission segment is working very strongly. But I think on the valuation part now, one should wait for some more lower levels to make or accumulate the counter or make a fresh entry on. However, price target which we are keeping for this counter is at around 3,800 odd levels. And in fact, we are expecting the financials to be on the higher side. We are expecting the financials like revenue or the PET CAGR to be, to give a growth of around 20 to 25% for the coming 2 years. So definitely it is a good counter, but at the lower level, make a fresh entry.
Okay, very interesting. Now that's the view that we are seeing for Siemens Energy, a potential target of being around the levels of 3,800. Now the next question, it's from Muthu Kumar, who's writing us from Tirupur. Here he's holding about 25 shares of Polycab, and this is at a price of 5,972. Currently has made a profit of around 29,000 on this. Wants to understand the long-term view for this counter as well. So Asta, coming back to you, what's your take on the stock?
So long-term view is also positive on this counter for the Polycab. However, I'm just seeing about the price target. So price target which we are giving to this counter is right now, because we had a coverage on this counter. So in our report also we are giving the price target of around 7,500. So 7,500 is the price target which we are setting for this counter. And long-term prospects are looking very, very strong on the back of the strong financial performance, because it was more than expectation which this counter has delivered on the financials in the Q1 of FY26. So we are positive on this counter. 7,500 is the price target which we would like to give for this counter.
All right, Sedhuruman is calling us from Bengaluru. Sedhuruman, hi, thanks so much for joining us. How can we help you today?
Hi, sir. I'm holding a PFC share of 3,000 quantity at 420 level.
Okay.
So currently I'm on negative actually, about 70 plus.
Yeah.
So my concern is, I mean, like, can I hold for a long time or I can come out?
Okay. Okay. I got your question, and incidentally, we got another viewer also asking about REC, and generally these two are talked about as a pair. Asa, on the fundamentals, we did a piece recently and we spoke about the fact that PFC, REC, both are trading very much below their consensus targets. If anything, there's a pretty large gap that has now been created, 30+%, I think 35% or so from the consensus, if I'm not mistaken. What is the view on PFC, REC both?
So first of all, talking about PFCC, their results were good, but it was majorly a provision write back which this company has done, and on that basis we have seen a growth in the financials. And yes, what we are seeing that they are now moving much below than their historic valuations also, both PFC and REC. So it is a good time to start accumulating both these counter, in which PFC is our preferred choice. So right now we are recommending, in fact, our clients also that start accumulating these counters because they have shown a very strong downfall, and now we are seeing that the near-term base is already formed for this counter, and hence we are recommending to start accumulating both of these counter, in which PFC is our preferred choice. Price target for the PFC is 425 at this moment.
425 is the target that we are seeing for PFC. Now, next question. It's from Atharva. Now, he holds shares of RVNL and he spotted this at a price of 460. Now, if we are taking the current picture, then the stock is trading near the levels of 326 or also facing a loss of 62,000 on the counter. Swati, let me come to you on this one. A lot of these railway stocks that we've seen have shown underperformance considering the Q1 considering the first quarter as well. Just want to understand your short-term outlook on this one.
See, long-term position is definitely view is positive, but for a short period of time, it's a little bit cautious. But the interesting fact that the counter is trading nearby the oversold zone. So we have already seen a very sharp correction since mid of the 2024 from 600 to 320 levels. Now, I believe that the stock will try to form the bottom nearby 300 level. Then we can witness some sort of a reversal. Price correction has already been witnessed, but now I believe the stock will take the time correction phase will be going on in the near term future. For a very short period of time, 380, 370 are the initial targets, and beyond that level, 420, 430 levels can be seen. No need to book your losses at the current market price because I believe the stock is under the formations of the bottom levels. So hold on your long positions. It has a capacity to come down up to 420. So you can hold on your long positions.
All right. Muthukumar is writing to us from Tirupur and asking about Polycab. Polycab is done. All right, and RVNL also done. Parag Naik from Mumbai is asking about this Sunflag Iron that he's bought at a price of 80 rupees, and he specifically asked for the medium-term outlook. I'm not sure what this is. I'm familiar with short-term, I'm familiar with long-term, but I don't know how you would define medium-term. Is it 1 year? Is it a little over 1 year? If that is the case, let me go across to Swati. Sunflag Iron currently trading at 276 rupees per share, significantly above the buy price of 80 rupees. What's the view on the charts?
Yes, definitely. You can hold on the long positions because setup is really positive, not showing any kind of a trend reversals from the higher levels. Downside, it has a very crucial support nearby 250 levels. So by keeping that as your profit stop loss, you can hold on the long positions. For even short period of time, I believe that it has a potential to reach up to 320 to 340 levels. So the setup is strong. You can hold on the long positions by keeping a profit stop loss of 250 levels.
Okay, so that's the view that we are seeing for Sunflag Iron. That's stock in focus over here. Now, next question is from Govind. He's writing to us from Hyderabad. He has about 6,000 shares of IRFC, and this is at a price of 149 that we are looking at. Wants to understand whether he should continue to average this or book loss for this counter. Asa, let me come to you, considering that his time horizon is for the next 2 to 3 years period.
So I think that one can do averaging, but not at the current point of a time. And don't book losses also on this counter, because what we believe that these companies will definitely be start showing some good performances on the financial front in the quarters coming ahead. So yes, one can accumulate this counter at the lower level of around 120 to 180, and hold is a recommendation from my side for the price target of 140.
Got it. All right. The next question is on Aditya Birla Capital, and Kailash is asking this question. He's purchased at levels of 182.3 and he's wondering whether to book profits or to book profits and reinvest or to hold on is a question. He's optimistic about the second half of FY26. What's your view on the fundamentals? If I remember correctly, a few people have turned positive on AB Capital. Have you as well?
Yes, because their asset quality is really very, very strong. In fact, they have shown the resilience in the asset quality wise. And this is, hold more importance when we see that their peers are not able to show that strong, quality in their asset. So yes, we are positive on this counter and recommending a hold for this counter with a price target of 310.
Got it. All right. We've got our next question on Tata Motors, in fact. And in fact, Nagalakshmi is writing in asking about this. Bought at levels of 744 rupees per share and asking whether they can average or hold. Now, there are additional headwinds that have come through on the fundamentals for Tata Motors in the form of Jaguar Land Rover. There was a notification that was sent out to the exchanges about them being unable to book any new sales. But having said that, since this is a question on averaging and on the relatively short term, let me go across to Swati on the chart. Swati, what's the view on Tata Motors?
Yes, my view is definitely positive. As I said, all the auto packs are really doing very well in this technical front. Also, I believe that the stock has a very strong potential to reach up to 750 to 800 levels. Because as of now, from the last 6 months, it is under the consolidation phase within the range of 600 to 700. Now it's on the verge of giving the breakout. So definitely you can hold on the long positions. I'm looking for a target of 800 will be the initial targets. Beyond it, 840 levels can be tested. So definitely you can hold on your long positions for a long period of time.
All right, it is time now for the rapid fire segment on this show, and this is where we throw as many questions at our experts as possible over the course of 2 minutes. The first one is on City Union Bank, which we've got Mr. Kar, who's bought at levels of 216 rupees. Should it be held for 3 to 5 years? Asta?
Yes, for 3 to 5 years, a hold is recommended for this counter with the initial price target of around 220 levels.
Okay, Shri wants to know about Dabur. Swati on the charts. Dabur, would you buy at this price point?
Yes, I would like to initiate a buy call at the current market price. Upside target 600 to 620 levels can be seen.
Okay, we got a viewer asking a question from Hyderabad. Oil India is the name of the counter. Would you hold for a period of more than 1 year if you bought at levels of 517? Asta?
Although financial performance were not strong, but for the 1 year, definitely we are expecting improvement in the performance. Hold is a recommendation with a price target of around 435 to 440.
Okay, Mahindra and Mahindra. Long-term view is being sought. Gold is bought at levels of 2784. So considerable upside already. Should he hold? Asta, what's the view?
Yes, hold is recommended for this counter as well because we are seeing a strong traction in the automobile space. 3400 can be set as a price target.
Okay, Hindustan Zinc is the name of the counter. Siva is writing from Amaravati asking about this. Bought at levels of 540. Swati, can it be held for a period of 6 months?
Yes, you can definitely hold on, but within the 6 month, I don't believe 540 levels can be seen. Initial targets will be a 500. If it sustains that level, then only 540. But the view is definitely positive. You can hold on the long positions.
Okay. Raghu Kiran is asking this question. Apollo Hospitals is the name of the counter. Sitting on 30% profit, would you book at this point or would you hold? Asta, what's the view?
Hold. We are recommending hold for this counter and price target can be set at 7900 to 8000.
Okay. We've got Rajesh who's asking this next question. Varun Beverages bought at levels of 549 rupees. Asta, relatively short-term views being sought. Should they hold or exit?
Hold is recommendation from my side for the price target of 550.
Eternal. Shrikant wants to know. Eternal, 2,000 shares at a price of 60 rupees. Will it pass 400 in the short term? What's the view, Swati, on the charts?
Yes, view is definitely positive. Initial target will be 360 and beyond that level, 400 levels can be seen.
All right, we've taken 30 questions today. Ladies, thank you so much for joining me today and for answering all the questions you did. Always a pleasure.
Thank you.
All right, and from Anushi and myself and the team that put the show together, thank you so much for watching. Hopefully, the questions that we've discussed today have helped you, even if your specific question was not taken. Do stay tuned. Up next is Know Your Company, and this is NDTV Profit.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
Hello and welcome to NDTV Profit. You're watching Know Your Company, that is KYC, a proprietary show that actually tells you what the company is all about, what an investor should do, what are the concerns, opportunities and threats that come in there. I am Hiral Datia and with me is Puneet Javeri. Puneet, an interesting company that we're talking about today is Asandhar Technologies. If you talk about the company as well, just a quick understanding of why we are talking to Asandhar Technologies. Firstly, we are going to actually understand the growth outlook for the medium term, because when you talk of Sandhar as well, last couple of quarters, I would say, revenue and profitability growth has been strong. Margins, there has been some bit of a concern that has come in. So that's going to be one aspect. And secondly, the other angle that we're going to explore is the company's plan with regards to where debt reduction goes, because on the consolidated books, the debt is a problematic area right now.
Well, that's definitely one of the key aspects, and with that we've also seen an increase in interest costs, so that will be one to watch out for. The other key aspect will be rationalization of joint ventures. Now, they have already sold off a couple of them. If the other ones could be profitable, that will be one to watch out for. And finally, strategy for the company to increase its share of exports. Now, with rationalization of joint ventures and the loss-making ones now disposed of, how will the growth of the export market come for the company? That'll be the other one that we'll be targeting as.
So these are the 4 questions that we have in mind with regards to Sandhar. But let us quickly tell you what Sandhar Technologies is all about. To start off with, the company is into manufacturing and assembling of automotive components. That's their primary business. And they also look at safety and security systems for automobiles across segments. If you talk about their revenue split as well in terms of categories, let's just quickly look at the two-wheeler, passenger vehicle, off-highway and CV segment. Between all of this, 60 to 64% of their revenues actually come in from the two-wheeler category. Passenger vehicles was 20%, it's gone down to around 17%. Your off-highway vehicles has remained absolutely stable in the last 2 years in that 15 to 16% kind of range. But CVs and others is very minuscule. But majority right now is coming in from the two-wheeler category, and that has been the space which has been evolving as well. If you talk about all the Vahan data that has come in so far, the auto sales numbers that are coming in as well, there is a story which is building up in the two-wheeler segment. So probably you are looking at a Sandhar Technologies from that angle.
Definitely, and it has been outperforming the growth essentially in the passenger car segment, and that seems to be a positive for Sandhar among other auto component makers as well. Let's quickly look at the product-wise segment as well, and here also you will see a bunch of products that the company operates in, but there are some that we need to focus on in terms of growth, and when the management comes, we'll be quizzing them on that. The sheet metal business is one, almost 1/5 of the revenues comes from this, and when you look at the ADC overseas and the domestic business, this is aluminum die casting essentially business, which one of them they've acquired from Sundaram Clayton. That also forms a considerable part of the revenue. And then there's the locking system. They are looking to enter the smart lock space as well, and they are expecting some unit performance in there. Amongst the other segments, which you look at, cabins and fabrications is the other one, which is largely in the off-highway space and the CV space. We saw some impact in this quarter because of that, and we'll see if we can get that kind of growth guidance from the management for these segments. But largely, Vision Systems is a new business that the company focuses on. But these 2 to 3 business verticals is key for Sandhar in terms of growth prospects, and we'll be quizzing the management on that.
Absolutely, but let's quickly take the viewers through all the rating parameters that we are considering. The income statement, balance sheet check, cash flow, return ratios, these are the top 4 parameters that we will be taking you through for Sandhar Technologies. Apart from that, shareholding, street credentials, the coverage is slightly muted, and the valuation picture is what we will be considering as well when it comes to Sandhar Technologies overall. But let's quickly start with the income statement. If you see in terms of the revenue as well as the profitability, it has been a strong number that the company has reported in the last couple of years. If you see the 3-year compounded growth as well, a 19% is what you're seeing in terms of the top line. The profitability as well is 36%, which is very strong. I think the major concerning area over here which comes in is in terms of where the margins go, because they've remained muted in that 8 to 10% kind of a bracket. If you talk about compounded, it's around 6%. When will the company come back to that double-digit kind of a margin profile is the key question over here. Though on the back of the revenue, EBITDA and net profit, we have given it a thumbs up so far, but the margin is going to be slightly concerning, and that's what we will check with the management.
Well, definitely. And the other aspect is on balance sheet. Let's quickly pull that up as well, because we've seen roughly about 1,100 odd crores of reserves and share capital is what the company holds. The reason we've given this neutral rating is largely because of the higher net debt that the company has. While roughly about 740 crores of net debt is what the company holds, when you compare that net debt to the equity ratio, you come somewhere around 0.6 times. And this has been impacting the profitability because of the higher interest cost, something that the company has taken cognizance of. They are looking to reduce debt, but the timeline is something to watch out for from when the management joins us. The other aspect is cash in bank, largely maintaining at 80 to 100 crores, but they have been steadily increasing that with the increase in cash flow from operations, and that's the next aspect that we're looking at.
Right. Let's also look at their cash flow. You know, it's very interesting to see because they have seen a good growth that's coming in terms of FY25. If you see the cash flow number, that's the net one, it's at 58 odd crores from a negative number in FY22. And from there, the growth has been spectacular. Their cash flow from operations has also seen a substantial growth. The key from here on is going to be how sustainable is the net cash flow and the cash flow from operations going to be if you have to take FY25 as a base from here on, which will improve, or will it remain stable, or is there a potential for any deterioration to happen? That will be key.
Well, the other one, and in terms of cash flow as well, we've seen a steady increase over the last 2 to 3 years, and that is a positive for the company. The only aspect is the rationalization of joint ventures, and we'll get to that in just a bit. The other metric that we are also looking at is return ratios as well as shareholding. So let's pull up return ratios first. Have been steadily improving as visible on the last 4 years. But compared to the other auto ancillary companies, it is lagging in terms of the return on capital employed, which normally operates between the 12 to 15% for most auto ancillary companies. So in comparison of its own performance, while it has steadily improved, we've given this a neutral rating on just given the historical performance as well as what's happening in the sector. A similar trajectory is for return of equity as well. We've seen profits increase and ROE is almost doubled from the FY22 levels. But essentially, we will need some more constructive aspects of the newer business that the company will invest in, because the return on capital employed ratio will have to go up from these levels. And that's been one of the pain points for the company over the past few years.
Right, but moving from here on, let's quickly understand the shareholding pattern as well. It's interesting to see that the promoter stake has been absolutely steady over the last couple of years. But if you look at the FIs, DIs and the public, FIs did see somewhat of an uptick in FY24 to around 1.5%, but again, it's come down to around 0.8%. DIIs as well has been steady in that range of around 15 to 16.5%. Your public, again, the free float is absolutely on the lower side, around 13% is where it is at. So again, this is a pretty positive in terms of the steadiness that you've seen, but the key will be if the management is in conversations with any FIs, DIIs with regards to, coming in as an investor into the company to see growth from here on, because that could be a positive trigger.
And that certainly has been one of the key ones for them as well in the near term, if they are looking to do that as well. But the other one that we're also looking at is the street cred, essentially. Since listing in 2018, it has been a disappointing performance for the company, and that was impacted because even on a YTD basis, the stock is down 10%. In the last 1 year, it's down 22%, but compared to the 2018 levels, the stock's just up 35%, and that's underperformed the Nifty benchmarks by a mile, because we've seen Nifty go up from roughly about 7,500 essentially in 2020 to almost 25,000 now. So it's almost a 2.5-3 time increase. But for Sandhar specifically, while the last 5 years they've grown by 100%, since listing, those investors who stayed on have not got that kind of returns that they should have in a high growth company. So we've given this a thumbs down on that aspect. And street coverage is also based on this performance that the company has been, because it's been limited retail.
Okay, so that's with regards to where the street credentials go. But let's understand where the valuations of Sandhar Technologies actually stack up. If you have to look at overall currently, FY26, the price to earnings is around 18 times, and hence we've given it a neutral rating. In fact, Puneet, if you have to look at the historical aspect as well, because you've been tracking the sector pretty closely, if you're looking at 18 times, would you say it's cheap or expensive in comparison to peers? Let's forget, the different segments of business, but if you have to just not do a like-to-like, but just compare it to another auto ancillary company, 18 times valuation, where would you place it?
Well, definitely it's a positive in that aspect, because we've seen companies, the newly listed ones like Bellrise as well, and we spoke to them during our India Market Open show, started at 18 times price to earnings for during the IPO, and then has steadily increased over 50% since the issue price. So the market is rewarding growth. That's largely been absent for Sandhar. So and even if when the growth has come in, it's not been profitable. So that's the reason why we've also seen just a couple of analysts that track the stock. One of them is DAM Capital, capital. They have a target price of 600 rupees per share, which is a considerable upside from the current market levels. And for them, the valuations at, when you pencil in till FY27, it's at 12 times. So it's definitely cheaper compared to the relative peers. Once I think the market gets that kind of confirmation of growth, I think we might see the positive reaction.
Yeah, and if you talk about peers as well, on an average, I was just looking at a couple of them. It's coming to around 35, 36 times, right? And taking that peer average into comparison, with that 36 times, if you are looking at 18 times, it's absolutely reasonable and probably cheaper as well. And that's the reason why you have analysts who do cover the stock who are finding the valuations absolutely attractive. And the revenue growth is the key, the profitability is the key. It's margin expansion that is going to be a question from here on. But let's also quickly look at the street coverage from here on, because as you mentioned, you have DAM Capital, which is a target price of 600. I think you have a BNK, but that is Batliwala and Karnani also, which has coverage on the stock, right?
Yeah, and they've largely maintained a positive view. 517 is the target price that BNK has specifically. Someone like a DAM Capital, as visible on your screen right now, is at 600 rupees per share. And we did speak to the management very recently, post a few weeks ago, essentially on NDTV Profit as well. And the one question which I asked them essentially was on how they are rationalizing their European operations, because that has been impacted and is still loss-making. We could expect some kind of currency deterioration as well in this particular quarter, but largely they are expecting a better H2 performance. The two joint ventures that they've sold off as well, starting from March to now, will aid the company's profitability on a full year basis. So compared to last year, where we did see that impact coming in, we shouldn't see that much of an impact on Sandhar Tech, at least in that side. But that largely seems to be something that the management has been vocal about. They have been mentioning that the rationalization of joint ventures was something to watch out for, and hence they've come out and done these two measures. The other aspect was on debt, which we will be speaking to the management about. Roughly about 740 crores is inflated given the company's current cash levels, and while the equity has largely been stable over the last few years with the promoter holding as well, we will have to see some rationalization on that aspect.
Rationalization in terms of debt is going to be, again, another aspect. But let's quickly take the viewers through the final rating parameters that we've considered at NDTV Profit. If I take you through the income statement, balance sheet, return ratios, and cash flow, two of them, that's the income statement and the cash flow, are a thumbs up from here on. Balance sheet and return ratios is absolutely neutral. Let's see if the management commentary helps NDTV Profit make it a thumbs up as well. Your shareholding is also a thumbs up. Your street credentials and street coverage is a thumbs down, and your valuations are neutral so far. But if you have to compare, not give it a like-to-like comparison to peers and just do a comparative with auto ancillaries, it is cheaper. So the KYC final rating is 4.5 on 8 when it comes to Sandhar Technologies as well. In fact, let's also now get in Jayant Davar, Chairman, MD and CEO at Sandhar Technologies, to talk to us about the company, the road and the outlook going ahead. Mr. Davar, welcome to the show, and always a pleasure to speak to you at NDTV Profit. I hope you've seen the KYC rating that NDTV Profit has given the company and the analysis that we have done so far. But my first question coming to you is, good growth in terms of revenue, good growth in terms of profitability as well. The only concerning area right now is the margin profile. You have indicated on a sequential basis there will be improvement, but there has been no guidance to tell us that when will the company come back to that double-digit margin growth. What's your outlook on that? Because you've said earlier FY27 is when you will look at double-digit. Why not FY26? And why not in the coming third quarter as well is the bigger question here.
Well, good morning. Thank you for having me on the show. I think we've been giving guidance even since last year, when we said that we would have a 50 basis points improvement in margin, and we did. We've given a similar guidance for this year, which means that at the closure of this particular year, we will be 50 basis points, which will be in double digits for sure, and a safe double digits in that sense. So See, it's always, you mentioned growth and revenue. The fact is, we do believe that when you make new investments, it leads to growth and then profitability follows sometime later. And that's been the case. We've been making substantial capital investments, which have led to growth. And now I think it's time for us to fertilize and take benefits from what we've done.
Mr. Dawar, very good morning to you. Thanks so much for joining in. It's Puneet this side. It's good speaking to you again as well. Just let me ask you about these new verticals, as you mentioned. You are the locking systems is one of them. Roughly 1/5 of your revenue is coming from that segment, and now you are looking to enter the smart locks segment through that. Talk to us about how big of an opportunity that is, and that's largely, I'm guessing it's an opportunity within the auto space. So give us some perspective of the India opportunity as well, and where do you see this going in terms of your current locking business that you have?
So Puneet, let me put it another way. These smart locks, although not alien to the car industry, is definitely new to the two-wheeler space. And the opportunity size is big because you're aware that India is the largest producer of two-wheelers in the world, close to 20 million, and scheduled to move into much higher growth territory as we go forward. Now, all of this is currently operated, or all vehicles are operated with manual locks. The smart lock category is about 8 to 10 times higher in terms of revenue per lock. So therefore, if you look at the potential market, it is massive. We have just begun that journey. Two of our big clients have just onboarded these as standard equipment. It will take time to flow and become deployed horizontally across this two-wheeler space. But it's been a good beginning, and we are very happy that we are the first ones off the block in the mass market of two-wheelers for very, very reputed, largest players in the market.
And Mr. Dawar, do you largely see this as a higher margin compared to your traditional locking system business? And currently you have mentioned that you're seeing a 50 basis point margin improvement. So would it be safe to say that the locking business would be roughly already 11 to 12% in terms of margins, while the other ones are slightly lower, hence you see on a consolidated basis around 9 to 10%?
Actually, the lock business is even higher margins. If I was to give you broad ranges, it ranges between 14 to 16%. It is some of the other new businesses that bring the overall hybrid number down, especially the casting business, the sheet metal business, which are commoditized. And they've just been put up the expansion path where large investments have been made. And whenever new investments are made, a lot of capital expenditure does get shrouded in the form of revenue expenditure. But I think going forward, as these have stabilized, these have all moved to profitable platforms and patterns, you would see these margins grow up quite significantly as we go in the future. If you look at, you did mention about our return on capital employed. We are targeting to cross that 15% number soon. That is our guidance for this particular year. As we go forward into the years, our target would be to come to a level where we have 15% post-tax as our immediate target going forward.
That's a very strong guidance when you talk about the return on capital employed, Mr. Dawar. Now, let's understand what could be the risks that could probably delay this. How are you seeing the ramp up in terms of new facilities? Because any delay on that front could be a downer. Secondly, the turnaround time with regards to where the JVs go. If you have to club both of these, are they absolutely on track in terms of what you had planned, or what stage are you at?
Well, I'm happy to say everything is on track, largely. In terms of new expansion, we had invested in an acquisition which was done at the beginning of the year of Sundaram Clayton aluminum business. And that has now been integrated well into the company. So the capital expenditure, I think at this point of time, is more generic and organic and establishing what we've already put in place. Therefore, we don't have large plans as we go into the future for capital expansion. Our target and our main job is to consolidate and make the capital investments that have been made profitable in this year and in the future years. In terms of growth, we do see, you're aware that 60% plus of our revenues come from the two-wheeler space. Within that space, we do expect this particular year to be growth oriented, where I believe that two-wheelers will probably have the largest growth compared to, let's say, passenger vehicles or commercial or medium commercial vehicles. We do believe that at Sandhar, we would do double that market growth that the industry does will come to us. Plus, of course, the revenues that will come to us through the acquisition that we have done. So we've already given a guidance of around 20% odd. We are hopeful that with the GST thing kicking in and the market picking up further, we should be able to beat even that number as we go forward.
That's a very strong...
In terms of JVs, you asked a question on JVs.
Yes.
All our
Yes.
JVs are profitable. All our JVs are profitable. And we are very happy that they are no longer a burden on the balance sheet of the company.
No, I mean, JV is no longer a burden is interesting. The other aspect we need to consider, Mr. Davar, is when you talk about the GST benefits, how do they negate the impact with regards to the European market slowdown and US tariffs? Because I know the company does not have a major impact on that front, but your Mexican operations have been impacted on the back of the slowdown in demand that you've seen on that aspect. So if you have to look at the European markets as well, your company did report a loss in the first quarter. Your US tariffs, your Mexican operations have been impacted as well. What is the outlook and the contribution that you are expecting from both these markets? And do you think the GST benefits that could come in will negate the negative aspect of these two?
Well, first of all, the good news. The good news is that we had, the basis for the good news of today is based on history of yesterday, where we had a 22 crore loss coming out of our foreign operations in the last year. While we did suffer a loss in the first quarter itself of this particular year, a large part of that was attributed to a notional loss in terms of foreign exchange, which was 4.5 crores. And there was a commodity price adjustment that comes in later, which led to that loss. Going forward, I do believe that from the next quarter itself, we will turn that tide, and we are very, very hopeful that we will be positive in our overseas operations by the end of this particular financial year.
Mr. Davar, just two quick questions, and because of paucity of time, I hope if you could give us both the answers. You are looking to raise roughly 500 crores, but you did mention that capex is going to be lowered once these capacities come in. So what is the use of these funds that you are planning to do?
Well, there are many things on the plate right now. We were looking at some inorganic kind of expansion. We were looking at some inorganic expansion, and there were some very interesting targets being considered to make sure that we do not miss out on those particular opportunities if they were to come around. We have decided to keep a war chest kind of ready.
And is that largely global or domestic? Sorry to interrupt, Mr. Davar, but is that largely global or domestic in terms of acquisition?
Largely domestic. Largely domestic.
And just one more quick one. You mentioned the acquisition of Sundaram Clayton facilities. They were running at lower utilization, did about 100 crores in terms of revenue. So will the utilization somewhere be around 30% as of now, and that you will substantially increase over the next couple of years?
No, we are looking, I think when we took over, the revenue was close to 350 crores. We do believe that with us getting in there, bringing more efficiencies on the block, we do believe that the existing capacity itself has an upside. Plus the fact that we are doing some expansion capex there for that same facility. And I would believe that with that happening, we should easily have a capacity of double of the revenue that was being done prior to our takeover.
Right. I think strong commentary, Mr. Dawar, coming in from your end with all the concerns that the investors could have. But thank you so much for joining us on the show. But clearly, Puneet, you're talking about a double-digit margin soon. 14 to 15% ROCE from the current 9%. Inorganic acquisition for which they've already raised funds, so they're absolutely ready if any opportunity comes in as well. Debt reduction is on the cards, and their overseas operation, which is loss-making, which was a notional loss, as the management mentioned, will probably be positive in FY26. So all these aspects seeming to be positive. So that's with regards to where Sandhar Technologies go. But completely out of time. With that, it's a wrap on this edition of Know Your Company. From Puneet, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Hi, thanks so much for joining in to this special bullet, special coverage. We've got global trade turmoil with the US playing hardball and using tariffs as a blunt instrument. The Indian government in this entire dynamic is focused on a reform agenda that's aimed at bolstering consumption, and the spearhead of that is the rationalization of goods and services tax. The proposal by the government, which was approved by the group of ministers, is to move to a two-rate regime from the current four-slab structure. 5% and 18% will be the two broad rates. The first reading of this implies a cut in the rates on over 150 goods and services. This will now be debated and hopefully ratified by the GST Council in a meeting that starts on the 3rd of September. On this special show, we're talking about how companies are gearing up for this landmark change and whether India Inc. believes that consumption and therefore growth is on the up and up. Joining me at this moment is B. Thiagarajan, who's the Managing Director of Blue Star, Sridip Nair Kesavan, who's the Chief Executive Officer of Heritage Foods, and Vishal Vittal Kamath, the Executive Director of Kamath Hotels India. Gentlemen, thanks so much for taking the time. And this is hopefully a measure that will bring a smile to all of your faces and certainly your consumers as well. So let me start from the perspective of the consumer durable space, because I think this is something that a lot of people are excited about. Not only air conditioners, but I'm hoping that you can give us perspective for the industry at large, Mr. Thiagarajan. We've spoken in the run-up to this event, and apart from a few inventory-related issues, the worry was about implementation. And the signs are that 22nd of September, at the start of Navratri, is when this will take place. Would you say that, on balance, this is a very positive move?
It is an excellent move. One could have asked for more. The industry had been asking for rationalization of GST, but we never thought that 28% will be brought down to 18% on all the categories. For example, in air conditioners, we have been pitching for at least 5-star air conditioners. You reduce it to 18% or 12%. But the announcement is much more than what we anticipated, and in a price sensitive market, for example, more than 90% of the buyers are first time buyers, and 65% plus are from tier 3, 4, 5 markets. 80% of the models sold are entry level products, and more than 40% are bought through consumer finance. You can imagine the consumer profile. For them, let us say 1,500 to 2,000 rupee reduction in price is a big thing, and it is going to result in explosive growth.
You know, I will circle back on a couple of things that emerged from what you just said, but I do want to go to Mr. Kesavan as well, because in the space that you play in, the price sensitivity exists, but the price tags are much smaller. So I'm wondering what you anticipate the impact of this shift to be.
Alex, thank you very much for having me on the show. Absolutely, I agree with Mr. Thiagarajan that this is actually a double Diwali gift, as Prime Minister put it. This is a big bonanza. This is something that the economy really needed. And if you look at actually the GDP growth in the last several quarters, we have had fantastic growth rate, but primarily they were all driven by services sector and the government capital expenditure. Even though consumption has been growing, but it has been growing a tad lower than the GDP growth rate. So we really badly need this for the consumption boost. You're absolutely right. In the categories where we operate, the price tags are smaller, but price sensitivity is very high. The biggest beneficiary of the proposed GST revision would be the categories such as ghee, butter, cheese, etc. These are all put together. The size of the organized trade today is about 65,000 crores for these categories put together, in which ghee is the biggest contributor at about 35,000 crores. Now, you know that ghee is actually a household consumption item, but with prices as high as 700 rupees a liter, it's quite natural that people switch to lower priced alternative or edible oils, which are probably imported into the country. Actually, India is a net importer of edible oils. So this will actually have a double effect as far as the economy is concerned. One, it boosts the consumption of our own home-produced ghee. Secondly, it will reduce the burden on imported items such as edible oil, because the more ghee consumption means reduced consumption of other edible oils. So we expect this to have a significant boost to consumption.
Okay. So I do want to talk about the services space as well. And Mr. Kamath, one of the big talking points, of course, is that 7,500 rupee mark for a hotel booking, where anything below that would move to a lower rate. And this, I think, is a shot in the arm for a sector that is already being spoken about in various circles, about being one of the fastest growing in India, travel and tourism. What, according to you, is the fillip that you will get from a rate reduction here? And do you anticipate that the rates in the space that you play in will now get polarized even further, and that middle range of around 7,000 to 9,000 or 10,000 might just go away?
Namaskar. Nothing will go away. And the thing is that as you have an improvement in the GST simplification and the GST rates in general, what happens is customer profiles tend to change. Now, as Mr. Tyagarajan said, many a times they are first-time buyers. But what about the second-time buyer? A second-time buyer is the kind of person who will take advantage of the GST rate being reduced and go towards what we call as premiumization. So there would be a saving on one hand, that today if someone was going to a simple restaurant, he still has the urge to spend a certain amount in his mind. Now that the tax is reduced, he might want to go for a better product. So whether it is in our industry or any industry, I do feel in the long run, premiumization which has happened post-COVID will further get a boost because of the rationalization of the GST. In our industry, there will definitely be, see, the 5% segment which was already there for the food industry, for the restaurant part, which is in standalone, that is already having a certain consumption based on a certain demand, festivities, celebration, or need-based dining. But when we look at the higher segments, when we talk about India as a MICE tourism destination, I think the rationalization of this 18% also is critical, because we are losing out our foreigners to Thailand, to Taiwan, to other nations who are having a very friendly GST policy or a taxation policy and a visa policy to help all these people come and increase their forex. So I think along with this 5% shot in the arm, we should get a shot in the 7.5 category also, because ultimately, if the volume of business goes up, the GST collection will go up. And that is something which I hope the government will look at and in the council meeting on even further on this 7.5 thing. See, this 7.5 cap was what logic has never been told. And considering that it's been there from the last 3 years, it does not account into today many of the tier 2 cities also crossing 7.5 because of inflation and demand perspective.
Yeah.
So I think we look forward to the government bringing this and making our industry more friendly in terms of GST on multi levels.
Important point that you've raised, right? And the tendency of these slabs to remain unchanged for many years is something to contemplate as well. But I do want to ask both the manufacturers, and I am loosely using that word, sellers of products, whether they anticipate that capacity will have to be added if they think that consumption will get such a boost. Because, and I'll start with you, Mr. Tyagarajan, you are only speaking about, or we are only speaking about GST today, but there's more that is in the works, right? We've spoken about the implications of the IT reform. We've spoken about the monetary policy, which is favorable now and possibly heading even lower. You've got the 8th Pay Commission. So you've got several cylinders that are firing. Do you anticipate that not just you as a company, but the industry as a whole and private sector will have to significantly bolster capacity in the near term?
Of course, yes. It is a golden period. Even without the GST rationalization, some of the consumer durables were on a very high growth path with a CAGR projection of close to 19%. Many other categories, it is between 10 to 15%. Now, GST rationalization combined with the one more thing is the income tax rationalization happened actually. All these put together, it is going to drive consumption growth. Of course, you will have to watch out for a global economic slowdown, whether we will be able to avoid it and protect ourselves as a firewall, that the Indian economy will continue to grow irrespective of what is happening in the globe. We have to watch out for that. But otherwise, if I were to take the period FY 26 to FY 31, it is going to be a golden period. There is absolutely no doubt about it.
Mr. Kesavan, you want to weigh in on that?
Yeah, in the long run, I totally agree with you that with consumption increasing at the rate at which we anticipated to, we will have to ramp up the capex, that we have in our pipeline to accommodate the kind of volumes that's going to come our way. If I could just talk about some numbers, for example, ghee in India, organized trade is roughly around 32 to 35,000 crores. That's the size of the industry per se. And the unorganized or informal economy is close to about 80 to 90,000 crores. We anticipate that it's just my simple estimation that in the next 3 years, the organized industry of ghee could double and become 65,000 crores. That's a CAGR of about 32 to 35%. And if we are probably, the industry is gearing, at this point in time, it's geared to accommodate a growth of about 20 to 25%. So this is close to about 10 or 15% higher rate of growth that we anticipate. So we will naturally have to accommodate that. But that said, I believe that we should also look at certain flip sides that we are, or rather actually watch outs that we may have in the short term. That is, for example, it is still not clear about the inverted GST structure that we have in certain products, and for example, the inventory. The timing of this particular announcement for our industry is very interesting, because of almost 40 to 50% of our sale happens in the festive period, which is September to November period, as far as ghee and butter is concerned. And the announcement is coming bang in the middle of it. And we'll have to watch out how the inventories pan out. So there might be short-term variations in the kind of sales numbers that we might clock. But in the long term, I totally agree with you that this is a good story as far as capacity building is concerned.
Yeah, important. And we incidentally have spoken to Mr. Tyagarajan in the recent past as well about the inventory issues. And I think what he had stressed very clearly was that the sooner the implementation takes place, the better it is, because less pain for the system at large, right? Because the distributors will have to hold inventory and bear certain losses. But I'm just wondering about how you rate this in the larger scheme of things. I'll come to you, Mr. Kamath. Give me a sense of the trend that you've witnessed already so far this year, because the latest aviation trends also seem to suggest that the second quarter was a little soft. So do you anticipate that the rest of the year, given everything that we've seen, including the GST push that we could see now, will be significantly better than what we've seen so far? And if you can put it in numbers, that would be very helpful.
So if you're asking me,
I'm asking Mr. Kamath.
Oh, you're asking me?
Yes.
Oh, acha, sorry. Basically, the first quarter rather was a little soft because, as you know, we had Operation Sindoor, which basically did put a pause in the month of May, which is also a crucial month because there's a lot of corporate movement happening. There's a lot of holiday goers also. So certain of our industry sectors did suffer. But if you look at it going forward, now looking at the month of September, October, November, we are looking at very buoyant and robust growth. And regardless of whether the GST deduction happens or not, people will still go out. They will still holiday. They will still get married. It's just that now they'll have a little more money to celebrate and to buy more things. And like I said about the premiumization, we find that there's a value upgradation happening. Today, I will want to buy a branded product like Blue Star or Heritage, go to a Orchid Hotel, as compared to, compromise and buy some, white labeled AC, because my aspiration has improved. If you look at the car segment also, the premium segment cars, if you look at the alcohol segment in the premium with terms of single malts, and in hospitality also, Orchid Hotels are getting more traction than what they would maybe in 2018-19. So there is a more demand for brands, and there is a further growth. I think all three of us are unanimous in the India story, in our own citizens, in our consumption story. and the aspiration that carries with it. Yeah, that's how it would say.
Very well put. And I like the statement because it makes a lot of sense, right? There are certain products and services that you will consume irrespective. And of course, if you consume and the rates are lower, there's more money in your hands. So weigh in on that, Mr. Tyagarajan. Do you also see people moving up the value chain sooner rather than later? And what are the implications for companies like yours?
See, in the normal course, for example, 3-star air conditioners, actually that constituted a lot, and some 30% of the total sales used to be 5-star. Now, since the price levels have come down, yes, while 3-star air conditioner buyers, a significant amount of them can migrate to 5-star because it makes business sense for them, because over the life cycle, they are going to save power. Earlier, it was the price band that was restricting them. So obviously it will happen. The second part is someone would have thought of buying one air conditioner for a bedroom. Now they may consider buying two. Little more money they have to spend because the per unit price has come down. They can afford two instead of one. So it will have a phenomenal effect. We have seen for a much smaller reduction. Here we are talking about 28% to 18%. It is historic. It has never happened in India. Even though excise duty and VAT was there.
Certainly. My last question to you, gentlemen, out of 10, I would like you to rate your excitement ahead of the rollout of this landmark GST reform and ahead of the festive season, which I think all of us are hoping is going to be a fantastic one. I'll start with you, Mr. Tyagarajan.
Out of 10, 15, I would say.
Okay, you've broken the scale. Let me go to you. Let me go to you next, Mr. Kesavan.
Can I go one up on Mr. Tyagarajan?
Please do so.
Yeah, so yeah, absolutely. I'll also go with 15, 20, 25, whatever. We're also super excited, especially because of the timing. For us, it's very critical. The categories that are going to be impacted are highly salient during festive period. There couldn't have been better timing for such a gift.
And Mr. Kamath?
I just like to say that both as an industry and as a consumer, both we are ecstatic. The reason being that we have suffered through so many challenges with multi-taxes that now with this in simplification, anything happening is 100% satisfaction on our demands in terms of improvement. So I think there can be no debate about this at all, that as a consumer and as industry, we are extremely happy.
Okay, we began with smiles on our faces and we're ending with smiles on our faces. Gentlemen, thank you so much for taking the time.
Thank you.
Thank you very much.
Thank you.
All right, now that is a perspective from three companies and industries that are certainly going to benefit. But let me widen the scope and give you a sense from the associations that represent not just the large companies, but the smaller ones as well. I'm joined now by Sanjay Nair, who's president of ASSOCHAM. I don't need to introduce him or the association that he represents. And I'm also joined by Chandrakant Sarunke, who is the president of SME Chamber of India. Gentlemen, thank you so much for taking the time. Let me start with you, Mr. Nair, because there seems to be a considerable amount of excitement. And my previous panel has rated this 15 plus out of 10 in terms of excitement. I wonder what your initial thoughts are.
Hi, thanks for having me on the show. I would say, yes, there is a fairly high degree of excitement, but I think we have to wait for the details to come out in the next couple of days. I would say at a headline level, the simplification, the rationalization into two duty structures, and I'm hoping very much for clearer compliance, easier compliance, lesser form filling, lesser classification that lead to misclassifications. Anything and everything we can do to simplify the life at least benefits our MSMEs and SMEs big time. Half of them don't even want to, they really get hassled about just the burden of proof, the burden of filings, the periodicity of it. So I think we just need to simplify that. That I think itself will be a huge achievement. Besides, of course, the rate structures being rationalized and coming down in quantum. So that's kind of my headline view.
Mr. Sarunke, please weigh in on this, and thank you so much for taking the time, because ultimately in the context of what is happening on the global stage. And I think we're all cognizant of the fact that a lot of small companies are getting impacted by tariffs. But at the same time, what was just being pointed out about simplification and the ease of the burden for small companies, do you think there is more good than bad that is emerging from this situation?
First of all, I'm very much thankful to the Prime Minister and the Honorable Finance Minister to taking the lead to reform the GST structure, because it is impacting to the SME sector, particularly for those rural area, those are into manufacturing industry. It was impact on the simplification of the logistics, improve the tax structure, expanded business reach, but also the imposing the challenges such as an increase compliance cost, complexity in the tax filing, cash flow issues from upfront tax payments also. Initial difficulties in adapting to the new system. I think the GST aims to create a single uniform tax system, replacing the multiple indirect taxes, which is leading to the operational efficiency, competitiveness in MSME sector, and especially for the current economic scenario in India as well as the global platform. It will be the beneficial to the SME sector, particularly those are also losing the benefits of the GST. I'm sure that this will enhance the profitability and efficiency amongst the MSME sector, and especially in the manufacturing industry, because India is looking to become a manufacturing hub, and the Honorable Prime Minister has given task to MSME sector to march towards Viksit Bharat. So without SME, India will not grow, and without India, the economic global
important points that you raised. Mr. Nair, just comment on this, right? Because you focused on simplification, and ultimately I think that was a criticism of the erstwhile or the current way of functioning, right? Do you anticipate that that a simplification and reduction of the slabs will lead to greater compliance, as a result of which you will start seeing significantly higher collections and better compliance?
I think it'll definitely lead to more enthusiasm on the part of the small and mid-size industry, that's for sure. Whether it will lead to, ultimately more profitability, whatever, I don't know. But we need the animal spirits and we need the MSMEs to double down and be able to invest. So part of the investments people make, and we've been always saying private capex hasn't picked up. One of the reasons is we don't see a secular pickup in consumption, right? And then that trickles down from the large companies all the way through the supply chain to the MSMEs. So the way I'm at least, and the way our members give us feedback, it's simplification is the first step, so that ease of compliance, it's not about, not paying the GST, it's about just doing it fearlessly and in a very transparent way. I think that will definitely improve on a scale of 10, give them another boost of 3 or 4 points. But the rest of it has to come from a secular pickup in consumption, right? That's when you put more money into the ground and you increase your capacity. So that's number one. Number two, if they're going to make more profits and things are simpler and they put money into new technologies, the big guys and the small guys, you become more competitive over time. And that is the other thing we have to think about as we get into the world of this whole tariff discussion. You've got to be a low-cost producer, not only for your country, but also for exports. So again, I'll stop there because I'm sure you'll have a follow-up question.
I do, in fact, have a follow-up question. And this is that I was speaking to two product companies, one in the consumer durable space and the other in the packaged food space. And both of them were very clear that sooner rather than later, capacity addition will have to take place. And I want to take from your last comment about consumption picking up. I'm sure that you've gotten a sense from your member companies as well. Assuming that the 22nd is when this kicks in and we have a blistering festive season, do you anticipate that starting towards the end of this year itself, you will have to set up additional capacity? Because in a lot of industries, Sanjay, we're already working at 70-75% capacity.
See, if it is truly 75-80% capacity, the private capex will come automatically. A secular pickup in consumption will come from a couple of drivers. Okay, one is the income tax break we got previously, which is now going to get, embedded nicely into the people's income stream. Reduction of a weighted average, just take whatever weighted average is, between 5 and 18, let's say 12%. That is going to put more money in people's hand. but we have to see lasting consumption. We saw it in the previous 2008 crisis ke baad, we gave an impulsive consumption stimulus. It didn't last and give us a lot of headaches. This way, the impulse that we are giving, which is rationalizing duty structure, more income in people's hand post-tax after the last budget, this will, I think, give a secular bump in the consumption. So I'm not going to react to your Diwali question or pre-Diwali question. I'm more keen on watching what happens over the next 1 year. If people are going to get another 20,000 rupees in their hands, I think that will change the consumption pattern, and that will then drive private capex.
Okay.
About Diwali, I don't know, and what's going to happen before Diwali, I don't know.
Yeah.
But I'm sure there will be a lot of mithai being sold. So that's
absolutely, fine. Absolutely. And as they say, right, it, you know, aapke muh mein ghee shakkar, thank you so much for that very beautiful thought. And what I'm taking from this is that the direction is the right direction, right? So, gentlemen, thank you so much for taking the time and for speaking to NDTV Profit. And that brings us to the end of this special broadcast. Of course, it's given us quite a bit of food for thought. Let us know what you think in the comment section, and do stay tuned. This is NDTV Profit.
That's huge. That is a biggie. It's out of there.
Gold Plus Clear Glass. Par ho ya near, sab kuch dikhe clear.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers you're watching Profit Buzzers. This is Hiral Dadia and with me is Puneet Javeri. Let's quickly take a look at what markets are doing at this hour. Exciting times right now because just ahead of GST 2.0, there is some bit of enthusiasm in terms of markets. You're nearly at the day's highest levels. We're above the 24,700 mark, 0.5% higher in terms of Nifty 50. Let's quickly pull up Bank Nifty on the screens and we'll look at the sectoral indices as well. Bank Nifty, though, is a downer in today's day. From the day's highest levels, it has receded and now seeing marginal gains of around 0.1%. Let's look at the sectoral heat map as well. You have energy, which is the top gaining sector. Defiance continues to see some buying interest. Energy is up in trade. Real estate, oil and gas are the ones which are buzzing. The only ones which are not seeing a good day of trade is the healthcare and the pharma pack, though minor cuts there, but overall it's a sea of green, you could say, with those waves that are coming in the form of the pharmaceutical pack. But moving on, let's quickly look at the contributors to Nifty 50 and which are the stocks that are contributing to the kind of gains that you're seeing in today's session. RIL, the top gaining stock today in terms of contribution, followed by TCS, Infosys. So your IT pack is also seeing a good day of trade. Your private banks, HDFC is contributing. What's losing out is ICICI. So the dichotomy between ICICI Bank and HDFC Bank seems to be interesting in today's session. M&M, Bharti, Asian Paints are a few of the other names. Let's quickly also look at the broader markets. Puneet, if you see in terms of broader markets, again, strong day at the day's highest levels. You have the mid-cap 150, which is seeing gains of 0.6%, and the small-cap 250 seeing gains of nearly gains of over 1%. So you have the small-cap pack, which is outperforming the broader markets, and this is a phenomena that you're seeing in the last 2 to 3 trading sessions as well.
Well, definitely, and thankfully the tide has turned along what we saw from last week as well, because last week we saw sustained pressure both on the benchmarks as well as the broader market. Today, as well as starting since yesterday, we have started to see some positive movement, reacting a lot on what's happening with GST announcement across sectors such as auto, EMS, consumer durables doing well as well. Let's quickly look at the BSE 500 as well. That's the other one that we want to point out, because we've seen a bunch of stocks react today. Sugar is one of the key spaces which we've spoken on. In ethanol, Sri Renuka Sugar is up almost 14% in trade today. Something like an Avanti Feeds is also up 7.5%, while we have seen some pressures on stocks like Godfrey Phillips as well as Craftsman Automation, amongst others as well, Hiral. And that seems to be what the story seems to be, at least for now. But we're now being joined by Mr. Harendra Kumar. He's the Managing Director of Institutional Equities at Elara. Mr. Kumar, a very good afternoon to you, and thanks so much for joining in. And you, of course, joining in from the Elara India Dialogue 2025. So thanks so much for giving us the opportunity here at NDTV Profit. Let me first start off with what's been the talk of the town, essentially, in terms of announcements from GST. While still early days, we could expect a couple of announcements over September 3rd and September 4th. We have seen that spaces within the auto space, the EMS space will get benefited. But what kind of transient impact do you see across indirect impacts like banking amongst other sectors that we need to watch out for, according to you?
Yeah, perfect. So I think GST is, of course, one of the major pivots for the markets that you will see. So the 1.5 lakh crore cut in GST tax rates is fundamentally meaning that the turnover or the revenue that Indian companies will be around 7 lakh to 8 lakh crore. So there's a huge multiplier to the revenue, and the market incrementally will start pricing it as we go ahead. It's unclear now how the demand will pan out, but broadly these are the two numbers that the market will have to pencil in. Now, within that space, of course, automobiles specifically that you asked is seeing very good demand, even with investors around here. So be it a Hero or Maruti or some of the other names, there are twin benefits. One is the GST cut will bring down the prices, and the companies can also probably pass on the discounts that they're currently giving to the end prices, so the margins will also improve. And the bigger lever out there for automobiles is, I think it is the one sector that will directly benefit from rate cuts. So given the valuation multiples, macro triggers and GST and monetary policy will move in favor for them. So automobiles is looking very, very exciting post the GST announcement.
Right, GST has come in as a Diwali bonanza, absolutely. But let me come to you, Harendra. This is Hiral on this side. With GST as a major benefit, you're talking about GST negating the impact of US tariffs as well, because currently they do stand at 50-odd%. If with that you have to tie up the way earnings have panned out in terms of the first quarter of FY26 and the valuation multiple that the Indian markets are trading at, summing all of this together, what is the market telling you from here on? Where do you see it heading? And secondly, who will drive the shift?
Perfect. So if you see where is the market settled now, we are closer to the last September levels. A whole year has passed and the markets have not moved, right? And giving, so we have subsumed the overvaluations by underperformance or remaining flat. But another one quarter, the market will start repricing in the next financial year. So that gives us a cushion of 12 to 15% further from here on, given that the markets have not delivered anything till now. Second, of course, then we've discussed the fillip from the GST cuts that will come onto the revenue and the rate cycle that will kick in. So earnings per se, which have been pretty subdued, should start to look up from here on. So you will have a valuation kicker and you'll have a earnings kicker coming into the whole theme. So what's keeping it subdued now as of moment is the market is standing only on one leg, which is the domestic liquidity. So the SIP flows and the domestic liquidity flows is supporting the markets. Now the FI piece, right? So we've seen outflows, some inflows after RBI eased liquidity, and again outflows. So the missing piece as of now is the FI outflow that we are seeing, which should convert into inflows. Now, when will FIs will convert to inflow is they have some stability on the tariffs, the rupee has bottomed out, and the earning upcycle picks up. So my guesstimate is that before festive, they figure out that the earnings are going to recover, and we see some thaw in terms of a relationship between us and Mr. Trump or the US. The FI should start taking a bet on India. Mind you, with respect to the EMs, India is now the worst performing market vis-a-vis China. So into the next financial year. So if you ask me, the outlook previously 12 months to what we have to look, outlook is very, very positive with respect to even flows.
So Harendra, would it be right to say that India could be a potential re-rating candidate from here on, if all the other external factors that you're talking about right now fall into place?
Absolutely. I think what it also, the market is seeing now is that the government is pressing on second generation reforms, which have been missing for quite some time. So there is some level of optimism, but all this is getting clouded by just one variable. I think as that one variable passes, the market will take off from there on. So on the underlying, a lot of good work is happening, and the macro tailwinds are aligning as well. So as this clouds shift, I think the market should resume their upward journey.
Mr. Kumar, just one perspective and from your side as well, because you did mention that the underlying earnings kicker should start from now on. We already have the valuation kicker as well, and we are also very underweight in terms of foreign investor inflow. Once that happens, which sectors do you think could show essentially the earnings kicker going forward? Because there are some pockets like the IT, which has not performed very well, where the earnings kicker has largely been absent. But valuations for the large cap seems to be in place, and that seems over the historical trend that foreign investors do whenever they come into this aspect. So if you can talk us through, where do you see the earnings kicker to first start off with, and do you expect pockets like IT to now start performing well with the rate cuts amongst other reasons from the Fed aspect that they could benefit from?
So if you put in context, the previous rally in the Indian markets up to September was very capex-led. So you had defense, you had railways, you had the public sectors that was delivering the returns. But from there, the narrative has changed. From this budget, where the government has clearly made its sign is pivoting towards consumption by giving more money into the hands of people to spend, then you followed up with the good monsoon. We've got rate cuts coming in, and now you have the GST bonanza. So the clear-cut message here from the government here is we're moving away from capex to consumption. So consumption is the area where you need to allocate more capital. You can play consumption, be it financiers, be it real estate, be it consumer discretionary like automobiles, or the platform companies like Eternal, Nykaa. So all this myriad opportunities exist in the consumption space. So the clear view is from here, then I would like to make a call as well that the next two budgets also going to be consumption heavy, because we have to lift consumption for capacity utilization to reach a point where the private capex will move up. So consumption is the theme that we have to play from here on, at least for the next 18 months, and there are pockets of opportunity, large pockets of opportunity that still are undiscovered by the market. Now, with respect to your second question on IT, so IT is now like a cash shield or a dividend yield companies. The growth is single digit now, and valuations are reflecting that low digit growth. So as of now, other than the rupee kicker that you're getting because of the depreciation, there are no real underlying reasons to buy technology, except that it brings stability to your portfolio. But mind you, India is a growth market. People are chasing growth, and people would want to trade where you can get faster alpha generation. So as of now, IT as a pack does not fit that bill.
Okay. So that's with regards to individual sectors. My last question, Harendra, coming to you is with regards to the recent government tariffs and incentive programs. When you talk about for electronics manufacturers, if you have to compare them to China and Vietnam, where do you see India standing? Because the electronics and semiconductor target is pretty strong for India. In fact, you have the Semicon, which is started today as well in Delhi. So a lot of deal announcements that would be coming in there. So one aspect on that. And secondly, the nuclear pivot that you're looking at as well, because the conference does focus on that angle. What would you have to add?
Yeah, so very pertinent questions that you raised. I think India has to select the sectors where it has the right to win for the next decade or for the next 30 years, where we have our end goal post that we are targeting. And within that, clearly we've had early wins on the EMS space. Well, markets would like to believe that we've played that rally. I think the runway is significantly large. The way Apple has dealt with this tariff problems and managed to resolve that issue means that India will be a very large player on the EMS space. And of course, the follow-on legs is going to be on the semiconductor manufacturing as well. The people are waiting for the next leg of policy push on this front. I think India will open up doors for more tech transfers from China and other countries so that it can facilitate manufacturing and investment within to India. So that's an area of space that you have to look for more opportunities. We have a Dixon, Amber, Keynes and several other companies. I think they will have more legs to growth from here on. So yes, that's a space where India has a right to win and will keep having more legs from here on. The next big emerging opportunity is, of course, India's nuclear pivot. Now, what people misread here is, of course, that for India's Viksit Bharat campaign, we have to be a $30 trillion economy. Energy is going to be the bedrock of our growth. Now, with respect to traditional coal and our wind and solar energy, only so much can be achieved. So the end outcome is around 2,000 gigawatts, which is an obnoxiously large number. The intermediate number that the government has put is 100 gigawatts by 2030. That itself is large. So the point here is that India cannot be a developed nation without a nuclear pivot. And within that, the small module reactors is the largest opportunity. And mind you, this is not a thing that is only working in India. It's happening in the US, with Meta announcing a $16 billion investment with China, because this powers data centers and all new gen companies. So India's power sector is going to be transformed. You will see a lot of policy announcement with respect to nuclear, easing up of the civil nuclear liability bill, and the private sector is also very enthused. So if you ask us, the next capex is coming in the power specs led by nuclear.
Got that, Mr. Kumar. Mr. Kumar, we leave it at that. Thanks so much for joining in, giving us time to NDTV Profit, and we look forward to our next conversation. But in an important update from SEBI, the regulator has brought an intraday net position limit of 5,000 crores in index option and gross position limit of roughly about 10,000 crores separately for long and short side. To understand more about this, I'm now being joined by my colleague Charu Singh to give us more perspective on this. Charu.
Hi, so Securities and Exchange Board of India, after seeing a lot of breaches in the end of the day position limits for option trading, has come out with an intraday limit set finally. Now, this is something that had been consulted on before, but the suggestion was dropped after strong industry suggestions against it. So what has happened? Earlier, there used to be an end of the day position limit of about ₹1,500 crore. However, now there is going to be a net limit of 5,000 crore rupees and a gross limit of 10,000 crore rupees, both on long and short separately. So what this essentially means is that if someone is bidding about taking a position of about ₹10,000 crore on the long side, they cannot take a position of over 5,000 crore rupees on the short side, because the net, that is the difference between the two, has to be up to 5,000 crore rupees only. It cannot be more than that. But now, since it has been increased in a way, it is not going to be capped at this end of the day limit of 1,500 crore rupees. There could be more liquidity for the exchanges. So this comes as a positive news for both the Bombay Stock Exchange as well as the National Stock Exchange.
Thank you, Charu, for that. So positive move in terms of where BSE goes. Let me also get in Prashant Apse, Senior VP Analyst at Mehta Equities. Prashant, welcome to the show and a pleasure to speak to you as always. Two of the things that Charu is mentioning right now as well in terms of what SEBI has indicated when you talk about the options trading aspect. What would your view be? Because it seems it will be a positive, specifically when it comes to BSE and NSE. What would you advise investors to do?
I think very positive move by the SEBI to create a lot of liquidity, and obviously for BSE and NSE it's a business opportunity. We all know that the option market is the largest in the world, which is into India. So I think we are going to develop a lot of controls and checks for controlling all the positions they are holding in the options, not to convert any kind of risk for the investors. So obviously the increment in the limit of the option is creating a lot of liquidity for the investors and business for BSE. So obviously BSE is the only stock which is listed, so very positive for the stock. Technically the stock also looks good at this point of time.
Okay, so technically BSE looks positive as well, and it could be one of the beneficiaries. But moving on to another NDTV Profit exclusive, sources tell us that market regulator SEBI may launch a platform to regulate the pre-listing trades in IPO-bound companies. Charu is still with us to tell us more. Charu, this is something which is much awaited, and I think nitty-gritties is something that SEBI is working on. What are the details that you're picking up so far?
So there have always been conversations about trying to regulate the unlisted time period that is before the listing of a company, the 3-day window between the stock allotment and the listing day. And this is also something that is very crucial for the regulator, because they'll have to tweak a lot of regulations to bring this in. So what the regulator hinted at while speaking at a FICCI event on 21 August was that they are going to be bringing a pilot platform that is going to give some disclosures and allow investors to invest in the IPO related stocks just before the listing day. So now NDTV Profit has learned from several sources that this could be done by increasing the small pre-IPO 15-minute session window and extending it in a way that the 3-day window between the stock allotment and the listing day is covered in it. So this pre-IPO session could be extended in terms of how long it would be, so that it comes under the scrutiny of SEBI in a much easier manner. Apart from this, this also comes out of concern for the issues related to price discovery. So SEBI is trying to make the process more streamlined and also give out more disclosures than the investors currently have while dealing with the unlisted space. And this is also not the first time that SEBI is thinking about this, because just before her retirement, just before her tenure was over, Madhvi Puri Booch was also talking about these developments at events where she said that they are thinking about a when listed mechanism where they can bring the when unlisted space right before the listing day into SEBI scrutiny.
Well, thank you for that, Charul, getting us perspective across a bunch of news flows. But we spoke about the sugar stocks that's largely positive in trade today. Now, government has allowed sugar mills as well as distilleries to make ethanol without any restriction. Now, Vansh joining in to give us all the details.
Well, yes, so sugar stocks like Dwarkesh, Renuka are up 10 to 12% in trade today. Now the stocks are still down 40 to 50% from their highs back in 2021 and 2022. Now the Dwarkesh, if I talk about some specific counters like Dwarkesh Sugar, it made a buyback at rupees 105 rupees back in the year 2024. Now even after today's gain, the stocks are down about 55% from their buyback price. Now let's moving on, let's understand the developments for this particular counters. Now, the government has allowed sugar mills and distilleries to make ethanol without any restrictions in ethanol supply year 2025-2026. Now, the ethanol supply year runs from November 2025 to October 2026. Now, if I talk about the details, now the sugar mills and distilleries are now allowed to reduce the sugar production. This decision may help the sugar mills to reduce the sugar production and focus on the ethanol production, which is also a higher margin business for these particular counters. And if I talk about the further details, they are allowed to feedstock to produce ethanol. Now, feedstock is basically the raw material which is used for producing ethanol. Now, if I talk about some of the raw materials that are used in the ethanol production, if we can have the pricing of these raw materials on the screen, please. We can clearly see these raw materials which are used to produce ethanol. We have sugarcane juice ranging from 65 rupees a litre to maize ranging for 72 rupees a litre. Now moving on with this, let's also understand the previous developments which took place for these particular counters as well. In ethanol supply year 2024-25, the government permitted the diversion of 40 lakh tons of sugar for ethanol production. Now the oil marketing companies have sell ethanol blended with petrol during the ongoing ethanol supply year 2024-25. And they have achieved ethanol blending of 19.5% as of 31st July 2025. So clearly a series of positive developments is what we are looking at this entire pack for the sugar.
Well, thank you so much, Vansh, for giving us that perspective. But what will be the extent of the benefit of the government's move on these sugar companies? We actually spoke to Atul Chaturvedi, the executive chairman at Sri Renuka Sugar, about this. Here's what he had to say.
Circular which has come from the government actually now reflects that they have a reasonable amount of confidence that the next year's crop is going to be pretty good. And the rain gods have been kind to India, and there's no reason why the crop should not rebound big time. In fact, ISMA, our national body, has also come up with a number which is much higher than what it was last year. So that gives us the confidence that the next year, the diversion of sugar towards ethanol is going to be much higher.
Prashant, let me come to you on this, because we've seen an initial move on a lot of these sugar counters today, but this could be a long-term opportunity at least for this year, and if so, it could be one for next year as well. Any particular picks that you have within the sugar space?
I think it's the right time for a government to take this decision when there was a long underperformance in the sector. All the stocks were down by 30-40%. Again, they are in line with their production ethanol blending target of 20%. So they need huge volumes right now for the blending of petrol for the OMCs. In the pack, again, I think still Balrampur Chini looks very good for me in the pack as it's the leader in the market cap with almost 11,000 crores. In terms of valuation, in terms of ratios, in terms of ROCs, again, I think Balrampur Chini can still look good at this point of time and give a decent return for next 1 or 2 years.
Okay, so that's with regards to where sugar companies go, an interesting sector to watch out for, in fact, to understand which companies have, capacities in terms of ethanol and what their utilization stands at. Please join India Market Close because we will be giving you a detailed analysis on the same as well. But moving on, Morgan Stanley has also released a note on Reliance Industries and it has maintained an overweight rating, hiked the target price, and back of which the stock is seeing gains of nearly 2%. Somit is giving us the rationale and what Morgan Stanley has to say. Somit, over to you.
Morgan Stanley has come out with this bullish note where they have maintained their overweight rating and have hiked the target price by around 100 odd rupees to 1,701 rupees now for Reliance Industries. Now it says that Reliance Industries is the largest beneficiary of China's anti-involution focus across energy and solar supply chains. They also say that Reliance Industries' self-anti-involution in consumer retail and telecom has also started to bear fruit. They're saying that all these factors add around $20 billion to Reliance Industries' net asset value and increases the FY28 EPS by around 17%. For the near term, they are seeing triggers for Reliance Industries on the back of better fuel margins, lower ethane costs for petrochemical, and recovery in the revenue for retail segment going forward. Now, they're also saying that the stock is at this moment factoring in risk from the shift in Russian crude to other sources of crude, and which could impact the EPS by around 3 to 5%. But they're also saying that the glut in the oil market could cushion this impact going forward. And lastly, they also believe that the valuations at this moment is implying near zero value to the new energy business of Reliance Industries and the AI investments that the company has been doing, and also the valuations are limiting low upside or limited upside from the retail growth going forward. So based on all these factors, Morgan Stanley has come out with this bullish note and has also increased the target price on Reliance Industries by around 100 odd rupees.
Okay, so that's with regards to Reliance. Thank you so much for that, Prashant. Your view on Reliance Industries, what would you advise investors to do at current levels? Morgan Stanley does have a target price of nearly 1,700 right now.
Post this AGM, I turned to be very negative as the investment is more going towards the AI investment, as well as the timeline for the Jio IPO is not so clear again. So again, the valuation on the SOTP, if you see how Jio platform is giving, it has been reduced from last 1 year. So overall, I have a very neutral to positive outlook on the stock. On a technical charts, again, I think the stock can deliver up to 1420 as a technical target, but a very short period of time.
Got the view, Prashant. But a slew of stocks in focus today. Anushi joins us with the list that she's focusing on. Anushi.
Right, so I'll start off with something like a Puravankara first. Now that's a stock in focus in the real estate space now that we are looking at, and this is on the big back of a redevelopment project that they have secured, which is about worth 2,700 crore or so, which takes, which also marks the second project that the company has had in South Mumbai as well. Now this is a Malabar Hill project that we are looking at, which brings the company's total gross development value in the Mumbai market to 10,500 crore itself. If you are looking at the overall size of portfolio over here, it's about 4.25 million square feet that we are looking at. Other than that, United Breweries is in focus as well. This is after they've commenced production of its flagship brand, that's Kingfisher, in the Eloise brewery in Andhra Pradesh. Now this has a monthly capacity of up to 4.5 lakh units. Cases of beer is what we are seeing, and again it strengthens its footprint in the said market that we've discussed. Apart from that, Paisala Digital is also in focus, and this is on the back of its fundraising plans which have been to be considered, and this is by issuing NCDs on private placement basis. Board meet is set on September 4 to discuss on the same. If you're talking on Indraprasth Gas Limited, now they've signed a JV with Rajasthan Rajya Vidyut Utpadan, and this is for setting up a solar power project in Rajasthan. JV will have equity participation in the ratio of 74 to 24% respectively as well. Last one on the radar is NTPC Green Energy, and this is after they've announced that they've commenced commercial operation of its 25 megawatt of solar project in Bhuj. This 25 megawatt size that we are looking is of the total size of 150 megawatt that we are seeing. Considering that this addition in place, now the total installed capacity that stands roughly 7,272 megawatts for the overall company that we are looking at. So these are a couple of stocks in focus.
Well, thank you for getting us those stocks, Anushi. Prashant, let me ask you specifically on Puravankara, because it's a big order that you do with the gross development value in Malabar. Any specific view that you have on this one?
I think with respect to industry, again, the redevelopment industry is very strong in the Mumbai region. I think almost 30,000 homes are going into redevelopment, and then there's a big opportunity for Puravankara as well as a lot of other real estate companies. But again, on the valuation terms, I think the stock still looks very expensive, even on the valuations of price to book valuation or the EBITDA by sales. But again, on the technical terms, still the stock is under pressure. I think any close above 300 can be a great opportunity for a big rally going forward. So for time being, it's a neutral to positive outlook.
Okay, so that's with regards to where a few of the newsmakers go as well. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Tech has changed. So should your tech show.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI?
investment?
Welcome back. You're watching NDTV Profit. Now, Prime Minister Narendra Modi at Semicon India 2025 said that the global semiconductor market is surging towards hitting the $1 trillion mark, with India playing an important growing role. Let's quickly listen in.
ये चिप भले छोटी सी है, लेकिन इसमें दुनिया की प्रगति को बड़ी गति देने की ताकत है। और इसलिए ही आज सेमीकंडक्टर्स का ग्लोबल मार्केट $600 बिलियन तक पहुंच रहा है और अगले कुछ साल में ये $1 ट्रिलियन को भी पार कर जाएगा। और मुझे विश्वास है भारत जिस तेजी से सेमीकंडक्टर सेक्टर में आगे बढ़ रहा है, इस $1 ट्रिलियन मार्केट शेयर में एक अहम हिस्सा भारत का रहने वाला है। कुल मिलाकर सेमीकंडक्टर के 10 प्रोजेक्ट्स में $18 बिलियन यानी 1.5 लाख करोड़ रुपए से अधिक का इन्वेस्टमेंट हो रहा है।
Well, let's also focus on some key stocks that are buzzing today on the back of business updates. My colleague Vansh is back with us, giving us some more perspective and more stocks that are on his radar. Vansh.
Well, yes, a strong business update from both the counters, NMDC and Coal India. So let me start off with NMDC. Now the company has came up with a business update of their August monthly production. Now if I talk about the details, the Chhattisgarh production has been up by 11% on a year-on-year basis. Karnataka production has been up by 7.4% on a year-on-year basis. And the total monthly production has increased by 9.7% to 3.37 metric tons. Now if I talk about the monthly sales, the total monthly sales have also gone up by 7.9% at 3.39 metric tons. So clearly a strong business update from this particular counter. Second on my list is Coal India. Now again the company has reported their monthly production, and the monthly production has been increased by 9.4% on a year-on-year basis to 50.4 million tons. Now mind you, this is despite being the monsoon, the company has come up with a strong business update, and this is what we are looking at for the Coal India as well. If I talk about the monthly data, the total monthly sales have grown by 7.6% to 56 million tons, and the company's arm, that are Northern Coalfields and the Southern East Coalfields, have grown their production by 33% at 29% in terms of production as well. So clearly these are the developments that we are looking at for these particular counters as well.
Thank you so much, Vansh, for getting us the details. Before we head across to our guests, let's quickly listen into an exclusive chat my colleague Rishabh is having with Railways Minister Ashwini Vaishnav. Let's listen in.
Very walk and talk. Where are we going? Really? You want to do like that? Yeah, he's right here. Will be a nice format, sir. With you taking a show around. Chalo. Okay. Rolling? Yeah. Right. Well, I'm joined by, of course, Union Minister for Electronics and IT, Ashwini Vaishnav. Sir, what are you seeing at Semicon India 2025? First look, you're walking around. What is exciting about this one?
See, one good thing is world's confidence on India's semiconductor ecosystem is so clearly visible. This time we have almost 500 global leaders and executives coming from more than 40 or more than 45 countries. And we have practically every large ecosystem player present here. All the equipment manufacturers are here. ASML also is present this time. And the momentum which has got generated in the last 4 years is quite visible.
So, digital diamonds is what the Prime Minister said.
How are you? Good to see you again.
Yeah. Digital diamonds is what the Prime Minister said. So, what are some bold innovations that you're looking forward to this time around?
See, this is the time when we are setting the foundation of this industry. And this is a foundational industry, as Honorable PM said. Like steel is foundational for entire infrastructure. For digital infrastructure, semiconductors are foundational. So that's why our first focus is to cover all the major sectors which we have covered: automotive, telecom, power electronics, defense, strategic, consumer electronics. The ecosystem, which is like more than 500 chemicals and 50 odd gases, they are all here now. Today we had Merck getting into a joint venture with one of the Indian partners. So those things are there. Lam Research investing more than $1 billion. Celesta Capital has collected almost $1 billion kind of fund. And we have the first Made in India chip coming from this very place, CG Semi.
So the chip is here. Maybe I just quickly go through the process. It's here. Can you show the chip?
The steps that India has taken in the semiconductor space in the last 4 years are clearly visible. That's the word coming in from Ashwini Vaishnav. But moving on, let me just take a quick view from Prashant on Coal India as well as NMDC. Both the companies have reported a strong set of updates in terms of the second quarter this month. Prashant, what would your view be on both these counters?
On the valuation front, again, Coal India looks very good for me at this point of time. Despite the monsoon season, the numbers of business update have been really well. Almost like 7 to 9% growth in the volume is creating a lot of sense of getting a Q2 would be a great number for these two companies. If you want to pick one, I think Coal India can be one on the technical terms, which can deliver you a decent number for short term.
Got the view, Prashant. Vinay, let me come to you as well, and welcome to the show. Thank you for joining in. Your view on either of these stocks, because they have been buzzing today, as well as if you can give us some perspective on the sugar stocks as well. Do you see some more rally in some of them which are almost up 10% right now?
Yeah, can you please repeat the two stocks we were talking about?
Coal India and NMDC, Vinay.
Yeah, so basically there has been some strength in the PSU stocks for last two trading session and Coal India, and we have seen some power stocks, oil stocks like ONGC Oil India, all have been doing well for last two trading session and sentiment is improving. Coal India has actually faced resistance today around its 200 days EMA around 384. So once we see a sustainable level above that, then we can expect it to do well. So Coal India is looking good out of it, and NMDC also overall this metal pack has been performing well. And NMDC is one of the outperformers in the metal space, and it looks quite strong on the chart. So it is headed higher. It looks like that, and 72 is the current level. It may extend its rally towards the 75 in a short term. It looks like that, and today's low becomes the very strong support around 70. So 70 should be the stop loss, and 75 should be the immediate resistance for the stock. So both stocks are looking good, but NMDC is looking better on the charts. As far as sugar stocks are concerned, they have seen gap up opening today. Few days back, there was a gap up opening in paper stocks, and after that, they got fizzled out. So, because of the news they have come up, definitely we have to wait for that because in the coming days, we may see a running correction also. So, on the basis of news only, the gap up opening is there, and most of the stocks are up by more than 5%. So, better to wait for as of now, let it cool down a bit, and then once we see some consolidation, then we can capture some trading opportunity. But I would rather ignore trading right now after gap up opening in the sugar stocks.
Got that, Vinay. There was an interesting story that, we put out earlier via flashes, and we just wanted to address it as well. And that was regarding Tesla. Now, we've seen that currently it's been a tepid start for this automaker as well, Hiral, and the bookings are just about 600 cars that they've gotten till now. Now, the story goes that, it's much below what Tesla was expecting in terms of their overall bookings, at least for now, and well short of their own expectations. To say the least, but they are looking to ship between 350 to almost 500 cars. It does not dampen the mood essentially for the EV maker, but it's still a surprising number to say the least.
Absolutely, I think Make in India is the key over here because a lot of your Indian counterparts who are getting into a similar range, but probably with a better product and a better look as well. I think that's the word on the street right now, and that's one of the reasons why you're seeing this kind of a tepid response when it comes to a Tesla. But staying with the auto Ang pack, we also spoke to the management of Sandhar Technologies. Interesting stock to watch out for. Let's quickly listen into what he had to say because the valuations are absolutely interesting.
In terms of new expansion, we had invested in an acquisition which was done at the beginning of the year of Sundaram Clayton aluminium business. And that has now been integrated well into the company. So the capital expenditure, I think at this point of time is more generic and organic and establishing what we've already put in place. Therefore, we don't have large plans as we go into the future for capital expansion. Our target and our main job is to consolidate and make the capital investments that have been made profitable in this year and in the future years.
Right, so that's Sandhar Technologies. In fact, another stock that is in focus is Tata Motors, and this is on the back of the glitch that we are seeing in JLR's IT system. There has been some bit of disruption, Puneet, that has happened as well since Sunday afternoon. What have you picked up? And I think Danish will be joining us as well to take us through.
Well, it's been a torrid time to say the least for JLR in the global markets because we've seen that impact on across the tariff tantrum amongst other reasons that have impacted. Now JLR had some impact essentially at the start of the quarter in April. They did mention that they had stopped some exports from their factories in UK and Europe to USA. Now it is facing a major IT disruption which is impacting all its global markets as well since Sunday afternoon, and the company systems have actually been down, preventing the registrations of these new bookings as well. So that's one of the key stories that we've been picking up. Let's get in my colleague Danish to give us more perspective on this.
JLR is facing certain IT challenges globally. As per JLR sources, this issue initially cropped up on Saturday afternoon, but Sunday this became a major issue. And JLR, being a global company, is seeing certain impact on its sales in all the markets across the globe. Especially, it is a dampener for the UK markets because when this issue cropped up on a Sunday, it was a new plate day for the UK. Basically, this day. All the auto companies wait for this day because a lot of sales usually happen on a new plate day, but it has kind of become a dampener on which because the IT issue is there, because of which they're unable to register new cars of fresh book or book fresh cars. Moreover, JLR sources have also informed us that they're working closely with TCS, and TCS and JLR they signed a deal way back in 2023, and TCS is mandated to look at the entire IT infrastructure of JLR. But if you look at from the JLR perspective, there could be initial impact on its sales for 2 to 3 days, and they are both working together to solve this issue as soon as possible. Moreover, another person familiar with the matter told NDTV Profit that there is a SSO issue. Basically, there's an internal software of JLR which takes care of all the dealerships, and whenever they have to make a new booking or put out a new registration, that is the software that they use. But none of the employees are unable to log in into that, because of which we are seeing that JLR is unable to book a fresh cars from the past 2-3 days.
Well, thank you, Danish, for getting us that perspective. Vinay, let me come to you. A bunch of stocks, Sandhar Tech was one of them where the fundamental valuation seems to be in place, but anything on the technical side, because we've seen the last 1 year also impacted. Any view also on Tata Motors? It's a very followed stock to say the least, and your view on either of the stocks?
The technology is facing resistance at its 50 and 200 days EMA. Both moving averages are actually coinciding around 467, 470 odd level. So we can say that there is strong resistance around 470. Once we see close above this 470, then we can expect some participation coming in the Sandhar technology. So overall, I see underperformance from this stock, waiting for breakout to come. Then only one can take a long bet on that. So as of now, it is still, you can say, one of the underperformer in a consolidation zone. 470 is a trigger level above which we can see a good participation coming back into the stock. Talking about Tata Motor, yes, there has been some improvement on the charts. It has underperformed most of the commercial vehicle space and the passenger vehicle space. So auto sector has done exceptionally well, but Tata Motors has not participated that much, and it is below the long-term moving averages right now. But short-term chart looks like that there is a strong support at 668. So with that stop loss, one can continue to hold on to the long position. This is purely a technical view. Our institution team is having a reduced rating on this, but technically for the short term, it is looking good. And I think it is headed for the next target of 718, which is the next resistance for the counter. So yes, there is some improvement on the charts, and 668 should be the stop loss in trading long positions.
Got the view, Vinay. Vinay as well as Prashant, we'll let you go on that note. Thanks so much for joining in, getting us perspective across a bunch of stocks as well as themes. We look forward to our next conversation. But we're now being joined by Kunal Shah, who's the head commodity research at Nirmal Bang. And we want to just, mention about gold, because that has, had a stellar rally to say the least. Kunal, if you can give us some perspective first, because, we have seen a new high made on gold today, $3,500 now being crossed. We have the annual of potential interest rate cuts by the Fed in the month of September. What is your view on the stock? What is your view essentially on gold? Because do you think there could be a further rally if we could see a Fed rate cut, or do you expect that the momentum would continue to be slightly subdued, given that we could have a rate cut now in this particular time frame?
Okay, so I think gold market is discounting the rate cut, number one. Number two, the geopolitical uncertainty across the globe is really picking up, because in spite of the fact that we've seen Mr. Donald Trump and Mr. Putin having a meeting, but after that there was a constant attack by Ukraine to Russia, and Russia also attacked Ukraine. So nothing of ceasefire is happening. So the geopolitical landscape is not improving at all, mainly Russia and Ukraine. And going forward, the way the tariff is causing uncertainty across the world. So where Mr. Trump is imposed a lot of tariff, and which is likely to lead to more inflation at the time when the central banks are likely to cut down their interest rate. So it is a perfect storm for commodities like gold and silver, which tend to rise at the time of uncertainty, which tend to rise with the expectation of rising inflation, which tends to rise when the dollar supremacy is being questioned and all the central banks. So none of the central banks have bought US bonds in last, I don't remember, last 3 years, 4 years. So it is the dollar's authority have been questioned by global central banks, and that remains the key reason behind this rally. And we believe this rally has more wings to fly, and it can go up further. So buy at every dip. That is the view we are holding for the upside target of $3,700 when it comes to gold. So we continue to remain quite optimistic about the outlook of gold.
So optimistic, Kunal, in terms of gold. Good afternoon, Hiral on this side. Would you prefer silver to gold right now? Because it seems the rally in terms of silver is also unstoppable. Secondly, you have a lot of other central banks who have started looking at silver as a reserve as compared to gold. Is that also giving you some signs where the upside in terms of silver could be higher versus gold in the same time frame?
Okay, so silver is looking more promising as far as the fundamentals are concerned as compared to gold. A couple of things happening in the silver market which I have not seen. So like in a very small quantity, we've seen Saudi Arabia buying silver, Russia indicating to buy silver in their reserve, and US categorizing silver as a critical mineral. So looking at the way the data center demand is soaring, US wants silver to be on their critical mineral list, and they want to procure as much as they can going forward, because silver is the only precious metal apart from platinum where we have seen a structural deficit. So the production over last 10 years have remained steady. In fact, now there are talks that a couple of big mines from Mexico are likely to get exhausted from the silver ores. So that is also creating a lot of uncertainty regarding the supply side. And I believe that going forward, the way things stand out, supply side crunch, stronger demand will lead to a further spike in silver prices. Silver, which have already rallied from 110,000 to 125,000 in a matter of 7 days, I believe that any cool off till 120,000 would be again great buying opportunity. And by the end of the December, you may see silver at 135,000 on MCX, and on COMEX $44 to $45 looks very, very likely.
Got it. So both the metals to be closely watched out for. Thank you, Kunal, for joining us on the show. I know it has been a short chat, but completely running out of time. The other important aspect that we need to discuss right now is the orange alert that IMD has alerted for Delhi, Gurugram as well. In fact, the Yamuna has crossed the danger mark. There's been major traffic jam as well across Delhi, and Noida is bracing for flood risks. So there is an absolute monsoon mayhem in the northern part of the country. In fact, it's Punjab's worst floods in nearly 4 decades. To discuss further on this, we have Mahesh Palawat, VP Meteorology and Climate Change at Skymet Weather Services. Mr. Palawat, welcome to the show, and pleasure to speak to you as always at NDTV Profit. A complete mayhem when it comes to the Gurugram region right now. What are the indications looking like from here on?
Already Delhi has recorded 400.1 millimeter rain in August against the normal of 233 millimeter. That is 72% surplus. The last day of August also witnessed a heavy downpour over many parts of Delhi and NCR. And now we think that rain activities will be intense over some parts of Delhi for another 24 hours. Thereafter, from tomorrow or day after tomorrow, weather will start improving. There may be intermittent light showers, but heavy downpour is not anticipated for at least next 4 to 5 days. Yeah.
Okay. And what would you have to say in terms of the caution that the people in the northern region need to take at this hour? Because right now we're already talking about an orange alert. Any further developments expected on that front?
This orange alert means there may be moderate showers with 1 or 2 intense spells of short duration, and red alert is very dangerous. So we think that some parts of Delhi and NCR may witness some intense showers for short duration. There may be waterlogging and traffic jam over several parts of Delhi, including Gurugram, Ghaziabad, Noida, Faridabad. I think that people should avoid the congested routes and take the help of Google Maps. And from tomorrow onward, because of cyclonic circulation and western disturbance, they will be getting weakened. And another low pressure area is developing over Bay of Bengal. So its impact will be around, say, 7th or 8th of September. Until then, from tomorrow, there will be some relief in rain activities over most parts of North India, including Punjab, Haryana, Delhi, western parts of Uttar Pradesh. And there may be intermittent showers, but it will not be very, intense. So traffic jam is ruled out for next 4 to 5 days, at least 3 to 4 days.
Got that, Mr. Palawat. Mr. Palawat, we'll thank you for that. And on that note, and we look forward to our next conversation. But let's quickly, before we wrap the show, let's quickly look at how the markets are doing, because we started off with a sustained bullish momentum, to say the least, today morning, and that seems to be one of the key aspects. Let's look at the Nifty very quickly, as well as the mid cap index. Seen some kind of pullback from those levels of the highs of the Nifty. We are now still just a tad below the 24,700, but a close about 24,600 will be a key positive as well. But the other news that's been grappling the nation has been the Maratha reservation protest, and it has entered its 5th day today. The court and police have issued strict warnings to protesters, reminding them to follow the guidelines already laid down. Meanwhile, protest leader Manoj Patil says he respects the court's decision, but he will continue his fast. My colleague Anuj Raite joins in with all the details.
It's day 5 of the Maratha reservation protest here in Maharashtra, and a few important updates are coming up. First of all, what is the status of the protest? Yesterday we saw that in the afternoon the High Court took cognizance of the PIL that was filed by AMI Foundation and other petitioners, and taking notice of that, it made it very clear that no more than 5,000 protesters, that too at the limited spot. So they will not be spreading out across the South Mumbai region, as was the case on the first 4 days. No more protesters coming inside the city from other parts of the state. One can already see that around us the number of protesters has gone down massively. In fact, Jarange Patil was also giving a speech a while back where he said that following the court's observation, there are not more than 5,000 protesters that are present here, and most of them are concentrated inside Azad Maidan. What you see on your screen right now is the CS Street Chalk, and this entire area where traffic is moving quite smoothly was entirely packed, right, and blocked for traffic. There was not a single vehicular movement that was possible here yesterday. But as you can clearly see, the police deployment is in plenty. It's not like the protesters aren't here. The protesters are also here, but they seem to be coordinating with the authorities here quite well, not really providing any sort of hurdle to the local commuters. Now, on the administrative perspective, also important to understand that the government is still holding meetings, and we will be expecting an official letter written or given to the protesters by the Advocate General of Maharashtra by the end of today. In just a few hours, in just 2 hours from now onwards, the second hearing in this entire matter will take place in Bombay High Court, and that will determine the future course of this protest.
So that's the Maratha reservation protest, which is entering the 5th day and causing major mayhem in the city of Mumbai. Not so much in the north, but majorly in the south of Mumbai as well. But completely out of time. But that is a wrap on this edition of Profit Buzzers from Puneet, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit, and you will have the Small Cap Buzzers show shortly.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज़ हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की ज़रूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Tech has changed. So should your tech show.
My birthday gift to पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में। फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें। Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations?
Hello and welcome to NDTV Profit. You're watching Small Cap Buzzers. I'm your host Anushri Vakharia and with me is Somit Sarkar. You know what's happening with currently the markets. Let's start off with that. Now, if you are looking at the benchmark indices, have lost some bit of that steam that we've seen at the early start of the day. Now, currently up over 0.3% in trade. In fact, if you are looking at Nifty Bank right now, if Nifty Bank is in red, is what we are looking at, down about 0.2% in trade. Now, this is as far as the benchmark indices go. But let's take a look at the sectoral heat map as well. In terms of sectors, it's a mixed picture that we are looking at. Nifty Energy being at the top currently. Now, if you're looking at Nifty Energy, that's up over 1.33% in trade today, followed by Nifty Media. It's also defense back, which is gaining traction again. Even yesterday in trade, we were talking about how, it has picked up. Currently up over 1.5% is what we are seeing. But what's not doing so well is something like a Nifty Bank that we've spoken about. But Nifty Pharma also flat in trade is what we are looking at. But apart from that, let's take a check at what's happening with the small cap and the mid cap space. In terms of where the Nifty mid cap 150 index goes, we are looking at gains of over 0.4% in terms of mid cap 150, while for small cap 250, we are seeing an uptick of around 0.8%. So that is outpacing, where the broader market, whether the benchmark indices are concerned. In fact, let's take a look at the BSE 500 to take just account of all the stock specific action that is building up. In terms of BSE 500, if you are looking at right at the top, we have the sugar companies in focus. Sri Renuka up over 14% in trade currently. Apart from that, ITI is also clocking in smart gains, about 8% up. RVNL, IRCON, some of these railway counters also buzzing. 6% of an upside is what we are seeing. But what's not doing so well is 5-Star Business Finance, down about 4% in trade today. Godfrey Phillips also, we are looking at a downtick for a second consecutive session, down about 4%. And other stocks which are under pressure includes the likes of UPL and Max Health as well. Now, this is in terms of the overall, action that we are building up in terms of where the broader market and the benchmark indices are concerned. But with that, let's welcome in our management today, and we have Shikhar Agarwal, Joint Managing Director at BLS International, joining us. Hello, welcome to the show, Mr. Agarwal. First of all, I want to start off with the big order win in focus, which is there. 2,000 crore is the kind of size that we are looking at. Just give us a brief outlook in terms of this order win that we are seeing for the company.
Yes. So this is a landmark win for BLS International. We have just won a 2,000 crore plus tender from UIDI, which is setting up of around 300 Aadhaar centers across India, where we will be employing around 3,000 people. So in this contract, this is a 6-year contract. We will be getting an EBITDA margin of around 20%. And I think it's a landmark contract because exclusive centers are being set up by UIDI, which will be run by us and set up by us.
So what is the kind of revenue visibility one should see from this contract?
So see, revenue is the revenue that we are targeting is around 2,000 crore. We are targeting to do around 1.52 crore applications every year, and 2,000 crore. The scope can be expanded a bit as in when volumes increase. Last year in India, there were around 17 crore Aadhaar transactions that we know of that happened. So I feel this is an exclusive setup that is being run up now. So for now, we are going to set up 300 centers in 1 year time, and then as in when the scaling up happens, we will be increasing the application volume.
Right, sir. But Aadhaar services are already available at various banks, post offices and various other centers as well. So what is it that will drive footfalls to your Seva Kendras?
So this is like, the landmark project of UIDI. These are exclusive centers being run by Aadhaar Seva Kendras in different districts across the country. So definitely, last year itself, our target, this is a minimum target that we know we will achieve 1.52 crore applications every year. So minimum revenue that will be coming in will be of 2,000 crore that can be expanded further.
Right. Just on that, also want to understand the margin profile. You spoke about 20% or odd, so it's the kind of profile that we should be looking at. But where does that, make the overall blended margins, if you have to get a sense on that, considering because in the first quarter, we've seen strong margins coming for the visa business. So just want to understand the overall picture in terms of margins. How is that going to shape up in FY26 and even after the ramp up in 27, 28 also?
See, if you see the numbers that you delivered in first quarter, we achieved 711 crores of revenue, which was a 44% growth compared to similar quarter last year. And we did a 204 crores of EBITDA, which was around a 50% growth compared to similar quarter last year. So definitely, the margins, if you see, we have achieved around a blended margin of 28-29% now. And if you talk about visa business, we have done a margin of around 35 to 40% now. So I think this business definitely, the margins are EBITDA margins that we are targeting is around 20%. But if you see, this gives us a big presence within India of setting up exclusive centers. So definitely, overall margins will be less blended margins, but we are now doing segment reporting. So the visa business margins will continue to remain strong.
On that, also want to understand the new acquisitions also which have happened over the last course of year and even the ramp up that is expected even in the digital services. We've seen about a 200% or growth. So want to understand what's the kind of contribution that it currently has on the EBITDA right now. And once, there's a ramp up in terms of the new acquisition also, what's the kind of profile that you will have on hand?
See, the e-governance digital business, we also doubled our profitability. If you see last year and this first quarter also, we delivered phenomenal numbers. We acquired a company called Zeromas and also RD Phyllis Loan Solutions last year. The numbers are going to start coming in fully from this year. So definitely right now we're doing 20 to 25% contribution of the overall business coming from the digital business. As we grow as a company, we expect both big growth coming in from both the segments. So that is why I feel the revenue contribution from the segments will be similar in the long run.
Right, sir. Also, I wanted to understand from you, sir, with the global market share of around 16 to 17% when it comes to the visa outsourcing business, is there more headroom for growth that is left? And are there any specific tenders in Europe and North America that you're most confident about that you would win?
See, on a consolidated level, if you see the market is growing at 14% CAGR, what we see after COVID, and our global market share is around 16 to 17%. If you see in the first quarter itself, we've achieved 180 crores of profit, which is a 50% increase. This is on top of, on the backing of, some of the new contracts that we have won and deployed, some of the acquisitions that we have done, existing contracts we have ramped up. Now there is a big opportunity of, billions of dollars of contracts that are coming up for renewal in Europe and North American markets where we are a big player, which is qualified for these tenders, and we expect to win certain market share. So that will definitely lead to increase in the market size and our penetration in the market.
Okay. Even in terms of, there have been a couple of new tenders that you were eyeing in the pipeline. Just want to get an overall sense in terms of what's the kind of size that you're seeing across the tenders that you have, and and it's across the new geographies also that you're eyeing out for. So just want to get an presence in terms of international as well. What's the kind of outlook that we have?
See, from last 2-3 years only, if you see, we've added a lot of new clients like Germany, Italy, Poland, Portugal, Slovakia, where we have won certain global tenders, certain regional tenders. So we have been winning tenders. There's an opportunity of upwards of $1.5 billion worth of tenders that are coming up for renewal in the next 1.5 to 2 years, where we are bidding for, and continuously, as you see, we've been adding newer client governments. We also started working with the US government recently in multiple countries with our partners, General Dynamics. So we are working globally with multiple governments, and the opportunity size is quite big that we are targeting.
Right. So, and lastly, just wanted to understand any acquisitions that you have planned for FY26 or you're planning?
Last year itself, we did around 1,200 crore plus acquisition that was done primarily from internal accruals. Now, again, if you see the first quarter numbers, we have again achieved a bank balance of around 1,400 crores. So definitely we have a big M&A team that is constantly looking at different acquisitions, that can be synergized with us. Last year we acquired iData as well as Citizenship Invest. So that has definitely led to an increase in margins, economies of scale, etc. So we are targeting similar kind of opportunities globally, which can lead to our growth as well as big business opportunities in the near future.
Just a follow-up on that, what are the kind of opportunities that you're seeing, considering that even if you look at the cash balance, you have about 1,100 crores or also sitting there. So how do you plan to use this, and what's the kind of expected ramp up once you're eyeing out these new acquisitions which are in place?
So yeah, we have around 1,400 crores of cash even after the acquisition of around 1,200 crore of acquisitions that we did last year. Again, we have generated cash, so we have 1,400 crores of cash on the books as of now. So we are targeting acquisitions, which are in the services domain, outsourcing of government services, exclusive contracts, user pay model, EBITDA margin is good profile, where we can get companies at a healthy multiple, where we can grow, etc. So those are the kind of companies, sizable companies that we are looking at.
Okay, thank you so much, Mr. Agarwal, for joining and sharing that outlook on BLS International. So that's stock which remains in focus. Currently, flat in trade today is what we are looking at. But with that, let's welcome in our guest for today, Sameer Dalal of Natwarlal & Sons Stockbrokers joins us. Hi, Sameer. Welcome to the show once again. Let me start off by, your understanding, or rather your assessment of the commentary that you just heard from the management. What's your view?
Yeah, so we're quite positive on this company from a longer term perspective, but because they work on G2C contracts, right? When you work on a lot of these G2C government to end consumer contracts, you kind of become a single point of contact now, especially in the visa services. If you look at it, once you get the contract, you can quote your price, and as you can clearly see that the margins are quite excellent. They charge. The charges that these companies make for small services add up. The revenue per user is constantly going up. If you look at the last year to this year number, the revenue per user has gone up. So from every angle, they're doing quite well. They're sitting on a decent balance sheet, cash positive. They made some acquisitions which are still to bear fruit. The latest one is a financing. I don't know exactly. I haven't been able to go through the details of that financing company in great detail, but I think, the NBFC space is also something that is scalable for them, given the services business. The opportunities remain large. The stock is trading at about 28 times trailing, 24 times current year, FY26, that is. So it's not expensive. And given their cash spitting out business, 30% ROE, I think there is some decent traction you could have over the next couple of years. Of course, we got to see how they scale up operations. But it's profitable, and I think it's attractive. It's not cheap, but it's neither is it expensive. So if I look at it in the market, it's relative to other players, it's quite attractive. So I would recommend someone can look at this as an investment for the next 2 to 3 years.
Well, sugar stock or sugar pack is something that has been buzzing in trade. Let's get in Vansh with more details on what is the reason behind this rally that we are seeing in the sugar companies.
Well, yes, stocks like Dwarkesh, Renuka are up 12% in trade today, but it's also important to note that the stocks are still down 40 to 50% from their day's high. Now, the Dwarkesh Sugar, if I talk specifically about Dwarkesh Sugar, it made a buyback in 2024 at 105 rupees per share. Now, even after today's gain, the stock is trading at a 55% discount from the buyback price. Now, let's understand the key developments for the entire sugar pack. Now, the government has allowed the sugar mills and the distilleries to make ethanol without any restrictions in ethanol supply year 2025-26. Now, the ethanol supply year ranges from November 2025 to October 2026. Now, this decision is likely to help sugar mills to reduce sugar production and focus more on ethanol, which is likely a higher margin business as well. Now, the sugar mills and distilleries are also allowed to decide the feedstock to produce ethanol. Now, feedstock is a kind of raw material that is used to produce ethanol. If we talk about the feedstocks, we have sugarcane, broken rices, and maize as well. Also, if you look at the prices of these feedstock, we have sugarcane ranging from 65 rupees a litre to maize ranging from 72 rupees a litre. Also, if I talk about some recent developments in 2024-25 about the sugar pack, during the ethanol supply year 2024-25, the government permitted the diversion of 40 lakh tons of sugar for ethanol production as well. Now, the centre has been promoting the blending of ethanol in petrol, and the public sector oil marketing companies have are selling ethanol blended petrol as well. In fact, during the ongoing ethanol supply year 24-25, the OMCs have achieved an average ethanol blending of 19% as of 31st July 2025. So clearly what we are looking at is a series of positive developments for the entire sugar pack.
Right, Vanch. Samir, how are you looking at the sugar space? This new development that the government has done seems to be quite positive for the entire sector, right?
Absolutely, it is a positive. It works in two ways, right? So first is that you can produce more ethanol, which is earning them decent amount of money. But the minute you start diverting some of your sugar towards ethanol, your sugar production reduces. And when sugar production reduces, your oversupply in sugar, the stock that is there goes down, the prices of sugar start moving up. So you start making more money there as well. So it's like a big positive that has been delivered into the sugar space. So sugar stocks should do well. But I hate the space for the simple reason that the government has so much intervention that happens in this space. 6 months ago, if I'm not mistaken, they said, no, you cannot use C+ molasses. You can only use a certain kind of molasses to make sugar, ethanol. And then, the stocks all tumbled. I think all of them across the board, which your speaker was also saying that they're all off 50% from the highs. And then, suddenly now, because there's enough sugar, you again reverse this. So it becomes difficult for an investor, for a long-term investor to take a call saying, because there's so much government intervention and constant government change in regulations to make long-term decisions in this, because you end up getting cut out at the wrong times. So companies where have so much government influence, because this is at the end of the day affecting farmers, affecting consumers in every which way, it kind of leaves a sour taste in the mouth. But if someone were to want to take, we do cover the space, and two stocks that we do like in that space. One is Balrampur Chini, which is of course the market leader in the space. But they are also diversifying into certain other different chemicals, which is going to benefit them over the longer term. So from that perspective, I think Balrampur Chini. The other one is a much smaller company, which is probably not too many people know about, Ugar Sugar. They have 2 manufacturing plants. They have a lot of ethanol capacity, which they put in. So this expansion, this allowance of increasing ethanol will definitely do well for someone like an Ugar Sugar. The stock is again off, I think, 90 rupee high. It had maybe 6-8 months ago, is down at 40. 243, I think, may have gone up today. But that is one stock that could probably do well and move up to 65-70 levels in the next 6 months to a year. So that could be one that one can look at. But yes, it's an overall positive view. But it doesn't take long for the government to come in and say, okay, now because there's sugar prices are moving up, let's stop the ethanol production from certain kind of molasses, which again affects the industry. So rest assured, there will be government intervention constantly in this point.
Certainly, that's quite a detailed outlook that you have in terms of where the sugar stocks are concerned. But let's talk about a couple of other stocks which are on our radar, and that's a couple of Jindal stocks. In fact, we are talking about Jindal Poly Investment, along with that Jindal Poly Films as well. We have Jasmeet joining us with more details on what's happening with these counters.
Well, right, yes, thank you for that. Here are a set of Jindal companies that are operating in the market and the stocks are moving in the trade. Now, let's understand quickly. The first one is Jindal Investment and Finance. The company operates in handling the finances and handling the group companies. Now, if you look at the recent update of the companies a couple of years back, the company, one of the subsidiary companies got converted into an associate, that Jindal Powertech, in 2023 of March. Now, when you look at the market of the company, it stands at 1,000 odd crores, and the stock performance, if you look at, it's down nearly 8% in trade today, while over the last 5 days, the stock is trading up 33%, and over the last 6 months, a stock is a spike of 66%. So that's number one. The second one is Jindal Polyfilms. Well, this operates in flexible packaging material for the films. They also produce various materials used in the film making discs. Now, well, the company's market capital stands at 2,700 odd crores, and when you look at the stock performance, the stock is down 3 odd % today, but over the last 5 days, the stock is trading up 17%, and over the bigger picture, that's over 6 months, the stock is nearly up 39%. Sorry, it's down 39%. The last one is Jindal Photo. While the company's core business is into investment, which they recently moved out of photographic business in the past. Now, well, the company recently got merged into Jindal Polyfilms in 2015 and 16, where they moved out of the business. When you look at the market capital of the company, it stands at 1,200 odd crores. And when you understand the stock performance for this particular company, the stock is down 10% in trade today, while it's nearly up 32% over last 5 days. Now, the recent update for this particular company is in March 2022, company had offered a buyback option from the individuals while they were delisting the company, but then they couldn't classify this into that, and that's why the company is still active. So these are the stocks about Jindal.
Right. Another stock that remains in focus is One MobiKwik. The stock surges around 13% of the stake sale by Abu Dhabi Investment Authority. Seems like a big overhang has gone away from One MobiKwik. Jasmine, is that the reason why the stock has been buzzing?
Absolutely. The stock is up nearly 13% in trade today. This comes after the news where the Abu Dhabi investment sells off the remaining stakes in the company. Now, let's quickly understand a bit detail about the company. What does the company do? The company operates in the financial platform space where there are various products lined up for consumer as well as the merchants. Now, talking about the block deal, the Abu Dhabi investment sold nearly last 2.1% of the stakes in the company. That's for nearly 238 rupees per share. Now, well, who bought this particular investment would be the BofA Securities, which bought nearly 0.60% stakes, while the SSLP bought 0.38% stakes, and the rest was bought by SI Investments. That's nearly 4 lakh odd shares. Now, talking about the Q1 guidance and how did the management perform in the Q1 financial, the total income for the Q1 is nearly up 1% on QOQ basis, while the contribution margin is ranging between 27 odd %. Now, well, as per the operational metric for the Q1, the payment GMV also grew in the Q1, while the net payment margin also rose by 1.4 odd %. The gross margin also is an uptick. So overall operational metric wise, the company has done positive in the Q1. Now, the key things to watch out for would be the losses have been bottoming out, which were happening in Q4. So that's one positive. Secondly, the EBITDA break-even is yet to arrive soon. So while lastly, the guidance, now they have given guidance on the user growth. They believe they want to grow the user bases, and they're looking to add roughly 50 lakh users each quarter. Now, while the company is onboarding 1 to 1.5 lakh merchants each quarter, that's something to watch out for. Well, lastly, they are optimistic about the growth in the payment sector. So this is why the stock is buzzing in trade today.
Samir, coming to you on this counter, any views on One MobiKwik? The stock is down sharply from the IPO price. Currently, it's up 13%, but.
Yeah, so 2 things I'll say. So the first I'll say, when we keep talking about these clean out trades that AIDA has sold out, I actually like companies like AIDA to be invested because these are long-term investors who, want to grow their money and they have a lot of capital to deploy. So I don't look at it as a clean out trade. I look at it as this is more shares that have been let into the market, and some of these investors need not be long-term, and, a rally of 10, 15, 20%, and you might get these shares back in the market, right? So I don't look at it as a pure clean out trade. Second, now let's talk about the business. So, if I were to compare MobiKwik to a Paytm, Paytm is a very similar business model on a much larger scale. And on these platform companies, the way I look at it is scale is everything, because the revenue per tick or per user is very small. So the more you have a distribution reach and the larger that you are, you can reach an operating leverage faster. And once you've gained that scale and size and all of that in place, you can cut some of your ad spends or your other spends that you have to grow your businesses and use that to gain the operating leverage. So MobiKwik being so much smaller in size will have to continue to advertise and bear some of these losses for a longer period of time. At the end of the day, this is still a loss-making company. If I look at it on just purely on gross the market cap to number of customers or number of the sales, it may look cheaper, but because of the size of Paytm, I think Paytm makes a better opportunity from an investment perspective. Yes, the stock is trading at a lower price than the IPO, which you rightfully pointed out. So is Paytm, but because I think the market and investors overvalued what these companies should really be worth.
Right, Sameer.
I'm not
Yeah.
bothered by Paytm, but I just feel that these are still expensive and avoidable at this point.
Okay, well, thanks for that, Sameer, and for joining in. But we also spoke to the management of Foreign Pro Solutions, and this is on the back of multiple order wins which are in picture. We spoke to Ashish Rai, the global CEO, so do listen in to that as well.
Let me first start off with this particular strategic collaboration specifically that you've entered with DFCC Bank. Now, is this largely a transformational deal kind of a project that you're entering in, where you will be supplying your suites of products within the AI space, or is this largely on the cost takeout side? If you can start us off with that aspect.
Hi, Preet. Hi. Thanks, first of all. Thanks for having me. Look, this particular arrangement over the last couple of years, as you've seen, we've been investing quite heavily in terms of building out a mature enterprise AI capability, especially in the banking space. So this is a partnership with the bank to really explore where we can bring intelligence interventions directly on the business process in the bank. And that takes various forms. I mean, one part of it is, of course, the bringing in some AI native applications that we built out with the bank, exploring specific interventions in the processes where what is of most value to the bank, in terms of bringing our enterprise AI suite into the bank, as well as then exploring how do we really take a lot of this into production, which is where the XAI side comes in terms of putting the guardrails in place to allow the bank to take this into production. There is no real cost takeout angle. It's more a question of how do we jointly work together on priorities which are of most value to the bank in terms of bringing an AI or intelligence intervention directly into the business workflows in the bank.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need straight from the experts.
callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Well, thanks for tuning in to India Market Close and expiry plays out here. Right, almost the joke going right now is that Jane Street is back. But be that as it may, just look at the kind of correction that has happened in the last 15-20 minutes of trade, and you'll see what I'm talking about. Not a very high level or not a very drastic fall, because it's not like we were 2% higher and we are in the red. We are less than 0.5% in the green. We are right now just about flattish, 2.13%, but a fair degree of volatility seen. I wonder if it's extended to the broader end of the spectrum as well, or is this restricted to the Nifty 50? So bring up the mid cap and the small cap indices, and yes, a bit of a pullback here. I wonder, and the market breadth too could be interesting to monitor. The small cap space too has seen a small corrective move from the highs of the day. Bring up the advanced decline ratio. A bit of a convergence, but still healthy, close to 3:2 or slightly better than that in favor of the advances. Now, let me start with the large caps, and I'll hand it over to Tamanna for what's happening at the broader end of the spectrum. But the mid cap and the large cap indices and the heat map should come up on your screen. Even Stevens, maybe a bit more red right now. What's leading the charge lower, if you will? Some bit of reddies, predominantly banks, because you see both here. ICICI Bank and Kotak Bank are in the red. There is also Axis and Jio Financial. So financials are correcting a bit. Trend, which was arguably one of the key intraday plays on the upside, is actually down in the red as well. And a fair degree of red, as I said. What is doing well? Power Grid 2.25%, strength in consumption, which has been the hallmark of today's trade, because Nestle is up in the green, HUL is up in the green, Tata Consumer is up in the green, and Reliance is staying afloat, which naturally by the weightage that it holds is the highest weightage in the points contributor as well, and is helping the index do well. But essentially, even Stevens may be a bit more tilt towards the red in the last few minutes of trade, but nothing alarming, Tamanna. However, expiry day features being seen for the first expiry of a Tuesday for the markets, if you will.
So I think, Neeraj, your Monday blues have now been replaced with Tuesday turbulence. I don't know if we can chill on Thursdays now. We'll wait and see, get into weekend mode a little earlier. Well, you know what's in weekend mode right now and is really cheering our sugar stocks. I mean, look at that move. Shri Renuka is your top gainer of the day, and we spoke with the company early this morning. We were the first to do that. The stock about 12% up. Balrampur, Chini, EID Parry, the whole lot, Dhampur, all of them going up. And a couple of reasons why that is happening. One, of course, is ethanol blending. Restrictions have been lifted of how much can be taken from sugar and sugar cane from the government. So that circular was out yesterday. The Supreme Court has thrown out a PIL that has challenged E20 fuel for vehicles. That is 20% ethanol blended fuel. So it's been a double bonanza in that sense for sugar stocks. So that has worked. Samman Capital, I want to pull out as another fire starter today, actually. Kind of moves there are very, very interesting. I want to add PNB Housing Finance as well. Both moving on the buzz of new management maybe coming in, and some buzz there. Samman also looking at that very clearly. So that's an interesting one to watch out for. So there are some good spots and stories there that we can see. And we'll go into all of those details as well. But first, let me welcome on Ajit Mishra, SVP Research at Religare Broking. Ajit, great to have you on the show, and thank you so much. Always a pleasure to speak with you. Let's start with the kind of reversal we've seen from the indices. Like we were saying, is this Tuesday turbulence we should get used to on weekly expiry?
Yeah, good afternoon, Tamanna. So yes, it seems like that new beginning, because the way we were seeing that markets were gradually inching higher in continuation to yesterday's move, but the moment we went into the second half, the entire tone reversed. It seems like that bears are still not in the mood to lose their control. Means we've tested 100 EMA, we've crossed that mark for brief, we have tested 20 EMA as well, but we couldn't sustain. So it seems like that consolidation is more likely in the near future amid all this new changes that we are seeing on the expiry front.
Okay, so what would be the outlook on the index? Would this be a time to consolidate a bit, or be a bit bold, go in for a longer position? What would you do on the Nifty?
So for an index, I believe that consolidation is more likely, because banking, if you see, the main reason of underperformance, in the recent past was the decline in the banking. So now we are seeing some stability at around the long-term averages, 53,600 in the banking index. So that could cap the downside. And at the same time, we are seeing that the consumer-facing sectors, be it auto, consumer durables, FMCG, they are seeing noticeable buying interest on every dip. Other than that, thematic, like you were just mentioning, that today it was sugar, day before it was paper, and in fact the PSU pack are also offering. So maybe consolidation in the index, but sector-specific, theme-specific move is something that traders should be focusing on.
Okay, and what about specific stocks that you're liking? What would be your picks this afternoon?
Yeah, so the first recommendation is going to be from the FMCG basket, Godrej Consumers. So if you see that the stock has been hovering in this band 1150 to 1300, again we are inching towards the upper band, and the kind of price action alongside with the volume, this indicates a potential of breakout this time. So with stop at 1240, one can go long in Godrej Consumers at current levels. With 1350, 1380 is a positional target. Another stock that we like from the consumer durable basket is Voltas. So almost like 2-3 months of consolidation, which has finally ended. The stock has also reclaimed its major averages. So the price action combined with volume and supporting indicator all indicates this potential recovery or reversal to continue. And 1560 is what we are eyeing in the immediate future. So with stop at 1380, one can accumulate Voltas also at current levels.
Okay, so Voltas, consumer durable, very clear consumer durable play, and makes sense also because tomorrow is the big day in that sense. Your GST meet is going to begin tomorrow. You will have an outcome, Neeraj, I think, and some clarity maybe by 4th evening.
Yeah.
More likely than anything else, because it will be a 2-day meet, and typically that press conference and that announcement takes place in the latter half of the day. So maybe 7, 8 is when you will know. So I reckon you will see an actual reaction from market side if it's not already priced in by the 5th morning.
Yeah, and difficult to call that, Tamanna, you're right. I mean, this pricing in for sure, but just the fact that the market after a day and a half of a gain is starting to pull back as well shows you that the market wants to be not firmly committed to either side. At least that's the sense that you can get right now from the screen. Now, whether this changes by tomorrow is another question altogether. The Nifty Bank is the interesting one because that is the one that is really plummeted, 0.76% lower as we speak. Ajit, just very quickly, I mean, would you take, since this index has just plummeted, would you take a short trade on the banks right now?
So Neeraj, that is what we were discussing, that banking underperformance is definitely a major challenge, but now we are trading at the long-term moving averages in the banking index. So 53,500, 53,600 zone. The last time we saw that in a couple of occasions, banking index has respected this level. So we believe that yes, there could be a possibility that intraday we might penetrate the zone basis the kind of pressure that we are seeing right now. But on the closing basis, I think you should wait and then see whether we breach this mark decisively or not. Otherwise, there could be a potential recovery, which could help the index to inch to about 54,500 before any meaningful decline.
Okay. Well, let's talk about even though indices have come off the way they have, let's talk about the sector of the day, and literally has to be sugar. I mean, you pick up a sugar stock and that stock could qualify as the stock of the day as well. But the latest update is that the government is removing all restrictions on ethanol production. This is on top of a Supreme Court junking a plea against the ethanol blending. Hiral is here with all the details on that. Hiral, good afternoon.
Good afternoon. Thanks, Neeraj, for that. I mean, yes, sector of the day, stock of the day, whatever you can call it, because the stocks are up nearly in that range of 5 to 13% if you have to look at each and every company, and that's what it'll tell you, except Dalmia Bharat, which is in the negative. All of them seeing some smart moves. Now, what has happened? Firstly, you have the government which has gone ahead and allowed production of ethanol from sugarcane without any restrictions, and this is in sugar year 25-26, which just starts now. October to November is usually the cycle that you look at. November to October is the cycle that you look at. Now, apart from this, if you talk about the decision, how it will help is it helps sugar mills to reduce sugar production amid the kind of bumper outlook that they are seeing already. And in spite of this, your sugar mills and distilleries will be allowed to actually decide the feedstock to produce this kind of ethanol. Now, moving on, if you talk about what happens, if we can just change the slide on this one as well, the way the sugar companies will benefit on the back of this is they've rejected the PIL against the rollout of 20% ethanol blended petrol. That's the Supreme Court rejection. So both of these have actually worked in favor of the sugar mills, and they've also said that with all of this, the production in terms of where ethanol goes, that will increase. Now, how does this benefit the sugar companies? When you talk about them, profitability and margins, these are the clear benefits in terms of sugar companies, and that's the reason why you're seeing all of these counters which are buzzing in trade. If you talk about the capacity as well, Balrampur Chini, Sri Renuka, EIT Parry, Bajaj Hindustan, these are the companies which have a huge capacity in terms of ethanol, which ranges from nearly 600 kiloliters per day to almost 1250 kiloliters per day, and that's the reason why all of these are the companies which are buzzing the most. And in terms of capacities as well, a lot of these capacities are unused. So now, because there is no restriction, one, capacity gets used, two, profitability and margins improve, and that's the reason why you're seeing this kind of a buzz that is coming in so far in terms of sugar companies. Over to you.
Okay. Thank you for that, Hiral. So sugar is buzzing. What seems to have lost out from the highs of the day are alcohol stocks, and they're seeing a bit of a dive. Let's pull up a Radico. Let's pull up some of those counters as well. You're seeing some pain points over there. In fact, we should look at the sectoral heat map just for a second. I just want to see what's dragging down the markets and where most of the pain is coming from. Broadly also, you're seeing a slight downtick coming in the markets, but it's banks that are seeing quite a bit of pain overall when it comes to it. But we've been talking about sugar companies and what is the extent of the benefit of the move on sugar companies. We spoke earlier with Atul Chaturvedi, Executive Chairman, Sri Renuka Sugars.
Circular which has come from the government actually now reflects that they have a reasonable amount of confidence that the next year's crop is going to be pretty good. And the rain gods have been kind to India, and there's no reason why the crop should not rebound big time. In fact, ISMA, our national body, has also come up with a number which is much higher than what it was last year. So that gives us the confidence that the next year, the diversion of sugar towards ethanol is going to be much higher.
Okay. So sugar is something which is in flavor. Ajit Mishra, any of these that you'll be tracking?
So Tamanna, the major concern is that they are very cyclical in nature, and within this space, most of these stocks, they are either trading closer to the 52-week low. But among the performers like Balrampur Chini, EIT Parry, Triveni, I feel that in case if there will be any further dip after this initial surge, because most of these stocks, they are gradually drifting lower as the day progresses. So maybe close around 560, 555 zone is something that one can look to accumulate Balrampur, with 540 as a stop loss. And for this swing, 600 to 620, that should be our upside targets.
Okay. And You know, the other set of companies that have done really well today are the tire companies. So Seat, rock solid, zooming higher. JK Tire even better than that, 6.28%, MRF 5.83%. So some very strong moves here by the sugar companies, the tire companies, excuse me. That's the second bucket in addition to sugar and in addition to defense, which has done smartly well today. I was trying to think about reasons, Tamanna. Couldn't think of too many. I mean, sure, crude prices are subdued, etc. But could it be that if indeed auto demand is going to go up, then almost every ancillary has to do well, and because tires haven't moved thus far, you see tires now making a move.
I think that's the logical one. I don't know if there is more news of GST incidents as well that is coming in, which could be the reason that tire stocks are going up. And generally also, I think auto Ank and auto, the whole space is buzzing. That is definitely one of the reasons that we are seeing this kind of an excitement coming in. I'm just wondering if the next couple of days is going to be very, very crucial for that entire space. And I just want to pull up some of the auto stocks overall and the Nifty Auto. Let's go through its buckets as well and take you through what's happening there. Nifty Auto has actually managed to hold on to some extent, and it's MRF which is leading the charge there, Ashok Leyland. So you're saying that it is some of these ancillaries that are doing more than anything else on the Nifty Auto, not so much the two-wheeler players. In fact, on the two-wheeler players, Ajit Mishra, let's get your view on what are the two-wheeler favorites that you have penciled in.
No doubt, TVS is leading from the front. Means the stock is trading at the record highs. Post this, gap up, we are seeing gradual positive tone continuing. But now with the catch-up move unfolding in the other stocks also, Bajaj Auto is something wherein we see potential of a catch-up move. Means it's been almost like 6-8 months of consolidation, followed by a very tight range consolidation around the major averages, and then a breakout. So we feel that close to around 9600 to 9700 is something that the stock has potential to test in the near future. So from the trading point of view, with stop at 8750, 8600 zone, one can accumulate Bajaj Auto at current levels for the next swing of roughly around 5 to 7% from the current levels.
All right, we'll take a very short break. What are the big stories today, this afternoon? We're talking about tires, we're talking about sugar stocks. We're going to have a conversation with the Sugar Association after this break and see if this is really going to be a sweetener that lasts. All of that when we come back. Stay tuned.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी। तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में। फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across.
All right, welcome back. And as we said, the sector of the day has to be sugar. And let's get in Deepak Balani. He's Director General of Indian Sugar Mills Association, or ISMA as we call it, to throw some more light on the numbers, the math behind the production, and what can be given out for ethanol, and what could it mean for sugar production in the country, for consumption as well. Mr. Balani, thank you so much for joining in. I hope I'm pronouncing your name correctly. It's Balani, right?
Absolutely fine.
Perfect. So, Mr. Balani, fill us in. We were speaking to Sri Renuka Sugars in the morning and asking them that if indeed that this government decision to allow ethanol production directly out of the sugarcane juice, is that a big shot in the arm for the ethanol requirement in the country? And does it come at the expense of the quantum of sugar available in the country for the next crushing season?
Yeah, thank you for having me in your show. See, the next year outlook for 25-26, the sugar outlook is very positive. We have projected around 35 million tons of sugar production gross next year. Having said that, our domestic consumption is going to be around 28.5 million tons maximum. So it is very, very important for us to divert a substantial amount of sugar towards ethanol to maintain a proper balance, equilibrium between the stocks and the sugar prices. And that is why we believe that this is a very good move by the government to allow the unrestricted diversion of sugar to ethanol. And we are expecting that almost 5 million tons this year for 25-26 will be diverted towards ethanol. Having said that, we also expect the government to correct the price of at least a juice B-heavy ethanol, which has not been revised for last 3 years, in spite of the fact that the FRP has gone up by almost 17%. So for us, mills to be viable and make the timely payment to the farmer next year, it is extremely important for the government to also revise the prices of juice and B-heavy ethanol.
Okay. Mr. Balani, good afternoon. Tamanna here as well. Is there concern that at some point, if sugar prices start increasing, government will come in with these curbs once more? We've seen that pattern time and again. So it's not an unlikely scenario. You would agree?
But I don't see that happening. You see, because one is that we have sufficient stock in the country. We'll be closing the season with almost 5.2 million tons. And with 35 million ton next year, we will have sufficient stocks in hand. And I don't see any reason why the sugar prices will see upward trend. As of now, sugar prices are well in control. If you see the retail prices, it's around 45.8. And the inflation in the sugar prices have been the lowest if you compare to other commodities. And I don't see any reason to be worried about the sugar prices in India.
Mr. Balani, what about the kind of queries which are coming up on the adoption of E20 fuel? On the other end of the consumption spectrum, yes, the Supreme Court has dismissed a PIL that was put in, but there are, and especially on social media, etc., a lot of concerns about the adoption of E20 fuel. How do you look at that?
See, I think there's absolutely no truth in that. This is more of a social media activism. And we are happy that Supreme Court had dismissed the petition which was filed against E20. I believe, I think both the OEMs, which are the auto manufacturers, also the body called SIAM, and ARAI, which is also a testing agency, they have very, very categorically clarified that there is no adverse impact on the vehicle. Not even one single complaint has been found on E20. And I think all the clarifications have been given by the stakeholders. And we believe that this is extremely an important program for the country, which has benefited not only the country by and large by reducing the the crude imports, but also benefiting the farmers. So I don't see any merit in any anti-ethanol narrative, which have been going in some social media ecosystems. But I think with Supreme Court dismissing the petition, I believe the case has been put to rest. Government can look forward on increasing the blend and also going ahead with the flexi and the hybrid flexi vehicles.
Okay. We will of course keep tracking that story. Thank you so much, Mr. Balani, for speaking with us this afternoon. All right, another stock in focus is Bayer Crop. It has been underperforming the Nifty consistently for at least the last 6 months. Will it turn around now? What are its growth prospects looking like? We spoke to the MD and CEO at Bayer Crop Science. Listen in.
What's the kind of outlook that we are building for the company? Considering FY25, there were a couple of headwinds in place, but now the expectation is that with the above average monsoons also in place, the upcoming quarters are expected to see recovery in terms of what's happening in the overall industry side. Just want to understand your overall assessment on this.
Anushree, first of all, thank you for having me. And I think what's always important to understand is that agriculture is very, very important in India per se. And I think if you look at Indian agriculture, it has a lot going for it. We have scale. We have a lot of need for more nutritious food in the country, and so therefore actually we grow, right? And what's often is underestimated is how much potential there is still to grow in the country. And so therefore, from an industry perspective, I'm always sitting here and saying the probability of success in India is much, much higher in many another country because it is not a market which is already penetrated to the core. Now, does that mean that every quarter is going to be great or that every year is going to be growth? That's a little bit where one needs to watch and needs to very much also deal against the external environment. And I mean, we all know a lot of moving parts at this point, and where probably a couple of years back we would have sat there and said, hey, the monsoon defines on whether it's a good agricultural season or not. There's more influencing factors today, and that's what we need to deal through.
So just considering that, want to understand your overall outlook, if you have any guidance in place in terms of where the revenues are, where the margins are for FY26?
I think it's early days to say that. We had a strong start to the year with a Q1 and an early monsoon. What we are perceiving at this point is that there is quite erratic rains. The distribution is different than what we would have hoped it to be to some ways, and it's going to be super important to see what happens in September now, which will define the success of the Kharif season. And then I do believe the outlook for Rabi is actually quite positive. We see the dams being quite nicely filled. Generally, commodity prices for farmers not too bad. Some concerns on the chili side, but overall, I think we're looking for a solid season.
So in terms of, if you are just taking the current sectors in particular focus, we've seen growth across board. That's with corn hybrid business. Along with that, even the glyphosate, we've seen about a 33 to 52% of a growth here. Just want to understand in terms of volumes, in terms of pricing environment, how is that shaping up? Because, there were some concerns in terms of where the glyphosate prices have been. Does that remain on the elevated side? What's the kind of outlook that we're building for that?
Yeah, I think my general statement tends to be there is some concern on the gross margins in the industry per se, and we've seen, especially as Bayer, obviously big shifts happening with products like glyphosate. Now, it can only go so far down, so I would in many ways sit here and say we've really cycled through a negative cycle. and will at least have hit the bottom in terms of gross margins on the chemical side. That obviously still doesn't take into consideration what we're seeing in terms of some of the trade flows happening and overcapacity in China. If that cannot flow into other countries because of some tariff barriers coming up, that might have an effect on India itself. But I think for us as a company, I'm looking forward to having, may I call it almost a little bit bottomed out, and now seeing how to move forward, expanding margins, looking at a profitable portfolio, and with that, having a good business going forward. Yeah.
Well, that's the view from Bayer. But the markets deserve center stage, of course, and it is time that we try and get some perspective on what to do in the last 1 hour, simply because currently the market is at the lowest point of the day, 0.43% lower for the Sensex, dragged down by the Nifty Bank. Nilesh Jain, Head AVP Technical and Derivatives Research, Equity, of course, at Centrum Broking Johnson right now on the show with his sense of the charts and the derivative positions. Nilesh, good having you. Thanks so much for joining in. You know, as we speak, the US futures are a bit lower. Could the global markets piece be the reason, or have you spotted something with regards to our own derivative positions, because it's an expiry day, that might be leading to this?
Very good afternoon to you, Neeraj. Good afternoon, everyone. Well, I did not find any reason as such on the global front, because the global markets are trading absolutely on a flattish note. But as far as our market is concerned, we have seen sharp unwinding of the position from 24,600 strike. Interestingly, if you see Nifty index, today it made an attempt to cross its 21 DMA, but it failed to surpass and sustain above its 100 DMA, that is placed at 24,727 levels. And from those levels, we have seen a sharp profit taking. See, the overall major structure is still a bit of a worry, because Bank Nifty is the main reason which is dragging the entire market down. And Bank Nifty, in fact, if you see the structure wise, it is the weakest amongst all indices. So looking at the overall structure, we expect Bank Nifty to move towards 53,000 from here. Any pullback that might get sold into, so sell on right should be the strategy in the Bank Nifty. But compared to comparatively, if you see Nifty index, where you have multiple supports. So first of all, 24,500 from today's closing perspective is very important to see whether Nifty index manages to defend the same. Because if it breaks below 24,500, then the next target would be 24,300, 24,200. So as of now, we have seen a sharp unwinding of the position on 24,600, 24,700 strike, and the call writers have got active at 24,700 and 24,600 as well. So looks like we may see weekly expiring in the range of 24,500 to 24,600. That can be a tight 100-point trading range and expiry range from today's point of view.
And any stock-specific action that you're looking at?
See, stock specific, we are expecting some bit of this profit taking and selling pressure to continue in a couple of stocks. So first of all, SBI Card, this is one of the weakest stock within the NBFC space. We have seen a continuation of a lower top and lower top formation in this particular counter. So it looks weak, and SBI Card is a short with a stop loss above 805. And on the lower side, we may see the levels of 780, 770 as well. So sell SBI Card as of now, it is looking weak. Now on the other hand, one buy recommendation that is from oil and gas space, that IGL. So if you see overall, this particular space is doing better today, and IGL given a good breakout from its long consolidation zone with a gap up opening today, it opened. So looks like we may see a follow-up move to continue in this particular counter towards 222, and stop loss should be placed at 211.
Okay, IGL is also in focus. I want to ask you a few more, Nilesh, but first let me just go across to Puneet, who's recapping the top buzzers at this hour, and clearly one MobiKwik is on top of that list. Puneet, what's happening there?
Well, definitely, and we've seen a clean-out trade yesterday happen. Abu Dhabi Investment Authority, or ADIA, has essentially sold their 2.1% stake in the company. Roughly that's 16.4 lakh shares that have gone at 238 rupees per share. The share price is has boomed post this particular notification. BofA Securities Europe has bought roughly 5 lakh shares at a value of 243, while SSPL has bought roughly 3 lakh shares. Another 4 lakh shares has also been bought by SI Investment Broking at 248.8 rupees per share. It's also important because MobiKwik has given a strong guidance for this year. They are looking to add roughly 50 lakh users each quarter, and I've mentioned that they're looking to onboard between 1 to 1.5 lakh merchants in this particular year, and that's a quarterly guidance that they've given. So some strong numbers there. The other second stock that we're tracking today is gold financiers, and that's largely on the back of gold hitting $3,500 per ounce. And it seems to be that, you know, in time of uncertainty, the gold price has been inching upwards and onwards, and with a potential rate cut, while there could be some impact on gold prices, but we are expecting that all the gold financier companies, especially the likes of Manappuram as well as Muthoot, could be impacted positively. For quarter one specifically for Manappuram, the loan to value ratio stood at roughly 57%. So as gold prices inch up, they will be able to maintain the same level and give more loans because of the inching up of gold prices, and hence that benefit for Muthoot specifically, that number was 63% for quarter one. And finally, one more stock is Sammaan Capital actually, and the stock was up nearly 10% in trade at one point of time. Consistent upward momentum is what we've seen on the stock. Volumes at 1.3 times 30-day average. They're going to hold essentially a board meeting tomorrow on 3rd of September on fundraising as well as any kind of dividend that they might announce. So watch out for these three stocks in trade today, high flyers amongst others, but these are which are on our focus today.
Okay, thanks a lot for that, Puneet. And you know, I would have loved to talk about Sammaan Capital, but I think there's some breaking news out there. Reports suggest that the tax panel has called for steep levies on luxury EVs, in a blow to Tesla, BMW, or whatever else notwithstanding. But as a category, luxury EVs. Now, the definition of luxury EVs, we still need to bring it center. But from whatever is evident, maybe they are above a particular price point wherein some of the EVs which might be priced at maybe 20, 25, 30L might not be qualifying as luxury EVs, I presume, which is why the report also names a couple of car companies. There are others, of course, keep that in
So
mind.
$46,000 is
the luxury EV cost.
Above $46,000 is the luxury EV cutoff, as per the report that we're quoting.
Is M&M spiking here? We need to see this because on Friday, the stock fell down because the belief was that would the 20 lakh car also be a part of a larger one. If $46,000 is the point, then it's northwards of 34 lakh rupees, which would mean, something like that, which would mean M&M cars, a lot of them would not be subject to it.
So that'll be good for M&M. So what is getting hit as per this report? Tesla, Mercedes-Benz, BMW, BYD, that's fine. I mean, Tesla, anyway, we reported this morning, only 600 bookings so far. And it's been around available to people for over 45 days.
Yeah.
You have M&M, in that case, their EV gets sold out, their limited edition gets sold out in seconds.
Yeah.
Or a couple of minutes, they sell about, you know, a fair lot of what, 400?
999 vehicles?
999,000 vehicles sold in a couple of minutes. And of course, very different price point, so I will not take that away. But luxury EVs could get hit. You have to also look at it
That's 40 lakh rupees, Tamanna. I just did, because at 88, it's 40 lakh 48,000 bucks. I'm sure it covers all of M&M's offerings currently on the EV side.
Yes. So you might not necessarily be positive, because then the other question is, all EVs right now are at 5%, Neeraj. But if the government decides to increase to 18%, anything that is above 20 lakhs, 25 lakhs, that kind of a cutoff, then it'll actually be a negative, and that's possibly what you're seeing. If you see that entire report, that's what it's pointing to, where you go between $23,000 and $46,000.
Does it say that 22 to 46 is a
higher? We'll go from 5 to 18.
Oh, so again, that's the reason why M&M is getting
That is the reason that you're seeing this pain. So it seems to suggest between $23,000 to $46,000. So that means you're looking at between 20 lakhs to 40 lakhs, thereabout.
Yeah.
Yeah, 20 to 40 lakhs. If you're going to go from 5 to 18, then that's going to be a pain point.
Very interesting.
Yeah, now, also just with the caveat that before the GST Council meet, there are going to be so many of these trial balloons, red herrings, reports. We don't know what's going to happen so far. And remember, there is a very, very big push also from the government to keep EVs where they are. I cannot stress this enough. What reports you're going to be seeing right now is what the GOM panel is suggesting. Remember, states will at their end want to have higher tax coming in because their compensation cess is going on. But this is going to be a push and pull. All of this will be thrashed out in the next couple of days. And the central government has been very clear that they want to incentivize EVs, not disincentivize. First of all, you have such few EVs being sold. And then if you hike the tax 3x on them, then that's not going to really work. Lancelot Dikuna is joining in. And we're, of course, speaking with Nilesh Jain of Centrum Broking as well. Lancelot, welcome. And, just as we're going through that breaking story, just wondering if it's a good idea to stay away from autos till the dust clears on what's getting taxed where?
So I think you have to look at it in two perspectives. One is, from a valuation perspective, the valuations of most of the auto companies, had seen a big beating and they have, become fairly let's say, fairly priced. So it could be a good opportunity to look at these companies at this point in time. But however, in the last maybe 5-6 days, we've seen a very large move in most of these stocks. And on the back of the news that there would be favorable GST tax rates, and that could boost consumption in a much larger perspective. So I think rather than speculate, and it's better to wait and see what the actual proposals are. And once you know exactly how this is going to perform, at that time you can take a view because you're looking at it from a 3 to 5 year perspective.
Sure. Lancelot, I'm still asking you, the question is that if indeed this is how it turns out to be, right, that the 20 to 40 lakh segment, mota moti, is at that 18%, right? Is that a net negative for Mahindra and Mahindra as a stock?
Yes, it would be a net negative for it as a stock, but at the same time, in terms of its growth in the EV space. But apart from this, Mahindra also has, various other, passenger vehicles, and, they also have some role as far as, the trucks are concerned. So their overall business, while the EVs may get impacted, the number of EVs, and the contribution of EVs to their profitability cannot be that significant. So I would not say that it would affect their profitability directly, but yes, the growth momentum which was coming from the EV space, that would take a beating.
I wonder, honestly, if it'll be done. And yes, it's a proposal, but I truly, truly wonder if it'll be done because this is a nascent industry. There are still people who can afford it who don't want to go in for an EV yet because they're not sure about charging, etc. It costs more. There's anyway a higher cost to EV. Then you add more tax. I don't know. I don't know if it'll actually be done. But anyway, you have a bit of a U coming back there on M&M after a deep dive because this is a proposal at the end of the day. So that's something that we should remember. Meanwhile, we'll come back to the story. Let's go across to the bull versus bear segment. Now, this is something that we do on India Market Close where we pick one company and we tell you what the bull case is and what the bear case is. The bull case stronger today. Phoenix Mills running up after Motilal Oswal note. Anushi, what are they saying?
Right. So what we are seeing is, the 4% of an upside in this stock performance for Phoenix Mills is on the back of this Motilal Oswal note, wherein they have upgraded the stock to a buy rating now. And this is with a target price of 2044 that we are looking at. Mainly what they've emphasized on is the new malls which are coming into picture, which will lead to a stronger kind of consumption growth going forward for the business. Along with that, it's the office portfolio also which is in focus. 3 times of growth is the expectation in the next upcoming fiscals that could be seen from this. So strong bull case scenario in terms of how the consumption growth is expected to shape up. But on the other side now, if you look at the retail rental income, that growth has slowed down in the 9 quarters. In fact, that brings us to the second point of the bear case scenario, which is there, that it's the tenant churn revamps along with the new revamps which are happening that are leading to this consumption slowdown in these mature malls that we're seeing. In fact, if we look at the mature malls growth, that has been relatively subdued for this quarter as well as the last year period itself. So initiatives to bring growth back into focus in these mature malls is something that we should be anticipating for. While on the other side, if you look at the new malls, now they've achieved occupancy of 94% within the 6 to 8 quarters itself. While in this first quarter, we did see a dip to around 89% or so. overall, it's the new malls which are kind of leading to this growth momentum that we are looking at, and even the consumption growth, which on a rough average, if we just take FY15 to 25, in a scenario, the growth has been somewhere in the range of 12 to 14% is what we are seeing. But coming to the third point, which is also there is, total mall consumption. 12% was the kind of growth that we've seen, which is in line with the last 4-5 years of growth as well. So that has remained on the healthier side. But since there are trading occupancy levels now which shall be monitored, considering that these new malls are in picture, while it has remained on the healthier, it is something that we should keep a track of. In Q1 we did see a decline to about 89% as compared to the 90% plus ratio that was seen earlier. So this is the overall picture that we are seeing. In fact, other than that, it's the hospitality segment which is in focus, where the company is set to triple its hospitality portfolio to 1,800 keys. However, this also includes high capex plans for the business, roughly to the size of 1,000 crore or so is what we are seeing. But other than that, the acquisition that the company has recently made is expected to be margin accretive going forward. In fact, in the first year itself. So that is something that we should be keeping a watch out for, with how these new malls coming in the portfolio for the business would aid growth going forward. Coming to the analyst recommendation side of it, we are looking at about 14 buy calls for the stock, while about 1 hold and 2 sell ratings, which brings the total upside potential to 13% for Phoenix Mills. And that's how we are doing the bull and the bear case scenario for this particular stock.
Interesting. 14 buy calls on this one.
When's the last time you went to a mall to shop? No, not to the...
In physical, not to the restaurant, you mean?
Yeah, to actually go to a store and shop.
Yeah, actually, I buy most of my stuff physically.
Offline?
Yeah, offline. Yeah, but I mean, the visit to the mall, you're right. A lot of people are actually out there in the mall maybe to a movie theater sometimes, or to the restaurant which is there in the mall.
Yeah,
but
I can't recall when I went to a mall to buy something physically. It's strange.
But you and me are not necessarily the exact symbols of who shops in the malls in India.
But all my carts are full on my apps.
That's you.
But no, I don't know. Let me ask Lancelot. And viewers, if you're seeing this right, and when's the last time you went to a mall to physically shop versus online on apps? Lancelot, I mean, any perspective over here for you or people that you know?
Yeah, I think the mall experience has actually changed now from a pure shopping experience to a experience of spending time outside in an environment where you can have some entertainment, some food, and you can spend an evening with some friends, things like that. So no longer is it, like you go to a mall purely for shopping, and that's where I think Phoenix Mills has been also looking at it from that perspective, and that is why the focus on the hospitality segment more than the pure shopping segment. So when you have mixed use development where you have shopping, hospitality, and entertainment, I think the overall returns on the investment would be a little bit higher than when it's a pure shopping mall. So given that background, you could see some amount of interest. Yes, that business is growing.
Right. Fair enough. And maybe that's why also your mature malls are not seeing that much traction, because people in those cities or those locations have already had those experiences. Maybe new ones are doing better. On the charts, Nilesh, any view on a Phoenix Mills?
This particular counter has been going down for trading in a falling channel, and since a long time it has facing a constant resistance, that is long-term 200-day moving average, which is currently placed at near about 1600 levels. So I would rather wait for a breakout above 1600. If it breaks that particular resistance zone, then it will negate the formation of a lower top and lower bottom formation as well. So it's a conditional buy above 1600. And a positional target then probably comes somewhere around 1750 to 1800. At present, if somebody is already holding the long position, can continue to stay put in this particular counter, keeping a stop loss below 1480. So 1480 should be the stop loss, and positionally looks good on the chart from, let's say, 3 to 6 months kind of time frame. 1750, 1800 kind of levels can be seen.
Stay on with us. Swami Sarkar joining in for the most anticipated segment this afternoon. What are you hearing, Samit?
Well, firstly, it's Samman Capital. The stock has been buzzing the entire week. In fact, today it's also up 10%. Now, there's Street is anticipating some management-related changes would come in tomorrow when there's a board meet. Now, the board meet agenda is on fundraise via debt, but the Street is anticipating that some announcement regarding management changes are expected to come in tomorrow itself, and hence the stock has been buzzing. For JN Irrigation, what dealers are indicating is that a prominent smart investor has accumulated this counter in trade today. Today, the company had a board meet where they have approved fundraise via QIP of 500 crore rupees, and the street is anticipating that this stock will also benefit out of GST rate cut for farm equipment that is also expected to come in. That will also benefit the company here. So apart that will also benefit them. Yeah. So then there is Power Mech. There are buy flows on the PMS desk on anticipation of order win announcement that could come in. For Kotak Mahindra Bank, dealers are indicating that there could be a potential block deal in the next couple of weeks. So keep an eye out for Kotak Mahindra Bank as well. And lastly, it's Hero Moto and Cipla. Both the counters are seeing buy flows on institutional desks. Foreign and domestic institutions have been accumulating both these counters in trade. So keep an eye out for Hero Moto and Cipla as well.
Sumit, thanks for this list. The Kotak piece, right? We consistently seeing small chunks of sale happening in Kotak Bank, and it ceases to exit. You are hearing of one more.
Right, one more is expected in either next week or the next couple of weeks.
The last one was about 1%, if I'm not wrong.
So, or something similar size, but discount is expected to be around 5 to 6 odd %.
Okay,
that's what dealers indicate so far.
This is a problem for a lot of these stocks, Kotak, Indigo, and etc. Just the upside gets capped because there is this consistent supply. The quantum may not matter, but the street knows that there is a supply, and the supply overhang just stays on these stocks. And maybe that is why one MobiKwik has shot up.
I was just going to say, what about MobiKwik then?
Because I think the clean out trade happened. In case of that, the Adya supply, which was expected to happen, finally got done, and maybe that's why this stock is done. Not that it's a cheap stock, but I'm guessing that's the reason.
I don't know if a slow drip would be seen as negative versus a clean out.
No, clean out is because then you at least know that supply is not going to come.
Okay.
Maybe.
So no further downside. I don't know. Lancelot, any thoughts over here on a Kotak Mahindra Bank and a one MobiKwik, both that we're talking about, one MobiKwik shooting up even further?
I think Kotak is mainly because, there have been some large investors looking at moving out, as well as the promoters also wanted to reduce some of the stake more in line with RBI guidelines to bring their stake down. But, it's nothing negative on the bank per se, but because anyway, in terms of banking, they are doing well. You see the environment is going to be better for banks, given that the interest rates are softening, and the transmission of credit also will happen over the next 2 quarters. So I think from a banking perspective, it's probably a long term, it would be a good idea to look at Kotak Bank. The supply in the market could in fact impact short-term views or short-term, prices. But over the long term, yes, Kotak Bank will continue to grow.
And Nilesh, how are the charts? Because I think it faces this serious resistance, Kotak Bank somehow. But it's not that it really falls dramatically also, and it recovers if it does. So is Kotak a no-trade stock for now?
See, it has been trading in a very tight range. Today, in fact, surprisingly, it has given a breakdown below its long-term 200-day moving average after a long time. So from present level, if today it closes below 1960, I see the high probability of closing below the same. I feel the structure is looking weak, and we may see further downtick to continue towards 1920 to 1900. And we have already seen a lot of underperformance in the all the major heavyweight private sector banks like HDFC, ICICI and Kotak as well. So structure wise, all these private sector banks are looking weak from a short to medium term perspective, and given the kind of breakdown we are witnessing in Kotak Bank, till the time it doesn't reclaim its long term 200 EMA, which is placed at 1960, structure is looking weak, and 1920, 1900 levels can be seen.
Okay, stay on with us. We're talking about Kotak Mahindra Bank. We're talking about all the action in the stock markets, but just this quick update coming in. The Maratha reservation protest has entered its 5th day today, and the court and police, that's the Bombay High Court and the police, have issued strict warnings to protesters, reminding them to follow guidelines already laid down. Meanwhile, protest leader Manoj Jarange Patil says he respects the court's decision, but he will continue his fast. My colleague Anuj joins us with all the latest. Anuj, what has the court said?
the court came down very heavily on both the parties today, that is the government and the protesters. Yesterday, in its observation, when it was hearing the case for the first time, the court made it very clear that by 4 p.m. today, there should not be more than 5,000 people in the Azad Maidan area, and the entire South Mumbai region needs to be free of traffic. Today, it was hearing the case again at 1 p.m. and then, that is when the court only gave the government 2 hours, to clear out the entire area, and that is what has created some sort of confusion amongst the protesters here, because the police here came right at 2 o'clock to remove all of the heavy vehicles, because those were the orders given by the Bombay High Court. But there was not a clear communication in place between the protesters and the organizers of the protests, which is why the protester and the police got into some sort of a scuffle-like situation over whether they are to let the vehicles out of this place or not. But as you can clearly see, the police are still trying to, convince the people to take the vehicles outside of this place. When we spoke to the police officials, the not want to get into any sort of a lathi charge, even if it is mild, because that can turn the situation far worse than what it is at the very moment. But from what we've known, or from what we have gathered just a while back, Manoj Jarange Patil did communicate it to the protesters that the vehicles need to go out, and all of the protesters need to station themselves outside Navi Mumbai, so far outside or far away from where we are at the moment, which is why we can see that the vehicles have already started to move out. But what it means is that following yesterday's order, Jarange Patil will be keeping close to 5,000 people here at Azad Maidan. But the court and the police notice that was sent to Jarange Patil today morning clearly states that no one should be there at Azad Maidan because this is a disruptive protest, is what the court noticed. There is a bit of contradiction between the perception of the entire observation and the entire observation as a whole, and that will lead to the situation unfolding in a very different way in a short while. As we speak, the court also prepares for the post-lunch session where the government is supposed to put its side, because as I said earlier, the court also came down very heavily on the government and the lack of efforts that were taken by them to let the city flow in the way that it usually does. So it'll be interesting to see what are the points that are put forth by the government and what is the defense that is put forth by Manoj Jarange's defense.
Okay, thank you so much for that extensive report, Anuj. And this is in the heart of Mumbai city, right at CST. And we're seeing all of those live visuals coming in from there. Of course, a deeper issue, and not just from the traffic perspective, but now being looked at very closely by the courts. Very short break, but all the action continues here. We're coming back with the top trades for tomorrow and our BTST ideas after this break. Stay tuned.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, Real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
CDSL
for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Back with India market close, a bit of a recovery for the markets. By the way, the Nifty 50.17% down. So this is expiry day gyrations. Frankly, there is nothing else that explains this. Volatility mildly higher, nothing too dramatic. In an important update from SEBI, the regulator has brought an intraday net position limit of 5,000 crores in index options and gross position limit of 10,000 crores separately for long and short sides. To understand, okay, if you didn't understand this completely and the impact thereof, let's get in Charu Singh. Charu, what are you picking up? What are the implications?
So the market regulator, Securities and Exchange Board of India, came out with a circular yesterday that is not open for public consultations anymore, and it's completely final. So what earlier used to happen was there were no intraday position limits. However, there used to be an end of the day limit of about rupees 1500 crore. However, now SEBI has brought in net position limit of 5,000 crore rupees and gross position limits of 10,000 rupees, both on long and short contracts. Now what this means is that if somebody is taking a position of about 10,000 crore rupees in long contracts, they cannot take a position of over 5,000 crore rupees in short contracts because the net has to be only up to 5,000 crore rupees. Now, while this is bringing some sort of a cap and limit after what has happened with high frequency trading firms in India, especially with manipulation of Indian derivatives market, what's important here is that the end of the day limit that was earlier present was still lower than the intraday position limits that have been brought out, which means that people will be able to take better positions and will have more leeway, which also means that there could be more liquidity coming into the exchanges, and then it would probably be able to favor the exchanges such as the National Stock Exchange and the Bombay Stock Exchange.
Okay. So if there is that kind of an easing, what is going to be the impact? I actually want to pull up the BSE stock today because interesting day for it. It's the first day that NSE has its expiry. That could have been seen as a negative, but remember, BSE has actually come off its highs but is doing relatively okay. And one of the reasons is this intraday expiry easing that SEBI seems to have put out. Nilesh, I was wondering if you had any view on this.
I think this is more sort of a positive as of now. This exchange, as far as BSE is concerned, since the expiry has shifted to Thursday, that may have some bit of negative impact on the revenue. But as of now, looks like the stock has already priced in and factored in that particular news. So now from here, the stock has gone into extremely oversold territory. It has found a very strong support at 2100. So I expect a strong pullback move towards 2300 to 2350 on the upside. So risk and reward looks favorable for the long position at present level. 2100 should be the stop loss.
Okay. And Lancelot, sorry, just before we let you go, I have to ask you this one question. After a really long time, Ola Electric is seeing some gravity. It had one day in between wherein it corrected a bit, but today it seems like that 65-point resistance had come into play. It is down about 1% lower in trade. If you had investments or if you had a trading position in this earlier, would you take money off the table?
I would definitely look at taking money off the table because, the market cap of Ola is still, very high as compared to the kind of profits it is expected to generate. And a lot is being read into the future growth potential, which is there. But at the same time, there are established players in the marketplace who are also coming in with electric vehicles. So the competition is getting tougher. And so it is going to take, it's an uphill task, for example, for Ola to get into a position of market dominance, whereas the current price is already factoring a lot of positives and assuming that, let's say, Ola is one of the biggest players, etc., etc., and that is getting factored into the market cap. So I think it definitely makes sense to look at taking some profit off the table.
Clearly, people have started doing that. That winning streak has taken a bit of a breather as expected. Thank you so much, Lancelot, for speaking with us as well. And Nilesh, great to have you on. All right, quick check-in, quick market check-in, and a bit of recovery there. Bit of recovery from the lows definitely being seen. I want to pull up an M&M and a Tata Motors very quickly because this story, by the way, just for the record, NDTV Profit put this story out 2 days ago that in the 20 lakh plus EV bracket, there is a proposal, and mind you, the key word here is proposal, to increase the GST from 5 to 18% and put it in the 18% bracket. This is what the states and members of the GOM have proposed, and understandably so, because they're losing out on compensation cess, but it's the start of a negotiation. The negotiation is still to commence over the next couple of days, so we'll wait and see what happens. Bit of a recovery actually, an uptick in M&M, but both looking fairly weak. Kush Bora joining us this afternoon of kushbora.com. Gurmeet Chadda also with us. Welcome to both of you. Always a pleasure to speak. Kush, let's get your index take.
First, a very good afternoon, Tamanna. Hi, Gurmeet. Good afternoon to all the viewers as well. I think the market is in this sell on rise kind of a texture mode, primarily because of the FII selling, and we've been maintaining this view for the last couple of weeks, right? Two key players in the market, FII and DI. Unless you see any kind of meaningful short covering from there, the rises will perhaps not be as sharp. Even in yesterday's move, if you see, FIIs haven't covered their shorts, in a meaningful way at all. Right now, the 20-day moving average on the Nifty close to the 24,700 mark seems to be, a very near-term resistance, and anyway, 24,800 to 25,000 is a medium-term resistance zone for the Nifty. So, while you could play the theme for the day, I think from a near-term perspective, sell-on rise texture of the market remains intact on the Nifty. 24,400 being a key support zone. If that is broken, you're looking at the 200-day moving average support of 24,000.
What about the stocks for the day today, Kush?
Still going with two longs on that, Neeraj. Hi, good afternoon.
Good afternoon.
Goldium has had a good run in the last 3 sessions today. Also, the stock is trying to hold up flat right now. The 200-day moving average resistance is acting up, but I think once the markets at least consolidate or show any kind of a positive reaction, this could zoom higher. So Goldium for targets of 385, 405 with the stop loss around the 345 mark, is a buy. The second one is LTF, L&T Finance. The last 9 sessions on this one have been very encouraging. The stocks moved up 10% on the back of very good volumes. Today, you're seeing some sort of consolidation, but on the whole, the structure is very, very positive on this one. 227, 231 are your targets. 218 is very placed at stop loss.
Okay, Gurmeet, very good afternoon to you and great to have you on. Are these Tuesday jitters that we're seeing because of the expiry? Do you think that this is the time to really stack up ahead of the GST meet?
I think, hi Tamanna, I think there is one section of the market which is a little worried on how much will come in the 40% slab and whether states will agree or not. And this could end up being a more rejig than actual GST cut. And that is the reason certain parts of the market haven't responded, whether it is four-wheelers because of confusion around the slabs. It's something to do with, in broad discretionary segment, will there be any price-wise ad valorem duties, whether it's on apparels or whether it's on, even appliances. So I think there's some bit of confusion there, and that's the reason. And plus, obviously, you have FIs continuously selling. The sentiment hasn't been that great of late. And I think the market would want to wait it out. But I think that if you see there is growth uptake happening, GDP numbers are showing it. HSBC manufacturing PMI number was at an high. After a long time, I saw it almost closer to 60. And even the bank credit offtake should pick up this quarter. So macro indicators are pointing to a bit of a growth recovery. We'll have to see whether it translates into earnings or not next quarter. And that's why the not so exciting reaction from the market.
I'm just wondering if it is a bit not entirely taking into account the impact of what the GST cuts are going to look like. And I understand that there is that extent of trepidation of what will come in 40 and what will come in 18 and what will come in 5, etc. Gurmeet. But my only question being that the directional intent seems very clear to make things cheaper and to boost consumption at a time when we're under tariff attack. Having said that, do you think that Friday then is going to be key?
No, absolutely. I just hope that the implementation is immediate. Earlier, there was a confusion that some codes need to be fixed at the back end. I think that's gone. I think you just need to reset the rate. As I said, the market wants to see that not too many things go into 40% as luxury. There are not too many price slabs, and there is actual benefit coming in. And me being an optimistic, I hope it plays out that way. Also, the valuations, even if, let's say, consumption cuts play out, it's not that you're getting, let's say, an AC maker at 20p, or you're getting, let's say, FMCG companies at 20p, or you're getting, let's say, some of the retailers at 20, 30p. The valuations are still rich because the stock has seen more a time correction and less of a price correction, if I want to put it. So I think the key is earning revival. How does that demand-led recovery leads to earning revival? And quarter on quarter, we are still at single digit, unfortunately. And that's the reason FIs are still seller. If you see the outflows, I mean, see, China has got so much flows, Korea has got flows. End of the day, the hot money keeps moving basis where the relative opportunities are.
Okay, I wonder if the hot money is chasing Puravankara today. Let's just pull up that stock. Had a very good opening and a strong start when we started off the day because of news coming in about a redevelopment in a South Mumbai property. But now in an exchange filing, they put out the information that they're bringing exclusive property shows to the USA for NRIs in September 2025. I wonder if they're assuming a lot of Indian origin citizens or people in the US will want to make their way back as things get, tough between the two nations. Yeah.
Hopefully it doesn't.
I mean, I don't know. Yeah, I think I agree with you. I was thinking about this today. If I was looking for clues into which way it's going, I think the clues are hinting at an off-ramp. With you never know. I don't know what Donald Trump is going to say at 11:30 tonight. Watch out for that. We'll be cutting into it live. No, but he's doing it from the Oval Office.
Yeah,
so from the Oval Office, it's a pretty big deal.
That's true.
But the fact that his post yesterday didn't say I will increase tariffs. It just said these are the facts and something to ponder over. You have Scott Bessent saying that we will find some kind of solution, and India has more more to do with China than with Russia, more in common because they're democracies. You have a Nomura note from yesterday which says that they reckon by November tariffs will be back down to 25%. So they've put that out there, and I don't know if any of you all spotted it yesterday when the SCO was going on. The American Embassy in India, the official handle, put out this post saying that we are very proud of our partnership with India, blah, 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 apropos of nothing, no context. So I wonder if there are back channel attempts at easing off.
And his message that India even offered to reduce tariffs to zero or not. So, I mean, there's not too many aggressive comments in the last 2 days or 24 to 48 hours. Let's wait and watch how this shapes up. But very interesting
and if
times.
not, then Puravankara is always there. Or any company is there saying this property back in India. But no, that's on a lighter note. But real estate has definitely been in focus. What's also been in focus is Avendus Park that has upgraded Sun TV to a buy. So Sun TV in focus actually. The brokerages called it the best proxy to play the IPL theme. Vansh joins in with more details. I wonder why, Vansh.
Well, yes. So the brokerage has upgraded the stock to buy with the target price of, they have hiked the target price to 680 rupees from the earlier target price of 495. Now the brokerage believes now the company is transitioning into a pure play proxy on the IPL structural growth, and the derating of the core business is now complete, and all the negatives are priced in for this particular counter. Brokers also believe that the Sun TV remains the best proxy in the listed companies to play the IPL story through their franchisee Sunrisers Hyderabad. Now the IPL remains a marquee property, especially in a single sport country like India, and the brokerage believes that the IPL calendar is expanding for sure. And the global players are relying on live sports after reaching a sub-growth limit on their saturation point. And with the IPL teams going global, they have a target price of about 840 rupees in a period of 3 years. So clearly, a big upgrade is what we are seeing on this particular counter as well.
Well, certainly up and about today. And by the way, thanks a lot for that, Vansh. And by the way, speaking of stocks which are up and about, just mark the intradays of these stocks. Nandan Denim, Welspun Living. So some textile names just starting to perk a little bit. There is Mindtech and there is Vimta Labs, which has had this huge spike in the last few minutes of trade. Okay, Welspun Living not as much of a spike, but some of the others certainly. Vimta Labs is the one I'm interested in. Look at that move, trending higher, 17% on 12 million shares traded for this stock. Gurmeet, some of these specialized players, and good afternoon to you. I'm calling Vimta specialized because it does work which not too many other businesses do, and there are a clutch of others, right? Solar Industries could be classified as one which does work, which not a lot of other businesses do in the country, and there are a clutch of others like that. How do you evaluate whether to hold on to something like this? I don't know if you have a view on Vimta Labs or a Nandan Denim or a Solar Industries. I presume Solar Industries, yes.
So Neeraj, I think degree of difficulty is how you term it in terms of or the entry barrier. So I think another one which is now looking very good is the semiconductor play. We only have OSAT plants, which is end-to-end outsourcing of the semiconductor chip. We're yet to go to the level 2 and 3. So I think we like CG because that's purely, it's not exactly a semiconductor play, but within listed a semiconductor play has done very well. Government really wants to ramp it up. And one thing I've learned post-COVID is that be where the government is allocating more funds and more policy support. We saw that with defense in 21-22. We saw that with electronic manufacturing some time back. And now we will see that with semiconductors as well. So I think that's the value chain. And there's a beautiful article the promoter of CG Power has written on the distribution value chain of a semiconductor chip. I think I recommend everybody to go through it, and I think there are a lot of opportunities there. Similarly, on defense, I think you will see more and more announcements. I think there is lumpiness to the business. What we are not realizing is that a lot of our Indian companies are also getting into some products which run like FMCG, like grenades and artilleries and bulletproof jackets, etc. While there is lumpiness in order, there are a lot of products where you can call it fast moving defense, if I may call it. And I think that is where that will keep adding to the margin and working capital issues as and when that mix keeps going up. So there's a lot of foreign delegation in Nagpur, which is apparently the explosive capital for India. My sense is you will see more defense announcements there as well. So we are concentrating here. And also in terms of some of the new platform plays, I think it's once there are 2 or 3 players left in a new age business platform play, whether it is quick commerce, food delivery, fashion, then that's when after that you start getting the benefits of operating leverage and scale coming in, and that's when the delta in profit is geometrical.
What are your favorite semiconductor plays, Gurmeet?
We have just one, unfortunately, Tamanna. We have CG Power technically, which is more power systems, right? The first semiconductor chip will take time.
What about Canes and Amber and all of that? You're not looking at that bucket?
Yeah. No, Canes is actually again confined to OSAT confined to electronic, not just the broader play. Semiconductor has to be much broader play. Also, it needs huge capex. Just see the capex commitment for next 3 years for a CG or a Tata Electronics. Unfortunately, Tata Electronics is not available even in unlisted space. So I think these are the top 2 players in my view which can scale up. So you have to look at something. I'm not saying we will have our own NVIDIA at some point of time, but the focus government has, my sense is this sector will surprise. And similarly, aerospace, I think that's another sector in my view will surprise, because a lot of Indian companies are getting registered as tier 2, tier 3 vendors, even there as well. So you have to, since Neeraj spoke about niche areas, I think these are to me, semiconductor is one area where you will see a lot of plays coming in the entire value chain.
Okay, by the way, just very quickly, before we move on to a newer segment, I just want to mark this, Tamanna. In the morning, we were talking about a small or an SME business, right? Which wherein Sejuan bought in shares, and as a result of which that stock was doing very well. It's in the business of contraceptives. As we speak, Cupid, which is in the similar business of contraceptives, has just hit fresh highs. So this is the case of the tail wagging the dog, wherein it's a small cap SME company which has gotten listed and done very well on the SME exchange, that the main board company is starting to see some very strong price and volume action. So quite something.
Quite something. All right, big moves there, but we're happy to bring you this new segment that we are starting with on India Market Close. We're talking about profit intelligence, and we're telling you what you can expect from the day tomorrow to keep you fully prepared as we close out trade today. So Hiral joining us for more.
Thank you, Tamanna, for that. So one sector that's actually in the spotlight today on the back of this is the IT sector or the profit intelligence segment today. Now, if you talk about the sector, it's down nearly 1% from the day's highs today. But in spite of that, it's still trading in the positive territory with gains of 0.2%. Now, what's happening over here? You are seeing bargain hunting that's happening at lower levels. And what is interesting is that all this while you were seeing that buying that was happening with mid caps, right now buys happening in terms of the large cap space. And that is what is keeping the sector afloat right now. In 2025, if you go to see, it's the worst performing sector, declined 10% in the last 2 months. And 7 of the 10 constituent stocks are trading with more than 20% cuts, and 20% below their recent peaks as well. So that's the overall picture that you're seeing in terms of IT as a sector. Now, most of the IT stocks are trading below their average valuations as well, and this is basis your 5-year comparison. Now, what are the key triggers that the desks are picking up right now? 2 of them. One, Fed hinting at a rate cut. We have that will augur well for the IT sector. And secondly, we have the Fed meeting, which is in September 2025. So again, I think it's 17th or 18th. So ahead of the Fed meeting, you're seeing buying interest, which is coming back for the large caps. And secondly, the valuations, as we mentioned, are at the lowest level versus your last 5 years with future opportunities. So these 2 are the major triggers that are working. And now that low level buying, bargain hunting, that has started to come in with regards to IT as a sector.
Okay. That's a good one, and thank you so much for that, Hira. Looking forward to doing this, and what we're attempting to do here is preparing you for the day tomorrow with all of the intelligence that our research team gathers. So thank you for that. All right, the other big and exciting story today, and we were just speaking to Gurmeet about that what is the actual semiconductor play in the listed space? And there may be limited options there, but the fact is that today is a day that India has taken a major step forward in its semiconductor journey. We've unveiled the country's first fully indigenous 32-bit microprocessor called Vikram at the Semicon India 2025 conference. My colleague Rishabh is joining us to tell us more. He's live with us on the show right now. Tell us about Vikram. What is it, who is making it, and why is it such a game changer?
Right, so Vikram is a 32-bit processor that is designed and developed by the Indian Space Research Organization. This was the chip that was presented to the Prime Minister today by the Union Minister for Electronics and IT. This will, of course, find its uses in India's space journey. You will find all of these chips and microprocessors and microcontrollers be utilized within India's own space missions as we go ahead, and you have a very big lineup of space missions that is underway, that ISRO is helming, especially with more missions to a manned mission to the moon also. So that is something that we're picking up from Semicon India. Apart from that, a lot of very interesting chips and visuals on display. We also had a chance to actually see one of the first chipsets that was put out by the CG Semi pilot line, and we've recently recorded, we've just recorded that as well, and the visuals should be with you very shortly on that as well. So those were a few key updates.
No, we can see those visuals. Thank you for that and those details, Rishabh Bhatnagar there. Meanwhile, speaking at that event, Prime Minister Modi said that India is playing an important role in the global semicon space. Listen in.
ये चिप भले छोटी सी है, लेकिन इसमें दुनिया की प्रगति को बड़ी गति देने की ताकत है। और इसलिए ही आज सेमीकंडक्टर्स का ग्लोबल मार्केट $600 बिलियन तक पहुंच रहा है, और अगले कुछ साल में ये $1 ट्रिलियन को भी पार कर जाएगा। और मुझे विश्वास है भारत जिस तेजी से सेमीकंडक्टर सेक्टर में आगे बढ़ रहा है, इस 1 ट्रिलियन मार्केट शेयर में एक अहम हिस्सा भारत का रहने वाला है। कुल मिलाकर सेमीकंडक्टर के 10 प्रोजेक्ट्स में $18 बिलियन यानी 1.5 लाख करोड़ रुपए से अधिक का इन्वेस्टमेंट हो रहा है।
So, everybody likes semiconductors. Gurmeet mentioned he likes semiconductors. I wonder if CG Power forms a list of those stocks, Kush Bora, that you like, and couple it up, of course, with your top closing strategy for the day.
Technically, there's nothing to not like in CG Power. It's had an excellent volume accumulation over the last 3 sessions, good price up move, and despite that, it's still some distance away from overheated territory. So yes, you could very well consider it for a BTSC trade, or if you've got a position, continue to hold. Doesn't make my list just yet. Today, I've got a mix of a BTSC and an STBT, as the market is also set up quite in a similar fashion. So with the BTSC trade first, MFSL, Max Financial Services, the stocks had a good accumulation over the last few sessions, consolidating today, along with the market that's a little soft, but overall the medium-term structures are fairly healthy. You've seen a golden crossover of the 20 and the 50-day moving average, suggesting that the near-term trend for this one is bullish. So 1655, 1680 are your target, 1605 is where you place that stop loss. On the flip side, you've got Max Healthcare. The stock's been seeing consistent selling pressure. The 20 and the 50-day moving average have seen a depth crossover. Now, on the downside, you've got an immediate support which comes close to the 1120 mark, but that's some distance away. So, from a short trade perspective, if you want to consider an STBT, 1120, 1135 are your targets. 1180 is where you place as stop loss. So, Max Healthcare is an STBT.
Okay, certainly watch out for that. Gurmeet, a lot of people, and Kush, thanks for that. Now, Gurmeet, a lot of people would be wondering that we know that the big event is starting tomorrow and day after, let's say, and let's assume the rates come out more or less in line with what has been speculated thus far. I use the term speculated carefully, but let's assume that's how it turns out. There's a bit of a rally that has already gone behind some of the most obvious names. Is there your fundamental research which tells you that there are some of these which are worth looking at investing even after the rally, if indeed the rates get slashed down? It could be durables, it could be EMS, it could be autos, it could be cement, what have you.
So, pockets where I think, Neeraj, it hasn't played out despite the good news. One is financials. So if you're very convinced that we have a consumption revival, we have a capex revival, it will get reflected on the bank balance sheet and the NBFC balance sheet. And look at the way Bank Nifty is done. I think it's down 2,000 points from 56,000 to sub 54,000. Most banks are at below their 10-year median valuation. You have Federal and RBLs of the world at 1 price to book. SBI again 1.1, 1.2 price to book. The private banks are around 3 times price to book. So it's not that they are trading at 4 or 5 times as they used to. So I think the somewhere because of FIS sell-off, I think Bank Nifty has been under pressure. I also think consumption-linked NBFCs should do very well once rates are settled and demand picks up. Whether it is Bazaar, whether it is Chola, whether it is Poonawala's of the world, or the Shriram Finance of the world. So I think these are 2 pockets. I also think cement hasn't done anything. And cement hasn't done anything for a good couple of years now. So despite August being a monsoon month, we haven't seen any price reduction. Plus now you have Ultratech heading towards 200 million tons, and you have the ACC Ambuja Adani pack at about 130, 140 million tons this year. So massive consolidation happening in cement. Something very early to say it is like telecom, but something very similar to telecom will play out here as well over a period of time, which will bring pricing power. And any GST reduction would spur demand with festive season. So that's another pocket to play. And then there are small pockets like within agriculture, there could be complete waiver. Like for example, in farm equipments and water pumps, selected fertilizer companies where GST may go from 5 to 0, urea already is at 0. So I think those are the plays in my view which are right now haven't reacted much to the GST announcement. Even on consumer names like Tata Consumers and others of the world, they've not even they've done nothing at least in last 2 years if I recollect. So I think there is a lot of juice left provided the cut is sizable. and it leads to a spur in demand with festive and marriage season ahead.
Okay. Point well noted. Kush, just before we, Gurmeet, and thank you so much for that. Kush, just before we wrap up, the one pocket that we kind of didn't talk about on the closing show today was the shipbuilders and the Cochin Shipyard, GRSC, etc. Mazgon is up in trade today as well. What's the best out of these three for a trade? A quick view, Kush.
I think from a technical standpoint, Cochin Shipyard stands out because after this massive fall that it's had, it's taken support at the 200-day moving average. Today it's crossed and will, in all likelihood, close above the 20-day moving average. Risk-reward ratio extremely favorable. So if you were to pick one of the stocks, I think Cochin Shipyard is your stock. Positional stop comes in at 1640, and on the way up, you could actually see the stock head to 1785, and once that is taken out, 1850 levels as well. So with the kind of moves that it's made over the last two sessions, Cochin Shipyard stands out.
Okay, gentlemen, both of you, thank you so much for taking the time out and being with us. Really appreciate your time this afternoon. And let's start wrapping up the markets. A minute and a half left, and well, you could argue not a bad day of trade. Maybe Tamanna, expiry jitters, but nothing dramatic. I mean, this close you would have taken any given point of time, even if you knew that the market started off about maybe 0.2, 0.3% higher.
Yeah, but look at the intraday. The recovery has been quite heartening, I think.
From the lows, from the very lows.
From the very lows, you've had some decentish kind of recovery. You're not closing in the positive territory. There was at one point which seemed like you may. So you have seen that. Clearly, you're seeing, weekly expiry jitters, and that'll take some time to settle, if at all, but not half bad. And just pull up the Nifty heat map, if you will, and we'll take a look at what's really been working there. I have a feeling this is all going to be for the next few days GST play, because a Tata Consumer jumps up, even a Raymond Lifestyle, and we'll show that a little later, saw a huge jump up, a Nestle. As more news is trickling in and guesstimates are trickling in on what the rates are going to be, we should just watch what we've done this morning, and of course look at our website, because we've put all of those possible rates out there. You're seeing all of that play up. Even a Hero Motor, which was languishing through the day, has jumped up again. HUL is there and Eicher is there. RL, of course, was holding forth since morning. What is not doing too well is M&M. M&M, the biggest loser on a report that above 20 lakh rupees will now, EVs will attract or could attract 18%. I mean, what we're hearing is that it's unlikely that it could happen, and it'll be fought tooth and nail, because the central government wants to encourage EV adoption. So we'll have to wait and see how that works out.
The banks are the other weak piece, Tamanna. ICICI Bank is down 1.4, Kotak is down 1.2. So that's what that is also negated the upside that come in because of Reliance. So that's the large caps. Very quickly, the broaden of the spectrum, the 500 winners and losers, and then we do the eye on the globe very quickly. Okay, Tamanna, let me highlight the winners. Actually, you should, because you love sugar today. But the losers.
And also, I love winners generally.
No, but not too many. But for the fact that Lemon Tree is the surprising loser there, because if indeed hotel rates below 7,500 are going to be lower GST, then Lemon Tree is a principal beneficiary, but down today.
Yeah, and I mean, then, Welspun Corp, maybe that whole tariff pain still hovering, that could be seen there. Samman Capital, if you watched Heard on the Street today, we reported that maybe there is a management change expected. There's a board meeting tomorrow, so that has been in focus. All tire companies also zooming today. It's not just MRF, the whole lot of them. And of course, sugar is the standout of the day that we're seeing. So a lot of action to be seen, but the action is only beginning. So as we wrap up, some of the factors that you need to watch tomorrow, the US manufacturing PMI will be on. President Trump is going to speak 11:30 p.m. India time. If you want to watch it, we will be on the story. You can tune into NDTV Profit on all our platforms, and you will see what he has to say. He's speaking from the Oval Office, so this is something that everyone's looking forward to.
Two interesting listings. This one subscribed 30 times, so could be an interesting one to watch as well. And of course, the GST meet.
That's the big one. GST meet begins September 3rd. You will know what's really happening maybe end of September 4th. So keep that timeline in mind. Meanwhile, so much to unpack.
Yeah, just one last thing here. September 3rd, September 4th, and most importantly, September 5th. You will hear from a battery of experts and the most renowned names in the world of markets and corporates about what the GST cuts mean for the economy, for earnings, and for investors. So you don't want to miss that on NDTV Profit.
All right, that's all the time we have from Neeraj, me, and the team that puts the show together. Thank you so much for watching. Stay tuned. Market Express up next.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, benchmark indices shredded gains in the last 2 hours of trade, marking losses right ahead of the first Nifty Tuesday expiry. Now Nifty declined to end the day below 24,500 levels. Sensex also shed over 180 points. Broader markets outperformed the frontline indices with small and mid-cap ending in the green. Bank heavyweights like the ICICI Bank, HDFC Bank and Kotak Mahindra Bank pressured the Nifty. Most sectors ended the day in green than in red. The sectoral picture looked largely mixed with FMCG, defense and media leading the gains. On the flip side, finance and auto were in the slow lane. The advanced decline ratio also settled in the favor of the bulls. Hero Motocorp beat the market expectations in August 2025, selling 5.54 lakh two-wheelers versus an estimate of 5.4 lakh units. Now, scooter sales surged nearly 53% to 52,204 units, while motorcycle sales rose 5% to 5.02 lakh units. Now, domestic sales grew by 5.5% and exports soared 72.1% year-on-year. Now, this strong performance was supported by new launches, robust festive season demand, and continued momentum in the rural and export markets. Abu Dhabi Investment Authority, that is the ADIA, fully exited its 2.1% stake in One MobiKwik Systems on September 1, selling 16.44 lakh shares for 39.21 crore rupees at an average of 238.45 per share via NSE bulk deals. So the sale, part of an open market transaction, was partially absorbed by the BofA Securities Europe SA, which is 5 lakh shares at 243.61 rupees. SSPL Securities, which is 3 lakh at 237.03. And SI Investments Broking, which is 4 lakh at 248.42 rupees. totaling 1.52% stake for 22.12 crore rupees. So shares have risen 11% to 264 rupees on September 2nd, reflecting east selling pressure. So amid this, MobiKwik aims to add 50 lakh users quarterly and onboard 1 to 1.5 lakh merchants, staying optimistic on the payments growth despite a Q1 of FY26 net loss of 42 crore rupees. Puravankara Limited, through its subsidiary Purva Blue Agate Private Limited, has secured redevelopment rights for a prime residential society in Mumbai's Malabar Hills spanning 1.43 acres with a development potential of 7 lakh square feet. So the project is estimated at 2,700 crore rupees. Revenue will offer upgraded premium homes for existing residents and also additional saleable units. Redefining luxury living in South Mumbai. This marks the company's second major South Mumbai redevelopment after Breach Candy's Miami apartments. Now in July, Puravankara won rights for 8 Chembur societies, adding over 1.2 million square feet and 2,100 crore rupees of GDV. So the Mumbai portfolio now totals to 4.25 million square feet with 10,500 crore rupees of potential. This is reflecting strong growth in the redevelopment segment. Indigo faces a seasonally weak Q2 FY26 with domestic air traffic down 1.7% year-on-year in the first 2 months to 260.2 lakh passengers, potentially marking the first quarterly decline in the recent times. Daily average fell to 4.2 lakh from 4.3 lakh last year amid geopolitical tensions and the Air India crash impacting the demand. International traffic for domestic carriers remains resilient and up to 67.1 lakh in the period. Indigo's passenger load factor also holds steady at 85%, supported by a 12% capacity cut since 2025 peak, reducing the average daily flights to 2,033 from 2,304. Valuations trade at 10.3 times, 12-month forward EV versus EBITDA, and also close to the 5-year average of 10.7 times. When the Spark upgraded Sun TV network to buy from sell, raising the target price to 680 rupees from 495 rupees, with a 3-year target of 840, implying up to 54% of upside. So the brokerage views Sun TV as a fast-growing sports entity and the best-listed proxy for IPL structural expansion in India, which is a single sport market. Sunrisers Hyderabad, the company's IPL franchise, is also expected to drive 60% of its SOTP valuation, with IPL revenue growing at a 9 to 12% CAGR to 15,000 crore rupees by FY27. Core broadcasting de-rating is also complete, with all negatives priced in amid global SWOT platforms relying on live sports post-subsaturation. Indian sugar stocks rallied sharply after the government removed all restrictions on ethanol production from sugarcane juice, syrup and molasses for 2025 to 26 ethanol supply. So this decision allows mills to produce unlimited ethanol from sugarcane derivatives, enhancing the profitability for sugar producers. The Supreme Court also dismissed a petition challenging the nationwide rollout of 20% ethanol blended petrol, cementing the government's biofuel agenda. Ethanol production from sugarcane accounted for 33.9% of total ethanol output in ESY 2024 to 25. Major sugar companies like Balrampur Chini, Sri Renuka, Bajaj Hindustan and Eat Parry have significant ethanol capacities, benefiting from these policy tailwinds. Motilal Oswal upgraded Phoenix Mills to buy, seeing a 35% upside potential. The bull case highlights new malls achieving 94% trading occupancy within 6 to 8 quarters and a robust 12% growth in total mall consumption in Q1 of FY26. The company also plans to triple its hospitality portfolio to over 1,800 keys with new premium hotels. On the bearish side, retail rental income growth is the slowest in 9 quarters, with tenant churn and ongoing mall revamps causing a consumption slowdown. Trading occupancy declined in Q1 of FY26 and new hotel projects involve a substantial capex of 10 billion rupees. So analyst recommendation includes 14 buy, 1 hold
and 2 sell ratings with an average upside of 13.3%. India's defense sector is buzzing with the Nifty India Defense Index surging 3.7% over the last 2 sessions to around 7,535 rupees, driven by strong order inflows and upcoming deals. The index rose 0.83% in the past month but remains down 15% over 3 months, reflecting volatility amid global tensions. So key stocks like Cochin Shipyard, Mascon Dock, Shipbuilders Garden Reach, Shipbuilders in Paris Defense rallied up to 5%, fueled by reports of 2 mega submarine contracts with worth over 1 lakh crore rupees expected by mid-2026. So one for 3 Scorpion class subs with France's naval group and another for 6 stealth diesel electric subs with Germany's ThyssenKrupp Marine Systems. NTPC Green Energy Limited has declared the commercial operation of its 25 megawatt solar power project located in Bhuj, Gujarat. Now, the capacity addition is part of a larger 150 megawatt of solar project in the region. The commercial operation, which commenced, is boosting the NTPC Green Energy's total installed capacity to 7,272.57 megawatt. Now, this expansion reinforces NTPC's commitment towards renewable energy and India's clean energy transition goals. The Bhuj solar project contributes significantly to increasing the green energy footprint of the NTPC group, aligning with its strategy to diversify its power generation portfolio and also reduce carbon emissions. United Breweries Limited has commenced production of its flagship Kingfisher beer at the newly leased Ilios Brewery in East Godavari, Andhra Pradesh. So the facility adds a monthly capacity of up to 4.5 lakh cases, complementing UBL's existing Srikakulam Brewery's 12 lakh case capacity. With this expansion strengthens UBL's manufacturing footprint also in Andhra Pradesh, enabling the company to meet the rising consumer demand and also improve supply chain efficiency in the region. UBL's leadership highlighted that the initiative as a crucial step for sustainable growth and also local economic support, underlining its commitment to delivering high-quality, locally brewed beers. Jindal Poly Investment and Finance, a holding company focused on group investments, saw its stock rise 33% over 5 days to 722 rupees with a 66% spike in 6 months despite an 8% daily drop. So Jindal India Powertech ceased as a material subsidiary in March 2023, becoming an associate. Jindal Poly films in flexible packaging with BOPP, and CPP films traded at 609 rupees, down 3.3% today and 39% year to date, with a 2,574 crore market cap. Jindal Photo, now an investment firm after merging operations into Jindal Poly Films in 2015 to 16, closed at 1,029 rupees, which is down 10% today, but up 32% in 5 days. So market cap is 1,057 crore rupees. A 2022 delisting offer at 268 rupees failed. Quarter 1 of FY26 net profit rose 10.4% to 52 crore rupees. Indraprastha Gas Limited, that is the IGL, has signed a joint venture agreement with Rajasthan Rajya Vidyut Utpadan Nigam Limited to set up a solar power project in Rajasthan. The JV will have equity participation of 74% by IGL and 26% by RVUNL. So the board of directors for the JV will consist of 6 members, with 4 nominated by IGL and 2 by RVUNL. The JV aims to leverage Rajasthan's solar potential as part of India's renewable energy targets. This marks IGL's significant step into the renewable energy sector, diversifying its business portfolio. Tesla's much-hyped India entry is off to a sluggish start. Now, since launching sales in mid-July, the EV giant has received just over 600 bookings, which is far below the expectations. Globally, Tesla delivers that many cars every 4 hours. So the company now plans to ship only 350 to 500 vehicles to India this year, with the first batch arriving from Shanghai in early September. Tepid demand is raising fresh concerns about Tesla's global growth momentum. Let's now give you key updates from SEBI. the market regulator has given the green light to 13 companies to launch their initial public offerings. Now, the list includes some big names like Boat, Urban Company, and Juniper Green Energy. Now, Imagine Marketing, Imagine Marketing is the parent company of Boat, is also planning to raise 900 crore rupees through fresh issue and 1100 crore through an offer for sale. So, Urban Company, on the other hand, is looking to raise 1900 crore rupees through a mix of fresh issue and OFS. And also other companies that received SEBI approval include Allchem Life Sciences, Corona Remedies, Jain Resource, Recycling, KSH International, Mori Tech, Om Freight Forwarders, Omni Tech Engineering, and Pace Digitech. SEBI has also set new intraday limits for index options trading. Net position capped at 5,000 crore rupees per entity, gross at 10,000 crore rupees. Exchanges must take 4 random snapshots daily to monitor trades. Penalties will apply for breaches on expiry days from October 1, 2025. The market watchdog may launch a platform to regulate the pre-listing trades in IPO-bound firms. So the move targets the 3-day window between allotment and listing. Aim is to improve price discovery and also investor transparency. Proposal is still under review by SEBI's advisory committee. Prime Minister Narendra Modi has unveiled India's semiconductor vision, calling chips digital diamonds. The country aims to become a global hub for electronics manufacturing and design. To achieve this, the government has launched several initiatives, including the India Semiconductor Mission. The government was proposing a massive GST rate cut on over 150 items, which could result in a revenue loss of 5,000 to 6,000 crore rupees. The GST Council is considering slashing rates on essential items to provide relief to consumers. Some of that items could see a rate cut include television sets, air conditioners, and everyday items like personal care products. So the council is also discussing merging the 5% and the 12% tax slabs into a single rate. So the proposed rate cut is expected to benefit the consumers and also boost demand for essential items. However, it could also lead to a significant revenue loss for the government. Gold prices have surged to record highs, breaching 93,000 per 10 grams for 24-karat gold. Experts predict that gold could reach 1 lakh rupees per 10 grams by the end of 2025, which is driven by robust global demand amid recession fears, currency devaluation, and central bank policy shifts. In India, gold prices have been fueled by a mix of geopolitical uncertainty, tariff shocks, and also expectations of interest rate cuts. India's stock market stays resilient as domestic institutions ramp up buying, nearing a record $59 billion in 2025. Foreign investors, meanwhile, have pulled out over $15 billion, shifting focus to China. Retail inflows remain strong, with households favoring equities over gold and property. For the first time, local ownership of the listed firms has overtaken foreign holdings, marking a major shift in the market dynamics. India is aiming to expand pharmaceutical exports to Russia, Brazil, and Netherlands to diversify beyond its top market, the United States, amid growing tariff concerns. Although US remains the largest pharma export destination with over $10.5 billion in sales for fiscal 2025, uncertainty around tariffs has prompted India to seek new markets. Exports to the Netherlands and Russia stood at $616 million and $577 million respectively in fiscal 2025, while Brazil accounted for $778 million. Now, India's pharmaceutical industry, which is a global leader in generic drug production, is actively broadening its export base to ensure sustainable growth and reduce the market risk. The Board of Control for Cricket in India, that is the BCCI, is on the hunt for new sponsors. After terminating its deal with Dream 11, the BCCI has invited bids for lead sponsor rights. Interested bidders will need to have an average turnover of at least 300 crore rupees over the last 3 years, or an average net worth of 300 crore rupees. So the invitation for expression of interest will be available for 5 lakh rupees. Notably, Bidders involved in online gaming betting or gambling services are ineligible. So crypto services and surrogate brands are also not allowed. IndusInd Bank appoints Pragati Ghundalikar as internal audit head. She was previously head of group audit at Deutsche Bank India. Now, this is the first key hire under new CEO Rajiv Anand. Comes after past accounting lapses in derivatives and microfinance. The Yamuna River in Delhi breached the danger mark of 205.33 meters, reaching 205.80 meters at the old railway bridge by 8 a.m. on September 2nd. Now, due to heavy discharges from Hatni Kund barrage, the Central Water Commission predicts the river may hit the evacuation level of 206 meters by evening, triggering flood alerts and the closure of the old railway bridge. Authorities are urging residents in low-lying areas to relocate as the river continues to rise, which is fueled by upstream rainfall. Relentless rains in Punjab have affected hundreds of villages. The state's worst floods since 1988 have caused severe damage to homes, infrastructure and crops, with critical concerns over food security. The National Disaster Response Force has deployed 20 teams to flood-hit regions, aided by 10 columns of the Army, Navy and Air Force and Border Security Force. Telangana lawmaker K. Kavita has been suspended from the Bharat Rashtriya Samiti, that is the BRS, the party run by her father and former Chief Minister K. Chandrasekhar Rao, after she publicly blamed senior BRS leader T. Harish Rao, her cousin, for the federal investigation against KCR. So the allegations came a day after the Congress-led government in Telangana handed an investigation into alleged irregularities concerning the Kaleshwaram project to the CBI. The Delhi High Court today denied bail to Umar Khalid, Sharjeel Imam and 7 others in the 2020 Delhi riots conspiracy case under UAPA. The bench, led by Justices Naveen Chawla and Shalinder Kaur, upheld the trial court's decision, citing evidence of a planned conspiracy. The prosecution alleged the accused incited violence through speeches and WhatsApp groups targeting the CAA NRC protests. Despite long incarceration, the court ruled that the gravity of charges outweighs the bail claims. The riots left 53 dead and over 700 people injured. A powerful earthquake has struck western Afghanistan, leaving widespread destruction and a rising death toll. Rescue teams are racing against time to reach the survivors trapped under debris. Entire villages have been flattened, with hundreds feared dead. The government has declared a state of emergency as aid agencies mobilize the relief efforts across the affected region. Chelsea striker Nicholas Jackson has completed a £70.5 million transfer to Bayern Munich, starting with a loan and an obligation to buy for £56.2 million based on appearances. So the 24-year-old Senegalese forward, who scored 30 goals in 81 matches for Chelsea since joining from Villarreal in 2023, saw the deal nearly collapse due to Liam Delap's injury. Bayern will pay a £14.3 million loan fee, with Jackson signing a 5-year contract. Australian pace bowler Michelle Stark, aged 35, has retired from T20 international cricket to prioritise Test matches and the 2027 ODI World Cup, as announced on September 2, 2025. With 79 wickets in 65 T20Is, Stark, a key figure in Australia's 2021 T20 World Cup triumph, aims to stay fresh for major tours like the Ashes and the India Test Series. So Test cricket has always been my highest priority, Stark said. He remains committed to domestic T20 leagues like the IPL and will continue playing ODIs, targeting a rare third World Cup title. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere. Stay tuned to NDTV Profit.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in that?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in that?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
Benchmarks reverse gains on expiry. Volatility. Nifty ends below 24,600 while Sensex finishes over 200 points lower. Most sectors end higher with FMCG as the top gainer. Not black gold but digital diamonds or semiconductor chips are the way to go for India, says Prime Minister Modi. The first Made in India chip is presented by IT Minister Ashwini Vaishnav at the Semicon India event in Delhi. An NDTV Profit exclusive, market regulator SEBI mulls regulation of pre-listing trades in IPO-bound firms. A platform is being considered for this move. Domestic air traffic is about to see a decline in Q2 for the first time in many quarters. Data from Aviation Ministry suggests close to 2% fall in the first 2 months of the quarter. However, international air traffic continues to grow for domestic players. GST Council is set to meet on the 3rd and 4th of September. The Council will decide on Centre's proposal to slash GST rates on over 150 items in a move aimed at easing the tax burden. Floodwater enters Delhi NCR homes as Yamuna River's water level crosses the danger mark following incessant rainfall overnight. Schools have been ordered to remain shut as a precautionary measure. Maharashtra Cabinet holds its first meeting with Manoj Jirange Patil. Senior ministers Radhakrishna Vikhe Patil, Minister Manikrao Kokate, Minister Shivendra Raje Bhosle, amongst others, are present in the meeting.
Hello and welcome. A very good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news to follow along. Let's begin with checking how the markets fared today on this Tuesday. Markets ended a choppy day of trade in the red. Nifty declined to end the day below 24,600 and the Sensex also shed over 180 points. Most sectors ended in the green than in the red, with the sectoral picture looking largely mixed with FMCG, defense and media leading the gains. Puneet, now my colleague joins in with a wrap of all the market action of the day.
Well, it's been a day where we've seen selling come across over the last hour and a half or so, and that's essentially dragged the Nifty in the red. At one point of time, we were up almost 70 to 80 points on the Nifty, but we've failed to maintain 24,600 as the key level and seen selling across the board post that. We've ended in the red, and largely having a flat to a negative bias on the Nifty, but the broader markets did outperform essentially the benchmark index today, while giving up its gains as well. We've seen, the top Nifty losers be largely Mahindra and we saw that clarification of the news flow come in terms of GST, which could impact the luxury EVs. And from then on, M&M couldn't recover at any point of time. We've also seen Dr. Reddy's also be another top loser for the Nifty today. When you look at some other key aspects, the Nifty FMCG was one of the indexes that was the top gainer for today. That was led by Dabur amongst other stocks. But overall, sectors such as sugar dominated the news flow from the start of the day. Government allowing increase in ethanol production or no restriction essentially on ethanol production, and that drove sugar stocks by roughly 10 to 13%, including Balrampur Chini as well as Sri Renuka Sugar. In terms of mid cap and the small caps, those did end with a slight bias towards the green, but did give up all its gains. Both indexes were up roughly 0.7 to 0.8% in trade today as well. We've seen in terms of the sector indices, the Nifty Metal, Realty, PSU Bank gained for the second consecutive row, while sectors like Pharma were under pressure today as well. In terms of stocks, I mentioned sugar stocks were impacted positively. We also saw some positive momentum in the tire stocks like Seat, Apollo Tires amongst others, and some buying was also seen in the textile companies as well. But overall, it'll be important if we can maintain 24,500 as the support for tomorrow. We had the first expiry on Tuesday for the Nifty today, and the bottoming out essentially will be happening for the Nifty at 24,400, but that remains to be one of the key levels to watch out for at least as we go into September.
Right, and as markets ended a choppy day of trade, it looks like that the Indian aviation may witness more turbulence in the second quarter. After a dip in domestic air traffic in the first quarter, the second quarter could mark the first year-on-year decline in a long time. The big question now, however, is how will airline stocks react and what trends are we seeing in the international travel space? Let's go across to my colleague Somit for all the answers.
Well, yes, the airports and airlines might be packed for few routes, but overall air traffic data is not that good, at least that is what the data is suggesting. Now, it is fairly known that Q2 is a seasonally weak quarter, but this time around the second quarter might mark a decline for the very first time in many quarters that we are seeing. Now, if you look at the domestic air traffic data that we are currently seeing for the first 2 months of the second quarter of FY26, we are seeing a downtick of nearly 1.7% in the second quarter. Now, if you look at this data, yes, Q2 might record a first downtick in many quarters, and if you look at the data that of the air traffic that we are seeing so far, it stands at around 260.2 lakh passengers total have travelled in the second quarter of FY26 compared to 264.6 that we had seen last year, clear downtick of 2% odd. Also, the daily average air traffic has come down to 4.2 lakh from 4.3 lakh that we had seen last year. Now, if you look at the Q-on-Q data, obviously it will show a decline, but don't be disheartened by that, given the fact that Q1 is a very seasonally strong quarter and Q2 is not. So Q2 will always see a decline compared to Q1, but the YOY decline is something that is surprising the street this time around. for the domestic air traffic. Now, if you look at the international air traffic, that on the other hand shows a strong growth. In fact, growth that we are seeing for all the domestic players. The number stands at around 67.1 lakh passengers that have flown so far in the first 2 months of Q2 FY26 as compared to 63.4, which is a clear growth of around 5%. Also, the daily average air traffic has increased to 1.08 lakh from 1.04 lakh that we had seen last year. Again, here also, if on a sequential basis, if you look at the data, it will show a decline because Q1 is a seasonally strong quarter. But on the positive side for airlines, specifically for Indigo, the passenger load factor, which is a measure of capacity utilization, that has increased on a YOY basis to 85% from 83.7%. But the reason behind this is that Indigo has been cutting down on the number of flights. So far, they have reduced their capacity by around 12% in the second quarter compared to what we had seen, the peak number that we had seen in 2025. And this is the main, and this also clearly indicates that the air traffic is weak so far in the second quarter. Now, the peak daily traffic, that average daily flights that Indigo had was in Feb 2025, where they flew around 2,300 flights on a daily basis. Now, this has come down to 2,033, a clear downtick of around 12%. And this also clearly reflects that the second quarter air traffic is expected to be on the weaker side. However, they have done this to manage the passenger load factor so that at least the capacity utilization remains on the higher side for Indigo in the second quarter. Now, if you look at the valuations of Indigo, the 12-month forward valuation stands at 10.3 times, which is a discount compared to what the 5-year average is at around 10.7 times. We are talking about EV to EBITDA for Indigo at this moment. And if you look at the analyst valuation, they also continue to be quite bullish on the counter. So the consensus target price of 6,350 indicates a return potential of 13%, while the highest target price stands at around 7,256, which suggests a return potential of nearly 29%. So the key question is here, now will September month show a recovery or not, because that will clearly move the share prices for Indigo now going.
A recovery or not, but we'll continue to track that story on air traffic. But let's get you an NDTV Profit exclusive. Sources tell us that the market regulator SEBI may launch a platform to regulate pre-listing trades in IPO-bound companies. My colleague Charu now joins us with all the exclusive details.
So the market regulator Securities and Exchange Board of India is mulling ways in which unlisted shares and unlisted trading can be brought under its scrutiny. So this is something that has been hinted at by the SEBI chairperson already, but what the regulator is currently mulling is to increase the pre-IPO session, which is currently a very small window, into a much more extended time. So between stock allotment day and the listing day, the 3-day window, they are thinking about extending this 15-minute pre-session window to these days, so that any sort of price discovery related issue do not arise, and the entire process of price discovery basically also becomes much more streamlined. Now, this is also something which will allow the regulator to sort of get a small chunk of the grey market under its scrutiny without really changing a lot of regulations. Otherwise, getting unlisted securities under its purview would have become a very big challenge, and a lot of tweaks would have been required. Even this will be a daunting process, but the regulator is thinking about extending this pre-IPO session window so that this period can be brought under its scrutiny. Now, this is going to be a platform, as mentioned by SEBI as well earlier, which is going to also give investors some detailed disclosures about the securities that they will be trading in, so that it becomes much more convenient and transparent for them to engage in this sort of trading. Apart from this, we must understand that this is not the first time that a conversation and exploring around the topic is being done. Before her retirement, the previous SEBI chairperson as well mentioned that they are thinking about bringing a when-listed mechanism where unlisted shares, pre-IPO shares, could be traded.
And an interesting comment by Prime Minister Modi. He took a dig at US President Donald Trump today. He said that despite challenges created by economic selfishness, India had managed to maintain a high rate of growth. He was speaking at the launch of the Semiconductor India event in Delhi today. Let's listen in to his comment.
एक तरफ जब दुनिया भर की इकोनॉमी में चिंताएं हैं, आर्थिक स्वार्थ से पैदा हुई चुनौतियां हैं, उस माहौल में भारत ने 7.8% की ग्रोथ हासिल करके दिखाई है.
And echoing the strong stance, Commerce Minister Piyush Goyal reiterated that India would continue negotiations on the bilateral trade agreement, but not on deadlines set by the US. Let's listen in to him as well.
think you have heard me say it very often that we never negotiate trade deals with deadlines. We only negotiate for a good deal, fair, equitable, mutually beneficial.
And a crucial update on India's semiconductor infrastructure. Prime Minister Narendra Modi received India's first made-in-India semiconductor chip at the launch of Semicon India 2025 in New Delhi today. Union IT Minister Ashwini Vaishnav presented the Vikram 32-bit processor built by ISRO's Semiconductor Lab along with test chips from 4 projects. At the same event, Prime Minister Narendra Modi said the global chip market is heading towards $1 trillion and India is set to play a bigger role. With $18 billion worth of investment in 10 projects under the India Semiconductor Mission, he said the country is on track to become a semiconductor hub.
ये चिप भले छोटी सी है, लेकिन इसमें दुनिया की प्रगति को बड़ी गति देने की ताकत है। और इसलिए ही आज सेमीकंडक्टर्स का ग्लोबल मार्केट $600 बिलियन तक पहुंच रहा है और अगले कुछ साल में ये $1 ट्रिलियन को भी पार कर जाएगा। और मुझे विश्वास है भारत जिस तेजी से सेमीकंडक्टर सेक्टर में आगे बढ़ रहा है, इस $1 ट्रिलियन मार्केट शेयर में एक अहम हिस्सा भारत का रहने वाला है। कुल मिलाकर सेमीकंडक्टर के 10 प्रोजेक्ट्स में $18 बिलियन यानी 1.5 लाख करोड़ रुपए से अधिक का इन्वेस्टमेंट हो रहा है।
And to know all the other exciting details from Semicon India 2025, let's go across to my colleague Rishabh Bhatnagar, who attended the event for more details.
NDTV Profit is here at Semicon India 2025. Of course, it started all with the Prime Minister's keynote, as well as Union Minister for Electronics and IT, Ashwini Vaishnav, making some very interesting remarks about the progress of India's semiconductor ecosystem. Firstly, it was started with the first Made in India chip being presented to the Prime Minister by Ashwini Vaishnav. What was also interesting about this first chip is that this is designed by ISRO's Semiconductor Laboratory. This is the Vikram 32-bit processor that was presented. Apart from that, you had the announcement of the $1 billion fund by Celesta Capital and other founding members of the India Deep Tech Alliance. What we're also seeing, and a very interesting comment from the Prime Minister, was that oil was the black gold, but in the 21st century, it is chips that are the digital diamonds. That's what he referred to semiconductors as. What we also saw is the fact that he said that the previous generation was shaped by sort of how much oil was being drilled, how many oil barrels a country has. But a country like India, the future will be defined by the sort of chips that that can be put out. What we also saw is the fact that with the global semiconductor market reaching to about $1 trillion, India will have a major role to play in that. That is also something that the Prime Minister said. He also added that speed matters in semiconductors, and the lesser the paperwork, more the wafer work. That was the Prime Minister's statement on that as well. Apart from that, he also said that India's smallest chips will drive some of the biggest changes that will come with respect to semiconductors globally. He also made a mention of CG Semi's plant, which also NDTV Profit covered, the first Made in India chip to be rolled out from there. Apart from that, Keynes Tech, their pilot line is also set to inaugurate. What we also saw is that India's first set of commercial chips will also be rolled out. That's something that the Prime Minister said. And he also said that the next phase of the India Semiconductor Mission 2.0, that will also be rolled out very, very soon. That is something that we picked up from the Semicon India 2025.
In fact, Rishabh also spoke exclusively with IT Minister Ashwini Vaishnav on India's first fully indigenous microchip, Vikram, that was unveiled at Semicon India 2025. Let's listen into that conversation as well.
See, one good thing is world's confidence on India's semiconductor ecosystem is so clearly visible. This time we have almost 500 global leaders and executives coming from more than 40 or more than 45 countries. And we have practically every large ecosystem player present here. All the equipment manufacturers are here. ASML also is present this time. And the momentum which has got generated in the last 4 years is quite visible.
So, digital diamonds is what the Prime Minister said.
How are you? Good to see you again. Yeah.
Digital diamonds is what the Prime Minister said. So, what are some bold innovations that you're looking forward to this time around?
So, this is the time when we are setting the foundation of this industry. And this is a foundational industry, as Honorable PM said. Like steel is foundational for entire infrastructure. For digital infrastructure, semiconductors are foundational. So that's why our first focus is to cover all the major sectors which we have covered: automotive, telecom, power electronics, defense, strategic, consumer electronics. The ecosystem, which is like more than 500 chemicals and 50 odd gases, they are all here now. Today we had Merck getting into a joint venture with one of the Indian partners. So those things are there. Lam Research investing more than $1 billion. Celesta Capital has collected almost $1 billion kind of fund. And we have the first Made in India chip coming from this very place, CG Semi.
And continuing with our coverage of the Semicon event, we caught up with Amit Sharma, who is the MD and CEO of Tata Consulting Engineers. Speaking at the Semicon event, Amit Sharma stated that after 6 decades of pioneering projects, TCE's collaboration with the nation's top engineers and global partners is now focused on building India's semiconductor ecosystem. He highlighted the speed of this progress, noting that the project moved from a vision to reality in just under 3 years. Let's listen into him as well.
So, Tata Consulting Engineers is a design, engineering and project management consultancy firm. We've been in business for 63 years. And what we've done over the last 6 decades is do the most pioneering and first-time projects in India. So, be it high-speed rail or astrophysics or the work with Chandrayaan at ISRO or the nuclear sector in India, TCS has been working as engineers to the nation. We started on our semiconductor journey 4 years back, and we have worked in the electronic space, in the battery plants, solar cell modules, now in fab as well as OSAT. I think today is a historic day when that Honorable Prime Minister was presented by Honorable Minister Ashwini Vaishnaw ji of the first Make in India chipsets. And it's important because it really puts India on a global map. From the vision to really making this happen, it's been less than 2.5 years. And we've seen amazing pace of ISM and so many companies that have come together. This industry is a very dynamic industry, and it really requires you to collaborate and partner. And what we've done over the past 3 years is to partner with the best in semiconductors, because we're learning a lot at the same time, with teams from Taiwan, Singapore, US, Germany. And with that collaboration and teamwork, we are making things happen for our customers.
And a crucial update on GST. In the run-up to the 2-day GST Council meeting, officials from centre and states are meeting today to set the tone for what's been called a landmark tax reform. Rate cuts are on the table for over 150 goods and services, including daily use items, medicines, cars, and even insurance. If approved, the changes could take effect around September 22nd. Let's go across to my colleague Shrimi to tell us more on all the powerful council's big bang agenda.
Well, absolutely action-packed agenda, as the key focus of this massive GST revamp is the daily use item. Right from your ghee to butter to toothpaste, your shampoo, paneer, namkeen, parothe, milk powder, you actually name it, which is currently in the 12 and 18%, could come down to the 5% slab. In fact, all your medicines, the pharmaceutical drugs, your medical equipments, your BP machine could come under the 5% bracket as per the current proposal. Cement, again a very important item, currently attract 28% GST, maybe slashed to 18%, and that is something could lower your housing and infra cost. Now, small hybrid cars below 1200 cc's, of course, if you're planning to buy, car, you could see GST slash from current 28% plus cess to just 18%. Similarly, your motorbikes below 350cc maybe benefit from the lower GST rate, as it could also go to the 18% bracket. In fact, the indication coming for this tractors also, for buses also, it all could go to the lower bracket of GST. Now, life and health insurance premium may be fully exempted from GST, a long-standing demand and going to ease the financial burden massively on individual, on policy holders. That could also, see light of the day. GST Council is also expected to address the services, which is currently, spread across 12, 18 and 28%. For example, hotel rooms priced up to 7,500 are taxed at 12%. If you go above that, it will, charge 18%. Similarly, the business class air travel and the economic class, they have different tax slabs. Now, the proposed changes aim to bring consistency and to remove all sort of anomalies, even in the services sector. On the other side of the spectrum, of course, you have a special 40% GST rate which is being proposed for all sort of high-end and thin goods, including, luxury cars, sedans and mid-size SUVs, motorbikes above 350cc, carbonated beverages, as well as, the tobacco, cigarettes and all sort of chewing and tobacco items. Now, those getting expensive or not is something the suspense is still on, as it will depend on how central state going to phase out the compensation cess regime and whether it could be replaced with an additional levy or it could subsumed with the, existing GST rate. That is something we need to watch out for. But for final decision, of course, rest with the GST Council, which will meet in full on September 3rd and 4th at the Sushma Swaraj Bhavan, New Delhi. But one thing is clear, is what indication we are getting, that the final decision, the final reform, the GST 2.0, all those decision is expected to be implemented around September 22nd, coinciding with the Navratri festival.
And the Board of Control for Cricket in India is on the lookout for a new lead sponsor after parting ways with Dream 11. The BCCI has now invited fresh bids for the coveted sponsorship rights. For context, Dream 11 withdrew their sponsorship, citing compliance with a new law that bans companies from offering or advertising real money gaming services. Let's go across to my colleague Agni, who has all the details on this development.
So the BCCI is finally looking for a lead sponsor for the Indian national team of cricket right after they have terminated the partnership with Dream 11. Remember, the termination of the deal with Dream 11 came recently as online gaming, real money gaming, was banned by the government of India. There was a lot of fallout. Dream 11, which had a contract from 2023 to 2026 cycle for a period and with a deal worth around 360 crore, saw that deal fall out because of this online act. Now the BCCI has come out and put certain conditions as to who can and cannot apply for the lead sponsorship role. So invitations for the expression of interest, which is the EOI, will be made available for rupees 5 lakh plus GST. So if you add the GST, it comes close to around 6 lakh, and that's also around the same amount that an Indian entity as well as an international entity will have to pay to get an invitation for the EOI. Now bidders are also required to have an average turnover of at least rupees 300 crore for the last 3 years. Alternatively, bidders are required to have average net worth of at least 300 crores for the last 3 years. Now remember, since this is happening on the back of the fallout of the Online Gaming Act, BCCI has put certain conditions as to who can and cannot apply. So bidders engaged in online money gaming, betting or gambling services are specifically declared ineligible, but that's not all. Also, bidders engaged in crypto services, surrogate brands are also disallowed. So the logic behind this is, if any other day a regulation comes which shuts shop for crypto platforms and services across India, then it should not affect the BCCI's sponsorship deals. So as of now, this is all the details that we have. We'll keep bringing you more updates as and when bidders apply for the sponsorship, so do stay tuned.
And on to an extremely important international national story. Relentless rains are affecting North India. Punjab is witnessing the worst floods it's seen since 1988, which are causing severe damage to homes, infrastructure and crops, with critical concerns over food security. The National Disaster Response Force has deployed 20 teams to flood-hit regions, aided by 10 columns of the Army, Navy, Air Force and Border Security Force. Meanwhile, the Yamuna River in Delhi breached the danger mark of 205.33 meters, reaching 205.8 meters at the old railway bridge due to heavy discharges from Hathni Kund Barrage. The Central Water Commission predicts the river may hit the evacuation level of 206 meters by evening, triggering flood alerts and the closure of the old railway bridge. Authorities are urging residents in low-lying areas to relocate as the river continues to rise, fueled by upstream rainfall. And that's a wrap on this edition of Profit 360, viewers. But do stay tuned to the channel as we continue to give you a lot more news and updates.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello and welcome to NDTV Profit. You're watching Know Your Company, that is KYC, a proprietary show that actually tells you what the company is all about, what an investor should do, what are the concerns, opportunities and threats that come in there. I am Hiral Datia and with me is Puneet Javeri. Puneet, an interesting company that we're talking about today is Asandhar Technologies. If you talk about the company as well, just a quick understanding of why we are talking to Asandhar Technologies. Firstly, we are going to actually understand the growth outlook for the medium term, because when you talk of Asandhar as well, last couple of quarters, I would say, revenue and profitability growth has been strong. Margins, there has been some bit of a concern that has come in. So that's going to be one aspect. And secondly, the other angle that we're going to explore is the company's plan with regards to where debt reduction goes, because on the consolidated books, the debt is a problematic area right now.
Well, that's definitely one of the key aspects, and with that we've also seen an increase in interest costs, so that will be one to watch out for. The other key aspect will be rationalization of joint ventures. Now, they have already sold off a couple of them. If the other ones could be profitable, that will be one to watch out for. And finally, strategy for the company to increase its share of exports. Now, with rationalization of joint ventures and the loss-making ones now disposed of, how will the growth of the export market come for the company? That will be the other one that we'll be targeting as.
So these are the 4 questions that we have in mind with regards to Sandhar. But let us quickly tell you what Sandhar Technologies is all about. To start off with, the company is into manufacturing and assembling of automotive components. That's their primary business. And they also look at safety and security systems for automobiles across segments. If you talk about their revenue split as well in terms of categories, let's just quickly look at the two-wheeler, passenger vehicle, off-highway and CV segment. Between all of this, 60 to 64% of their revenues actually come in from the two-wheeler category. Passenger vehicles was 20%, it's gone down to around 17%. Your off-highway vehicles has remained absolutely stable in the last 2 years in that 15 to 16% kind of range. But CVs and others is very minuscule. But majority right now is coming in from the two-wheeler category, and that has been the space which has been evolving as well. If you talk about all the Vahan data that has come in so far, the auto sales numbers that are coming in as well, there is a story which is building up in the two-wheeler segment. So probably you are looking at a Sandhar Technologies from that angle.
Definitely, and it has been outperforming the growth essentially in the passenger car segment, and that seems to be a positive for Sandhar among other auto component makers as well. Let's quickly look at the product-wise segment as well, and here also you will see a bunch of products that the company operates in, but there are some that we need to focus on in terms of growth, and when the management comes, we'll be quizzing them on that. The sheet metal business is one, almost 1/5 of the revenues comes from this, and when you look at the ADC overseas and the domestic business, this is aluminum die casting essentially business, which one of them they've acquired from Sundaram Clayton. That also forms a considerable part of the revenue. And then there's the locking system. They are looking to enter the smart lock space as well, and they are expecting some unit performance in there. Amongst the other segments, which you look at, cabins and fabrications is the other one, which is largely in the off-highway space and the CV space. We saw some impact in this quarter because of that, and we'll see if we can get that kind of growth guidance from the management for these segments. But largely, Vision Systems is a new business that the company focuses on. But these 2 to 3 business verticals is key for Sandhar in terms of growth prospects, and we'll be quizzing the management on that.
Absolutely, but let's quickly take the viewers through all the rating parameters that we are considering. The income statement, balance sheet check, cash flow, return ratios, these are the top 4 parameters that we will be taking you through for Sandhar Technologies. Apart from that, shareholding, street credentials, the coverage is slightly muted, and the valuation picture is what we will be considering as well when it comes to Sandhar Technologies overall. But let's quickly start with the income statement. If you see in terms of the revenue as well as the profitability, it has been a strong number that the company has reported in the last couple of years. If you see the 3-year compounded growth as well, a 19% is what you're seeing in terms of the top line. The profitability as well is 36%, which is very strong. I think the major concerning area over here which comes in is in terms of where the margins go, because they've remained muted in that 8 to 10% kind of a bracket. If you talk about compounded, it's around 6%. When will the company come back to that double-digit kind of a margin profile is the key question over here. Though on the back of the revenue, EBITDA and net profit, we have given it a thumbs up so far, but the margin is going to be slightly concerning, and that's what we will check with the management.
Well, definitely. And the other aspect is on balance sheet. Let's quickly pull that up as well, because we've seen roughly about 1100 odd crores of reserves and share capital is what the company holds. The reason we've given this neutral rating is largely because of the higher net debt that the company has. While roughly about 740 crores of net debt is what the company holds, when you compare that net debt to the equity ratio, you come somewhere around 0.6 times. And this has been impacting the profitability because of the higher interest cost, something that the company has taken cognizance of. They are looking to reduce debt, but the timeline is something to watch out from when the management joins us. The other aspect is cash in bank, largely maintaining at 80 to 100 crores, but they have been steadily increasing that with the increase in cash flow from operations, and that's the next aspect that we're looking at.
Right. Let's also look at their cash flow. You know, it's very interesting to see because they have seen a good growth that's coming in terms of FY25. If you see the cash flow number, that's the net one, it's at 58 odd crores from a negative number in FY22. And from there, the growth has been spectacular. Their cash flow from operations has also seen a substantial growth. The key from here on is going to be how sustainable is the net cash flow and the cash flow from operations going to be if you have to take FY25 as a base from here on, which will improve, or will it remain stable, or is there a potential for any deterioration to happen? That will be key.
Well, the other one, and in terms of cash flow as well, we've seen a steady increase over the last 2 to 3 years, and that is a positive for the company. The only aspect is the rationalization of joint ventures, and we'll get to that in just a bit. The other metric that we are also looking at is return ratios as well as shareholding. So let's pull up return ratios first. Have been steadily improving as visible on the last 4 years, but compared to the other auto ancillary companies, it is lagging in terms of the return on capital employed, which normally operates between the 12 to 15% for most auto ancillary companies. So in comparison of its own performance, while it has steadily improved, we've given this a neutral rating on just given the historical performance as well as what's happening in the sector. A similar trajectory is for return of equity as well. We've seen profits increase and ROE is almost doubled from the FY22 levels. But essentially, we will need some more constructive aspects of the newer business that the company will invest in, because the return on capital employed ratio will have to go up from these levels. And that's been one of the pain points for the company over the past few years.
Right, but moving from here on, let's quickly understand the shareholding pattern as well. It's interesting to see that the promoter stake has been absolutely steady over the last couple of years. But if you look at the FIs, DIs and the public, FIs did see somewhat of an uptick in FY24 to around 1.5%, but again, it's come down to around 0.8%. DIIs as well has been steady in that range of around 15 to 16.5%. Your public, again, the free float is absolutely on the lower side, around 13% is where it is at. So again, this is a pretty positive in terms of the steadiness that you've seen, but the key will be if the management is in conversations with any FIs, DIIs with regards to, coming in as an investor into the company to see growth from here on, because that could be a positive trigger.
And that certainly has been one of the key ones for them as well in the near term, if they are looking to do that as well. But the other one that we're also looking at is the street cred, essentially. Since listing in 2018, it has been a disappointing performance for the company, and that was impacted because even on a YTD basis, the stock is down 10%. In the last 1 year, it's down 22%, but compared to the 2018 levels, the stock's just up 35%, and that's underperformed the Nifty benchmarks by a mile, because we've seen Nifty go up from roughly about 7,500 essentially in 2020 to almost 25,000 now. So it's almost a 2.5-3 time increase. But for Sandhar specifically, while the last 5 years they've grown by 100%, since listing, those investors who stayed on have not got that kind of returns that they should have in a high growth company. So we've given this a thumbs down on that aspect. And street coverage is also based on this performance that the company has been, because it's been limited, Hiral.
Okay, so that's with regards to where the street credentials go. But let's understand where the valuations of Sandhar Technologies actually stack up. If you have to look at overall currently, FY26, the price to earnings is around 18 times, and hence we've given it a neutral rating. In fact, Puneet, if you have to look at the historical aspect as well, because you've been tracking the sector pretty closely, if you're looking at 18 times, would you say it's cheap or expensive in comparison to peers? Let's forget, the different segments of business, but if you have to just not do a like-to-like, but just compare it to another auto ancillary company, 18 times valuation, where would you place it?
Well, definitely it's a positive in that aspect, because we've seen companies, the newly listed ones like Bellrise as well, and we spoke to them during our India Market Open show, started at 18 times price to earnings for during the IPO, and then has steadily increased over 50% since the issue price. So the market is rewarding growth. That's largely been absent for Sandhar. So and even if when the growth has come in, it's not been profitable. So that's the reason why we've also seen just a couple of analysts that track the stock. One of them is DAM Capital, potential. They have a target price of 600 rupees per share, which is a considerable upside from the current market levels. And for them, the valuations at, when you pencil in till FY27, it's at 12 times. So it's definitely cheaper compared to the relative peers. Once I think the market gets that kind of confirmation of growth, I think we might see the positive reaction.
Yeah, and if you talk about peers as well, on an average, I was just looking at a couple of them. It's coming to around 35, 36 times, right? And taking that peer average into comparison with that 36 times, if you are looking at 18 times, it's absolutely reasonable and probably cheaper as well. And that's the reason why you have analysts who do cover the stock who are finding the valuations absolutely attractive. And the revenue growth is the key, the profitability is the key. It's margin expansion that is going to be a question from here on. But let's also quickly look at the street coverage from here on, because as you mentioned, you have DAM Capital, which is a target price of 600. I think you have a BNK, but that is Batliwala and Karnani also, which has coverage on the stock, right?
Yeah, and they've largely maintained a positive view. Like, 517 is the target price that BNK has specifically. Someone like a DAM Capital, as visible on your screen right now, is at 600 rupees per share. And we did speak to the management very recently, post a few weeks ago, essentially on NDTV Profit as well. And the one question which I asked them essentially was on how they are rationalizing their European operations, because that has been impacted and is still loss-making. We could expect some kind of currency deterioration as well in this particular quarter, but largely they are expecting a better H2 performance. The two joint ventures that they've sold off as well, starting from March to now, will aid the company's profitability on a full year basis. So compared to last year, where we did see that impact coming in, we shouldn't see that much of an impact on Sandhar Tech, at least in that side. But there largely seems to be something that the management has been vocal about. They have been mentioning that the rationalization of joint ventures was something to watch out for, and hence they've come out and done these two measures. The other aspect was on debt, which we will be speaking to the management about. Roughly about 740 crores is inflated given the company's current cash levels, and while the equity has largely been stable over the last few years with the promoter holding as well, we will have to see some rationalization on that aspect.
Rationalization in terms of debt is going to be, again, another aspect. But let's quickly take the viewers through the final rating parameters that we've considered at NDTV Profit. If I take you through the income statement, balance sheet, return ratios and cash flow, two of them, that's the income statement and the cash flow, are a thumbs up from here on. Balance sheet and return ratios is absolutely neutral. Let's see if the management commentary helps NDTV Profit make it a thumbs up as well. Your shareholding is also a thumbs up. Your street credentials and street coverage is a thumbs down, and your valuations are neutral so far. But if you have to compare, not give it a like-to-like comparison to peers and just do a comparative with auto ancillaries, it is cheaper. So the KYC final rating is 4.5 on 8 when it comes to Sandhar Technologies as well. In fact, let's also now get in Jayant Davar, Chairman, MD and CEO at Sandhar Technologies, to talk to us about the company, the road and the outlook going ahead. Mr. Davar, welcome to the show, and always a pleasure to speak to you at NDTV Profit. I hope you've seen the KYC rating that NDTV Profit has given the company and the analysis that we have done so far. But my first question coming to you is, good growth in terms of revenue, good growth in terms of profitability as well. The only concerning area right now is the margin profile. You have indicated on a sequential basis there will be improvement, but there has been no guidance to tell us that when will the company come back to that double-digit margin growth. What's your outlook on that? Because you've said earlier FY27 is when you will look at double-digit. Why not FY26? And why not in the coming third quarter as well is the bigger question here.
Well, good morning. Thank you for having me on the show. I think we've been giving guidance even since last year, when we said that we would have a 50 basis points improvement in margin, and we did. We've given a similar guidance for this year, which means that at the closure of this particular year, we will be 50 basis points, which will be in double digits for sure, and a safe double digits in that sense. So See, it's always, you mentioned growth and revenue. The fact is, we do believe that when you make new investments, it leads to growth and then profitability follows sometime later. And that's been the case. We've been making substantial capital investments, which have led to growth. And now I think it's time for us to fertilize and take benefits from what we've done.
Mr. Dawar, very good morning to you. Thanks so much for joining in. It's Puneet this side. It's good speaking to you again as well. Just let me ask you about these new verticals as you mentioned. You are the locking systems is one of them. Roughly 1/5 of your revenue is coming from that segment, and now you're looking to enter the smart locks segment through that. Talk to us about how big of an opportunity that is, and that's largely, I'm guessing it's an opportunity within the auto space. So give us some perspective of the India opportunity as well, and where do you see this going in terms of your current locking business that you have?
So Puneet, let me put it another way. The smart locks, although not alien to the car industry, is definitely new to the two-wheeler space. And the opportunity size is big because you're aware that India is the largest producer of two-wheelers in the world, close to 20 million, and scheduled to move into much higher growth territory as we go forward. Now, all of this is currently operated, or all vehicles are operated with manual locks. The smart lock category is about 8 to 10 times higher in terms of revenue per lock. So therefore, if you look at the potential market, it is massive. We have just begun that journey. Two of our big clients have just onboarded these as standard equipment. It will take time to flow and become deployed horizontally across this two-wheeler space. But it's been a good beginning, and we are very happy that we are the first ones off the block in the mass market of two-wheelers for very, very reputed, largest players in the market.
And Mr. Dawar, do you largely see this as a higher margin compared to your traditional locking system business? And currently you have mentioned that you're seeing a 50 basis point margin improvement. So would it be safe to say that the locking business would be roughly already 11 to 12% in terms of margins, while the other ones are slightly lower, hence you see on a consolidated basis around 9 to 10%?
Actually, the lock business is even higher margins. If I was to give you broad ranges, it ranges between 14 to 16%. It is some of the other new businesses that bring the overall hybrid number down, especially the casting business, the sheet metal business, which are commoditized. And they've just been put up the expansion path where large investments have been made. And whenever new investments are made, a lot of capital expenditure does get shrouded in the form of revenue expenditure. But I think going forward, as these have stabilized, these have all moved to profitable platforms and patterns, you would see these margins grow up quite significantly as we go in the future. If you look at, you did mention about our return on capital employed. We are targeting to cross that 15% number soon. That is our guidance for this particular year. As we go forward into the years, our target would be to come to a level where we have 15% post-tax as our immediate target going forward.
That's a very strong guidance when you talk about the return on capital employed, Mr. Dawar. Now, let's understand what could be the risks that could probably delay this. How are you seeing the ramp up in terms of new facilities? Because any delay on that front could be a downer. Secondly, the turnaround time with regards to where the JVs go. If you have to club both of these, are they absolutely on track in terms of what you had planned, or what stage are you at?
Well, I'm happy to say everything is on track, largely. In terms of new expansion, we had invested in an acquisition which was done at the beginning of the year of Sundaram Clayton aluminium business. And that has now been integrated well into the company. So the capital expenditure, I think at this point of time, is more generic and organic and establishing what we've already put in place. Therefore, we don't have large plans as we go into the future for capital expansion. Our target and our main job is to consolidate and make the capital investments that have been made profitable in this year and in the future years. In terms of growth, we do see, you're aware that 60% plus of our revenues come from the two-wheeler space. Within that space, we do expect this particular year to be growth-oriented, where I believe that two-wheelers will probably have the largest growth compared to, let's say, passenger vehicles or commercial or medium commercial vehicles. We do believe that at Sandhar, we would do double that market growth that the industry does will come to us. Plus, of course, the revenues that will come to us through the acquisition that we have done. So we've already given a guidance of around 20% odd. We are hopeful that with the GST thing kicking in and the market picking up further, we should be able to beat even that number as we go forward.
That's a very strong...
In terms of JVs, you asked a question on JVs.
Yes.
All our
Yes.
JVs are profitable. All our JVs are profitable. And we are very happy that they are no longer a burden on the balance sheet of the company.
No, I mean, JV is no longer a burden is interesting. The other aspect we need to consider, Mr. Davar, is when you talk about the GST benefits, how do they negate the impact with regards to the European market slowdown and US tariffs? Because I know the company does not have a major impact on that front, but your Mexican operations have been impacted on the back of the slowdown in demand that you've seen on that aspect. So if you have to look at the European markets as well, your company did report a loss in the first quarter. Your US tariffs, your Mexican operations have been impacted as well. What is the outlook and the contribution that you are expecting from both these markets? And do you think the GST benefits that could come in will negate the negative aspect of these two?
Well, first of all, the good news. The good news is that we had, the basis for the good news of today is based on history of yesterday, where we had a 22 crore loss coming out of our foreign operations in the last year. While we did suffer a loss in the first quarter itself of this particular year, a large part of that was attributed to a notional loss in terms of foreign exchange, which was 4.5 crores. And there was a commodity price adjustment that comes in later, which led to that loss. Going forward, I do believe that from the next quarter itself, we will turn that tide, and we are very, very hopeful that we will be positive in our overseas operations by the end of this particular financial year.
Mr. Davar, just two quick questions, and because of paucity of time, I hope if you could give us both the answers. You are looking to raise roughly 500 crores, but you did mention that capex is going to be lowered once these capacities come in. So what is the use of these funds that you are planning to do?
Well, there are many things on the plate right now. We were looking at some inorganic kind of expansion. We were looking at some inorganic expansion, and there were some very interesting targets being considered to make sure that we do not miss out on those particular opportunities if they were to come around. We have decided to keep a war chest kind of ready.
And is that largely global or domestic? Sorry to interrupt, Mr. Davar, but is that largely global or domestic in terms of acquisition?
Largely domestic. Largely domestic.
And just one more quick one. You mentioned the acquisition of Sundaram Clayton facilities. They were running at lower utilization, did about 100 crores in terms of revenue. So will the utilization somewhere be around 30% as of now, and that you will substantially increase over the next couple of years?
No, we are looking, I think when we took over, the revenue was close to 350 crores. We do believe that with us getting in there, bringing more efficiencies on the block, we do believe that the existing capacity itself has an upside. Plus the fact that we are doing some expansion capex there for that same facility. And I would believe that with that happening, we should easily have a capacity of double the revenue that was being done prior to our takeover.
Right. I think strong commentary, Mr. Dawar, coming in from your end with all the concerns that the investors could have. But thank you so much for joining us on the show. But clearly, Puneet, you're talking about a double-digit margin soon. 14 to 15% ROCE from the current 9%. Inorganic acquisition for which they've already raised funds, so they're absolutely ready if any opportunity comes in as well. Debt reduction is on the cards, and their overseas operation, which is loss-making, which was a notional loss, as the management mentioned, will probably be positive in FY26. So all these aspects seeming to be positive. So that's with regards to where Sandhar Technologies go. But completely out of time. With that, it's a wrap on this edition of Know Your Company. From Puneet, the team that put the show together, and myself, lots more lined up on the other side. Please stay tuned to NDTV Profit.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. When it comes to the Employee Provident Fund, there are a lot of myths out there, and it is an often misunderstood product. Of course, if there's one thing that most people agree on, it's that it's one of the best products for compounding of retirement corpus, especially obviously for an employee. And it accumulates under the surface, under the radar, and before you know it, there are several lakhs of rupees that you've accumulated that hold you in good stead when you do have to retire. Join me to talk about a few of the myths and to give you a little bit of insight as to how to manage these funds
I'm joined today by Ketan Das, who's the business head, Provident Fund at FinRight Technologies. Ketan, thanks so much for taking the time.
Thank you, Alex.
First, and I think one of the most interesting myths out there, and this is not really something that is necessarily, how do you say it, completely inexplicable. It's actually a pretty rational myth to have, is that you don't gain any interest if you haven't contributed to the Provident Fund in 3 years. First of all, is that true, and how does it work?
Sure. So it is a myth, like we mentioned. You do get interest beyond 3 years as well. We'll explain it through 3 scenarios. Scenario 1 is if you've left the job before turning 55. So let's say you left the job at 45 years old. Then you continue to get interest till the age of 58. Let's take another scenario where you've left the job after turning 55 age. Let's take the example of, let's say you're 57 years old and then you stop contributing. Then you get interest for 3 more years, that is till 60. And there's a third case. Let's say you've left the job and you moved abroad. In that case, you will continue to get interest only for the next 3 years. So partially, yes, the 3 years thing still stands, but it's only in the couple of scenarios that we discussed.
Okay, no, I need to understand this as well. So in which scenarios does it exist and which scenarios does it not exist?
So in the first scenario, like we mentioned, if you've left at the age of 45, then you're continuing to get the interest till the age of 58. Then the 3 years doesn't hold true there.
Yeah.
But in the other 2 scenarios, if you're moving abroad or if you've left after the age of 55, then you only get the interest till 3 years.
Yeah. Basically, if you stop working at any point in your career and you've contributed to the Provident Fund, you can choose to have it accumulate till the age of 58. And you will earn interest on whatever the principal is. Is that right?
Correct.
And if you've moved outside the country, you will then, in whatever case, only earn interest for a period of 3 years if you're not still contributing.
Absolutely.
Okay. So that's an important consideration to have. The second myth is that you don't have to pay tax on interest if no TDS has been deducted. So first of all, this relates to the contribution that has been made, I think, related to the employee's contribution, if you have had the ATC, right? Is this what the myth is about?
No, I'll explain it a little bit. Like we mentioned, you continue to get interest till the age of 58, but the important consideration here is whatever interest you're earning, it's going to be taxable. So essentially, the interest that you're getting is income at your hands, and you have to declare it in your income tax as income and then pay taxes as per your tax slabs. But the catch here is that EPFO doesn't really deduct a TDS or a tax deduction at source when you're giving interest if the contributions have stopped. So essentially, it's a do your own calculation and map it to your ITR, so that you later in the stages, you don't get an income tax notice saying there was an interest component in your Provident Fund. You're supposed to pay taxes, but you haven't paid. So it's better to say it upfront.
So in which cases does tax apply? In which case does tax not apply? Can you spell that out, please?
Sure. So like you mentioned about contributions. So all contributions up to 2.5 lakhs per annum, the interest earned on it will not be taxed. Let's say you've contributed 3 lakhs in 1 year, then up to 2 lakhs 50 is exempt. The interest that you earn on the 50,000 extra will be taxed. I repeat, only the interest is taxed. Here, EPFO will deduct a 10% TDS, and later you're supposed to declare the entire income and pay whatever interest you have as per your tax slabs. So this is one scenario. And the other scenario, like we discussed, if you're leaving the job, you've stopped contributing, then the interest that you earn on your PF will be taxable. Now, in that case, EPFO will not deduct a TDS. You are supposed to declare it on your own and then pay the tax.
Okay. Now, a clarification in the second scenario, does the interest become taxable after 3 years, or is it taxable from the moment you stop contributing?
So, great question. I believe it is from the moment you stop contributing, but we'll have to check on that.
Okay, so we'll have to circle back on this one. The third myth has to do with all PF accounts get auto-transferred when you join a new organization. And I know this one, that doesn't happen. You have to provide your UAN, right?
Correct. So when you join a new organization, you provide them your Aadhaar details. They try to fetch the UN that is linked to your Aadhaar. And EPFO has recently introduced a concept of auto transfer, in which essentially just the previous organization that you are working for gets auto transferred. The request is auto applied. Please note that the request will still go to EPFO for approval. It's just that the application is online and it's automatic. But the point to note is, let's take an example. Let's say you've worked for three organizations, company A, company B, which you're leaving and joining the company C. Now, in this example, like I mentioned, company B's amount or transfer will be raised automatically. But if you haven't merged or if money is still lying in the first organization, that is company A, that will not get automatically transferred. You will have to initiate it manually.
Okay. Now, an important consideration, therefore, when you are moving jobs or when you are out of a job is whether or not you should withdraw or transfer, right? And a lot of young people, I think, tend to make the mistake of withdrawing their provident fund perhaps a little too early, because you can withdraw it after a certain number of years without a problem, right? What is the advice that you would normally dispense?
Right. So technically, if you have not contributed for more than 2 months, you are eligible to withdraw the entire PF corpus. But I would personally advise against it, because there are two considerations that you should think of. First is about taxation. That is, if your total service history in that organization is less than 5 years, then whatever exemptions you have gotten in your provident fund will be reversed. If you try to withdraw it before 5 years, essentially all the tax benefits will go away and it will be treated as income. So if you fall in a higher tax bracket, you might have to end up paying 30% tax on it. So that is not advisable. The second consideration is about compounding. So EPF, like you mentioned, is a very powerful tool because you don't really pay attention to it, and over the years it accumulates to be a huge corpus. But if you keep withdrawing from that provident fund, then essentially your service breaks. The interest compounding also stops there. So there is no provision for you to return. For example, you had an emergency, you withdrew a certain amount. Now there is no provision to put that money back in the fund so that you don't lose out on the compounding part of it. So these are two essential considerations that you should keep in mind.
Something that is related to an earlier point that we discussed and also should weigh into whether or not you should withdraw. Suppose there's a gap of a few months between one job and the other. Of course, you have the option of withdrawing, but if you choose to not withdraw, then some of this aspect will come into play, right? So there will be a tax aspect, but over what period does the interest accrue? Is it calculated only on an annual basis? And so therefore, how do you understand the tax aspect of it? Are you required to pay tax for a few months or not? Do you have an answer, or will I have to circle back for this one?
So interest, I'll tell you how it is calculated. It is calculated monthly, but it is deposited annually. So at the end of the financial year, there is a calculation done on what is the interest that you've earned so far, and it is credited into the account. And as far as I've seen, if it's a matter of couple of months and you're joining in another organization, it's most likely going to be in the same financial year. So there is no issue about taxation that comes into picture, but we'll have to obviously, I'll circle back on with the exact answer.
Fantastic. Okay. The last aspect, which is a checklist in the event of a transfer, and we've established that ideally this should be done, right? But I'll add another hypothetical scenario. If you are moving from a trust to the EPFO, then what do you need to bear in mind?
Sure. So I'll walk you through the regular checklist, and then I'll add one more point regarding your trust. So first thing that you should do is, it's hygiene. Just try and go if you are able to log into the EPF portal or not. Sometimes there are details that don't match with your Aadhaar and you're not able to log in. So that prevents you from accessing all the online services. So that is the first step. Check if you're able to log into the portal. Second step, go to your service history and check if the previous company that you had worked for has updated your date of exit. And third is whether or not your KYC details match across all organizations. Your name, your date of birth, your gender, your father's name and relationship should match across all the companies. Otherwise, your transfer stands a chance of getting rejected. And the fourth point is about EPS. A lot of employees often get confused about this. So it is quite essential that you pay attention to this. It's the employee pension scheme. Two things that you have to check here: whether or not you're eligible for EPS. Second, if you are eligible for EPS, then make sure you're continuing your EPS contributions throughout the companies that you've worked for. Right. And one more point that you mentioned about trust, we can add one more point there. It's that in cases of a trust, you need to have two transfers. One transfer is from the trust who has your PF amount. So they have to transfer the PF amount into the company that you're going to join. And second is the pension amount. So essentially your PF is with the trust, but the pension component of it is still with EPFO. So if you are an EPS member, you also have to initiate a transfer on the EPF portal. So two transfers in case of trust.
Last question, and you mentioned a couple of scenarios that you should pay attention to when you're transferring, but I think this, just as a matter of hygiene, should be done in any case, even if you're not transferring. What do you do if you can't log in to the EPFO website? And two, how do you check and ensure that all of your KYC documents or information is the same across all platforms?
Right. So, like you mentioned, I agree. There's not a lot of attention paid to EPF, and I believe like it leads to rejections later on. Imagine you're in your retirement age, you're 58, and then you run up into a problem. Now you're supposed to go back to the old company, which may or may not exist. So it's always essential that you do it right now. You should get your PF checked. And about the login issue that I mentioned, in such a case, you can reach out to your company, and the company can update whatever details are incorrect. You can provide them the details that is mentioned in your Aadhaar, essentially your name, gender, and date of birth. These are the three things. If they match with Aadhaar and your UAN details, you will be able to log in. So just reach out to your company. If the company has shut down, you might have to go to the EPFO and fill out an offline joint declaration form. And regarding the KYC, if once you have logged in, there is there's an option of manage and go to KYC. There you will find your basic details. You will also be able to check whether your Aadhaar, PAN and bank details are also updated correctly.
Got it. All right. I think we've covered quite a bit of ground, Ketan, on this conversation. And of course, we've got a few things that you need to check on. And so therefore, once you circle back, we'll have another conversation. Thanks so much for taking the time.
Thank you, Alex.
All right, now it's the start of September, and you know what that means. It means that if you haven't yet filed your returns for the previous financial year, I'm talking about your tax returns, then you should go out and do that. And there are a lot of questions that are arising this time around. In fact, that's probably the reason why the government decided to push the deadline till the 15th of September. And joining me in studio to talk about some of the queries that have arisen and to give you clarity, I'm joined by CA Abhishek Mehta. Thanks so much, Abhishek, as always, for taking the time. And, we've actually crowdsourced a few questions, and let's run through the list. Firstly, and this is a pretty common question, do I need to report rental income from a second house even if it is vacant? If I remember correctly, this was actually clarified in the previous budget, right?
Yes.
What does it say?
So now what has happened after the financial year 1920, earlier it was that if you have one house, you can only have one self-occupied property. Right. And any other houses, even if they are vacant, you have to pay rent on that. It will be considered as a deemed rent and you have to pay income tax. Yeah. After financial year 1920, because COVID came and a lot of people had two houses, they were working in Mumbai but staying in Pune, government changed this and said you can have two self-occupied properties. Any other property which you have apart from these two, even if it's not put on rent, we will calculate a deemed rent on that and you have to pay income tax on that property. So that has been changed from 1920 what people used to do is a lot of time take cash in terms of rent and not show them as, rental income. But now that is not the case. You can only have maximum 2 properties as a self-occupied property.
So as it stands, that's how it is. And how is this deemed rent calculated?
So it is mostly whatever your area rent is there. So because income tax gets all the rent agreements as well from the registrar, you have to actually calculate whatever the rent is going on in that place and then pay the tax on that. If you don't do that, income tax will probably do it their own calculation.
19-20 का फर्क रहेगा तो?
That is still okay. They consider that, but there cannot be a 10-20 difference in terms of rent calculation.
Okay, so that's the houses out of the way, right?
Yes.
If you have pension income, is it taxed differently from a salary income?
No. So pension income and family pension, both are taxed as salaried income only. The only difference between both is that if you have a pension income, you can claim standard deduction of 75,000 as per the new regime and 50,000 as per the old regime. But in terms of family pension, you cannot claim a standard deduction.
So for those who are unfamiliar with the concept, family pension is essentially what is earned by the survivor, right?
Yes, yes. So a lot of times in government jobs, what happens if the husband is no more, the wife still gets pension. So in that cases, you will get the pension, you'll have to include it in a salary income, but you cannot claim standard deduction in terms of 75,000 in the new regime.
Okay, but then what if you have income as a survivor?
Yes.
You have income and you also receiving family pension. That's a possibility.
Yes.
So therefore, how do you then on your income you can claim 75,000?
Yes, if you have a salary income.
Sure.
If I have a salary income, I'll claim 75,000 as standard deduction plus include my family pension in that
But even
income.
normal income?
In normal income, standard deduction, the 75,000 is only for salaried
Only
class.
for salary. There you go. So another clarification out there.
Yeah.
Where do I show scholarship income or stipends from internships?
So if scholarship income is mostly from like university, trust and schools, then those are exempt. But if you get a scholarship income, suppose you are doing a fellowship during your PhD and all, so you have to include that in your salary. Or probably if you have got some scholarship income while you are doing an employment, lot of time like in finance, people give some money to do their CFA courses or a CFP courses, then that will be added as a perquisite. And if there is anything third person who is giving you a scholarship, suppose I am just giving a scholarship to a friend of mine, then it will be included in a income from other sources.
Okay, this is an interesting one because of course this emerged during the COVID-19 pandemic. A lot of people earning as online content creators,
Yes.
right? So influencers, brands often pay you either in kind or monetarily, right? So how do you account for that, and how do you disclose that, and how do you pay tax?
So this is mostly your business income. It will be considered as a pure business income. The only thing you have to keep in mind is that if your turnover is more than 20 lakhs, in this case, where people, most of them are getting notices, is if somebody has a turnover of more than 20 lakhs, they should be GST registered. If you are not GST registered, what will happen after 2-3 years, the GST department will take up this matter and make you pay 18% GST on this amount, whatever you have collected over and above. So if your turnover is 21 lakhs, it was compulsory that you had to take a GST number.
But this is even professionals who are earning more than 20 lakhs?
Yes, everybody. And if you are doing a business of trading of goods, then it is 40 lakhs turnover. But if I'm giving you any professional services and I'm earning more than 20 lakhs, I have to compulsorily take GST registration.
But having said that, you take GST registration, but you're not necessarily included in the you don't pay GST,
no,
right?
I have to pay. Whatever sales, once I have taken my GST number, even a 1 rupee sale, I have to pay 18% GST to the government. So a lot of time in the flow of work, people miss out to take GST registration. And when they try to file the return, that is the time they realize that they have missed.
Let me take a hypothetical situation. If you're a lawyer and if you are, if you've got your own firm or if you're providing your services and you're earning more than 20 lakhs, you have to take a GST number, you're taxed at 18%.
Yes, yes. And if you're providing services to business, it will go in B2B. So you have to collect that 18% from the customer and pay it to the government. That's what indirect taxes are there. But lot of these content creators are missing out on this. They're collecting money, TDS is getting deducted, but they're not taking GST registration. And eventually what will happen, even if I have a turnover of 22 lakhs, Government will tell you to pay 18% on this 22 lakhs.
Okay.
And which will amount to 4-5 lakhs plus whatever delay has happened, 3-4 years interest penalty, it will come out to a very big amount.
So, but is this the only tax incidence that they have, the GST, or is there beyond that also income tax?
So income tax is there. Whatever your sales is there, expenses are there, you have to file it under business income. You have to prepare your books of accounts properly and file your returns.
And you can claim 50%.
50% also, and even if it's a business, you have a staff, you have other people, you can claim it at presumptive income.
No, here I'm talking about professionals primarily.
Yes, yes.
You can say presumptive tax, you can say 50% expenses, and you pay tax on that basis. But this is after you've paid your GST.
After I have paid my GST.
Wow, okay, I did not know that. Now I do. All right, a couple more questions. Can I claim medical expenses of dependent parents if they don't have insurance?
Yes, so you can claim medical expenses if they are senior citizen up to 50,000 rupees, and if they are not senior citizen, then 25,000 rupees you can claim. And if you have not taken a medical insurance policy, so if they should not have a medical insurance policy and you are claiming this medical expenses, you can definitely claim it under section 80D.
80D?
Yes.
Even without an insurance policy?
Even without an insurance.
Okay, but that is only available in the old tax regime, therefore?
Yes, only in the old tax regime, not in the new.
Right, because you have no
exemptions.
No exemptions and deductions. Actually, you have a couple of deductions, right?
Few of them, 1-2.
Yeah. Is the gain from selling gifted gold or jewelry or shares taxable, and how?
Yes. So what will happen is, in case my parents have gifted me some gold, I will have to go back to the actual cost of acquisition of my parents and the actual date of acquisition, and I have to pay the tax on the remaining amount. So if probably my dad would have bought a gold at 10,000 rupees, I'm today selling at 1 lakh rupees. So I have to pay the difference, 90,000 bucks, as tax. I can definitely claim indexation benefit and pay 20% on that.
But what if you don't know? What if this is a transfer that took place 20 years back, and unfortunately, and this is a hypothetical scenario, the person that gifted you this asset is no more, and you cannot determine the value of the
So you can take a date of 1st Jan 2001 and you can use the indexation
that
benefit.
is the start of the indexation.
Yes,
right.
2001 se leke you can calculate till date and pay the taxes.
Understood. Okay. And just so we're clear, for gold jewelry, you can still claim indexation benefits, right?
And you have to pay 20% tax after considering the indexation.
Okay. And equity, of course, your long-term capital gains kicked in when? In
2018.
Arun Jaitley's budget, right? 2018. And so therefore, it's only applicable grandfathered after that, right? Okay. So the last question, I believe this is, can capital losses be carried forward if I missed filing ITR last year?
No, if you miss out your ITR filing any time, your previous year's capital losses you cannot carry forward. But one very good thing is coming in the new budget, that even if you file your tax returns on later date, you will be able to...
No, in the new budget, in the new
tax
act.
Yes.
New income tax act.
Yes.
And it has already come in. It has to be gazetted. That's all we're waiting for.
So in that case, now you will be able to carry forward it once the new act comes. But in previous act, there is no provision to carry forward.
One more thing has occurred to me, and that has to do with cryptocurrency. I think a lot of people have cryptocurrency, and good for them, because of what we've seen over the last few months, right? But if you are selling cryptocurrency, it's taxed at 30%, right?
Yes.
How do you account for that? How do you declare that in your ITR?
So two things are happening in crypto. Mostly, a lot of people are not showing them as their income. So whatever sale they have not shown it in their capital gains. One is, a lot of them are getting notices for all the crypto transactions which they are happening. Now, second thing is that you have to pay 30% flat tax rate on whatever profit you have made on your crypto, provided you will not get any expenses. If you are mining, there is any brokerage, commission, XYZ, no expenses can be claimed in case of cryptos or this virtual currencies. And you have to pay a flat 30% tax on whatever the difference is.
Isn't there also a TCS? Tax collected at source.
There is a TDS of 1% on whatever sale proceeds are there. So nowadays, this Bazaar X or other apps which are there, they are deducting 1% TDS on the flat sale. So if there is a crypto sale of 50 lakhs, He will deduct
I thought
50,000
it was
rupees.
the buyer that was responsible for collecting 1% of the total transaction value.
No, mostly what is happening is these platforms are now deducting because they are becoming the middleman. They are buying and they are selling. So in the middle, they are deducting that 1% and paying it in their PAN
And
card.
you have a different ITR form for crypto?
No, it's the same.
It's the same.
Yes.
Okay. So I think we've answered quite a few questions as we normally do. Thank you so much for taking the time.
Thank you.
If you still have more questions on how to fill your ITR or income tax return form, let us know in the comment section and we'll take it up in future episodes. Thanks so much for watching. This is NDTV Profit.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask.
What about the larger view on the markets and somebody who manages oodles of money, Anish Tavakle, co-CIO Equity ICICI Prudential Mutual Fund Johnson, right now to try and understand or give us a sense of how are they making these money-making decisions in this quote-unquote very interesting times. Anish, thank you so much for joining in our studios. Really appreciate this.
My pleasure, Neeraj. Thanks for having me.
No, the pleasure is ours. And Anish, interesting times. They always are in the equity markets. But right now, with just the pace at which news flow seems to be developing and changing every single week, what is your overall stance on what could all of this mean for the equity market, starting off with the tariffs or with the GST reforms that have been announced?
See, both, you should see them in aggregate, right? So our view is that there is no fundamental problem in the economy, right? Fiscal deficit is in good shape, inflation is under control, current account deficit is fine, bank balance sheets are fine, corporate balance sheets are fine. So as far as the fundamentals are concerned, they're in good shape. What we need is a slight pickup in demand, right? So the only challenge is that demand needs to pick up. And I always say demand is an easy problem to solve, right? A mix of fiscal and monetary policies can lead to demand growth. And what we've seen is the RBI has already done a 50 basis point cut that will work through the system and stimulate demand. If some GST cuts happen, that should also be stimulative to demand. So overall, our view is the economy will regain momentum. Now, how do we see tariffs in this context, right? So tariffs, you have to analyze them from two aspects. What do they do to the balance of payments? And what do they do to the overall aggregate demand in the economy? So as far as balance of payments is concerned, firstly, the current account is not in bad shape. It's anyway in good shape. There may be a slight hit you take on exports. If we think it's a temporary hit, then it's anyway not a problem. We have enough reserves to deal with any temporary issue on the balance of payments. If we think it's a longer lasting hit, a small adjustment to the rupee should bring the balance of payments where we would like it to be, right? It should lead to an adjustment to the current account. I mean, maybe we'll take a few fewer holidays, some imports will contract, and that is how the current account will adjust. So that's one side of the equation. The second is, what does it mean for total output, right? So obviously, if you have some sluggishness in exports, what you need is stronger domestic demand, right? And again, as I was saying, both domestic demand can be easily stimulated through monetary policy and fiscal policy, and a mix of both should lead to a recovery. So I'm not too worried about the tariff situation. I think actually what we need to watch is domestic home building activity, right? Frankly, if home building activity, domestic demand remains strong, which in my view relies a lot on home building activity, the economy will recover. If I may add one, interesting point on tariffs. See, actually, I sometimes recommend that we should put some export duties on stuff like pharmaceuticals and IT services. And
that's the complaint.
We can collect the tariffs rather than them. There are no supernormal profits in those industries. These industries will pass on the levy to the consumers, and the Americans will pay for it. So we can actually collect some revenue from the export duties and use it to compensate any industries that might actually be hit. There is no alternative to pharmaceuticals from India. There is no alternative to IT services from India. And these industries are not making supernormal profits, right? So if you levy a tariff, they will pass it on to the consumer.
So that is one for the playbook. Let's see how this develops. On balance, do you think the GST reset trumps the tariff impact?
See, it's very difficult to micro-model these things, right?
Broadly.
No, so there is some hit to demand from exports, and the GST is stimulative, right? Maybe it's even more stimulative than tariffs and offsets it. If it doesn't, then you give a monetary stimulus as well. So the point is, on balance, it's manageable, right? Now, whether we need to do a little more monetary action to manage it, maybe, and that would be fine.
Yeah, but markets don't seem to be entirely convinced of this story. I mean, it's taken some time for a reaction to even come to the fantastic Q1 GDP numbers. There seems to be some trepidation there. What are you looking and sensing? Are you feeling that this is an overvalued, overblown kind of market, or are you feeling more optimistic than what we are seeing reflected?
See, I don't like to give short-term views on the market nor interpret daily market movements. Frankly, one doesn't really know, right? See, what we've been saying is that while the economy is in good shape, the markets are not really cheap, right? And so in that sense, and we've had a very good run over the last 3-4 years. So if it takes a slight pause, that doesn't reflect any fundamental problem, right? It just reflects that, look, I mean, these phases happen. And
it's a phase.
Yeah. I mean, look, we have been concerned about small and mid-cap valuations, and we've been on record saying that. But we think large caps are broadly fine, and large cap is, if you take a 3-year view, you'll do okay.
The question, Anish, might be that if not due to domestic reasons, but due to global reasons, right? US markets, I mean, the question is that what steroids are the US markets on, just the way they are moving ahead. And if indeed there is a pause or a pullback, if indeed the Fed cut doesn't come in the way the market expects it to, so on and so forth, can a global growth or a global market reaction pull back markets from where they are right now and give you better entry points for the 3-year investing period as well?
That can always happen. See, the point is...
that likely?
I don't like to predict that. You know, in the short term, how do markets react? I look at what is the earnings outlook over a 2 or 3 year period.
Fair.
And if it's cheap, you buy. And if it falls, it becomes cheaper, you buy more. Right?
Okay, let's talk about that.
Yeah.
What did the Q1 numbers and the commentary make you believe about the earnings outlook for the next 18 months? And just a parallel to that, can tariffs hit the earnings outlook for H2 of the current financial?
So, as I was saying, right, if you look at the overall economy, there is a slight softness in demand, which can be easily offset. Now, I don't need to read the commentary from managements. I mean, basic economics tell me that if there is a slight weakness in demand, and if you get a monetary or a fiscal stimulus, eventually the economy recovers. Right? It's difficult to say whether it recovers in 2 months or whether it recovers in 4 months, but it always does. As long as there's no fundamental supply side issue, which there isn't. So, I'm reasonably confident that the economy will regain momentum in the next, 2 quarters or so.
Basis what? The Q1 GDP has given you that confidence? You think
I wouldn't say I'm reading too much into one GDP number or whatever, but I'm just saying, look, what was my interpretation of where the economy was? No supply side problems, some weakness in demand. And if you get a stimulus, you will get demand coming back. So if you expect a demand recovery, that's what the economy needs.
So what is the GST play then that you see? Are you going for those consumption, do you think? And I know I'm not talking about markets right now or those kind of bets, but as you see it from an investment perspective, are we at the start of a rally in some of these core consumption stories, including your staples, etc., which have been quite neglected?
So staples, I'm not really super confident on, because I think the problem with staples was never the economy. The problem with staples was that these companies were over-earning, their margins were too high, and they were losing to competition. Right? So it's the competitive environment that is the barrier to volume growth, not so much the economy. So staples, I would not.
Which is not something a GST rate cut can fix.
Which would not get fixed, right? The play is more in what you would call domestic cyclicals. That's automobiles, cement, some financials, and industrial and capital goods, right? Those are the segments that react when you get a stimulus, right? Those are the segments where you see the incremental demand coming in, right? So that's where we are more positive on.
And not so much your financials, or yes?
So financials we like, but I am concerned about unsecured consumer credit, and I have been. So that part I'm avoiding, right? So apart from the unsecured unsecured consumer credits part of the space, I think financials should be fine as well.
Got it. What about slightly expensive pockets, but which may get a tailwind out of demand optimism because of GST or otherwise? For example, I'm just picking a narrow band called EMS, right? 7, 8, 9 companies out there benefit out of a consumption boom, if any, but the valuations seem expensive. How do you approach some sectors like these?
To be honest, I don't understand the moat in these businesses, right? So I don't have big positions in them. Okay. See, my view is that demand growth is never enough to create value. If supply can expand in line with demand, even if demand growth is strong, there will be no supernormal profits in that industry, right? So the question, which I am not convinced of as far as EMS is concerned, is there a supply entry barrier, or is the supply like elastic enough, right? Can supply expand even faster than demand? Because if supply expands even faster than demand, you don't end up with supernormal profits.
That's true.
Right. Thank you so much for coming in today. And,
my pleasure. Thanks for having me.
Let's pose all of those questions to Mr. Shantanu Roy, Chairman and Managing Director, BEML. He joins us right now. on the show. Mr. Roy, great having you. Thanks for joining in. We usually talk to you while you're seated next to us, so this is a different experience, but good talking to you nevertheless. From what Anushi was saying, Mr. Roy, just wondering, after what has arguably been maybe a lean August period in terms of inflows, considering the high standards that you set for the order inflows, is it the upcoming season that people should look forward to for order inflow into BEML, or are you not perturbed about order inflows because the order book itself is pretty strong?
Always a pleasure to be, talking to you.
Thank you, sir.
I'm not at all. First of all, I'm not perturbed. Number two, we are very much focused on the order inflow. I mean, we are not complacent about the order book that we currently have. So the order book currently is at an all-time high, more than 16,700 crores, out of which 65% is rail and metro, 26% defense, 9% mining construction. In the current financial year, we are looking at a further order inflow, which will be at least 50 to 60% of the current order book, out of which 50% should come from rail metro, 25% each from defense and mining and construction. So order book, till today, the order this year, order inflow has been pretty good, around 3,000 crores, which is quite okay. And the coming 2 quarters, we expect some more good orders from defense, from rail and metro. Some metro tenders will be finalized in the coming 2 quarters. So order book is definitely our focus, but at the same time, our major focus is on execution. With this kind of order book, the execution has to match the order inflow as well, so as to have so that we can have a growth of minimum 20% over last year's in terms of the top line. And I'm pretty sure that as far as the bottom line is concerned, the EBITDA, the 150 basis points that we have aimed for in the current financial year, 150 basis point growth, that we should be able to achieve. So this year is entirely on execution, the challenges on execution, and how to ramp up our supply chain, how to indigenize, how to support and stabilize our indigenous supply chain. These are our major focus areas.
Roy, just the last time that we spoke, there was some talk of this large Maharashtra tender coming in on the railway side or the metro side. I mean, what's the update there? By the way, I never meant to say that you're complacent. I was just wondering that considering the past order flows, the August flows were a bit, how do I say, for lack of a better word, muted. But what happened to the Maharashtra order, Mr. Roy? We were talking about it. I don't know if something's happened there.
The Maharashtra tender, I'm sure you are referring to the Mumbai Rail Vikas Corporation, the MRVC tender for stainless steel EMUs. No, it is very much there. We expect the tender should be out anytime, and it's a huge opportunity size. Only thing is that it will take some time to reach fruition, and I see a time span of around 6 to 8 months. Within which time this tender should be finalized. So it's a huge challenge. It's a big order, and it will be spread over at least 6 to 7 years. The first 2 years being on the design and the proto supply, and after that total supply period of 5 years.
Tamanna here, and obviously always a pleasure to speak with you. Just a couple of points on the Bangalore Metro project delays and the Bharat train set orders which we had seen. Are those now easing out? What is the outlook over there?
Bangalore Metro train set, there has never been a delay from BML side. They are very much on track.
Yeah, the execution, there was some execution delays. Are you looking at all of that in place?
There is no execution delay from our side as far as the Bangalore Metro is concerned.
Okay.
Bangalore Metro, there are 2 orders. There is another order on another rolling stock manufacturer. So you may be talking about that. But as far as BML is concerned, there are absolutely no delays. We are on track. In fact, in September, we are planning to roll out the first metro, the first train, which is very much as per plan. And this year, we are supposed to roll out 20 train sets. We are trying our best to roll out 20 train sets, and we will do that. We are on track as far as Bangalore Metro is concerned. As far as other projects are concerned, for example, the Chennai Metro is very, very much on track. The design process is happening very fast. The procurement is happening very fast. It's on track, much before time, I would say. And we expect that the proto, which we are supposed to deliver sometime early 2027, we should be able to advance that. So execution, as far as the metro is concerned, metro is going on fine, absolutely no challenges, because metro we have been doing for the last 20 odd years, more than 20 years. So the supply chain is quite well established.
Okay, in terms of Vande Bharat expectation, I believe there were some concerns there, or is that not the case?
No, Vande Bharat, again, there are no concerns at all. You see, the first proto train has already undergone oscillation trials successfully, has undergone CCRS inspection, and now very shortly it should be rolled out. We are in the process of manufacturing the balance rakes. We have a total order book of 10 train sets, and all these 10 train sets we expect that we'll be able to complete by December or max by January.
Now, in terms of your order book outlook, and you spoke a short while ago about how everything is on track, the order book is robust. Your targeted, your guidance of about 23,000 crores by the end of this financial year, is that on track? What are you expecting to come in the rest of the quarters?
When I say that we should be ending the year at around 22,000 crore, so first we have to reach a total order book of around 28,000 crore, out of which if we execute some 5,000-6,000 crore this year, so we'll end up the year at 22,000 crores. In the next 7 months, I expect at least, some major orders to be finalized for the metro sector. We can expect some more orders from the commuter rail. As far as defense is concerned, we are quite well on track for some orders on the combat engineering segment, which will be finalized by March. As far as mining is concerned, mining and construction, we are looking at certain export orders which should be finalized within the next 2 to 3 months. As well as we are trying to have at least one order for the rolling stock, either the metro or the commuter rail. And we are targeting Africa, the Middle East, as well as ASEAN. So any one of these regions, we should get at least one rolling stock order. Of course, the execution will not start immediately. The execution, as I have always maintained, there is a gestation period of at least 18 to 24 months. So execution will take some time, but we will have a beginning as far as the rolling stock exports is concerned. That is what our aim is in the current financial year.
Just one quick question on the 150 basis point margin improvement that has been targeted. How is that going? Is the working capital cost coming down? Is that on track? Anything that you can add there, sir?
You see, let us look at the trend of how the EBITDA has grown over the last few years. It was around 5.5% some 4-5 years back, and now we are at around 13.2%, which is a pretty decent growth. And in the current financial year, when we have targeted 150 basis points, so it is based on two factors. Number one is the first factor is the growth in the top line, and the second factor is a focus on the working capital, so that we are able to reduce our overall working capital by way of focusing on reducing the inventory and reducing the debtors, as well as rationalizing the design of various products so that there is a saving in material cost. A 1% saving in material cost leads to a huge positive impact on the profitability. Our target this year is to reduce the material cost by at least 2%. So these are the measures that we are taking, and by this we are pretty confident that we will meet the EBITDA aspirations.
Mr. Roy, just one very quick follow-up. Does the GST change have any impact on your procurement costs, etc. at all, or any impact on you as a company?
I don't think so, because it's all input credit. It's a pass through.
Nothing at all. Okay, fine.
GST, we get input
nothing
credit.
on the output either, right? I mean, nothing for you per se. Okay.
No.
Fair call. Okay. Thank you so much, Mr. Roy, and all the best for the quarters ahead. Really appreciate your time.
Thank you.
Sumedh Badve is joining us, promoter of Bellrise Industries. Thank you so much for joining us, and great to have you on, Mr. Badve, on NDTV Profit this morning. Let's just talk about the GST impact first, because that's top of mind right now. What is the kind of benefit you see accruing to you?
So it is, obviously the benefit would be in terms of rate reduction, very lucrative to the customers, the OEMs. The overall price obviously goes down, which is a very positive demand booster, and it's great for automotive, great for autos. It's a meaningful reduction, and we believe that it'll drive growth going forward. Obviously, if you look at the two-wheeler industry, it's we had a peak in the pre-COVID FY 19-20ish. And since COVID, this peak hasn't still been reached. I think this could be a great turning point, with the industry now moving towards coming very close to that peak and going forward, increasing even further in terms of the growth. So that's
any kind of margin improvement you see as a result of the kind of demand that's coming in, GST, etc. What is the outlook on margins coming in? Because good set of numbers in Q1, but a slight downtake on margins.
I don't think it is. So this is it'll drive volume. It'll drive better demand. With respect to margin, we're not we're largely in. If you compare to the previous year, we're largely in sync. There's not been much change in our margins. I think that will continue to be stable.
Sumedh, first a bookkeeping question, if I can, before we get to the bigger picture. Because you've repaid so much of the debt through the IPO proceeds, would it be suffice to say that your bottom line performance YOY, right, the growth, will look materially better than what your operational metrics or EBITDA growth or sales growth could look at, because you save on that interest cost? Or is there something I'm missing here?
No, you're absolutely on point. That's perfectly correct. From a PAT perspective, it'll automatically translate to better bottom line, because we have repaid a significant portion of our debt. It was a completely fresh issue. We raised 2150 crores, 2150 crores from the IPO. It was a full fresh issue. 75% of that was going towards debt repayment, which comes to about approximately 1600 crores, which we've already repaid, and the balance is towards general corporate purposes. So that will translate to a meaningful impact on the bottom line. So you're perfectly right on that.
And are you particularly happy with all the recent developments, especially two of them, right? So there are three, right? One is the tariffs and whether that has an impact on exports to that region. But two, the fact that GST cuts, as Tamanna probably spoke to you about, and if that brings about an uptick in sales. But three, also, in one of the con calls, you had mentioned about rare earth shortages could have an impact, but if indeed the India-China relationships, it improves, and if there is a material positives on the rare earth availability, is that something that could help you? Are you already seeing signs of those pressures easing? Because I think Bajaj Auto was on record saying that those rare earth pressures are easing.
Right. I won't be able to comment on any customers, but
no, they were saying for them. I'm wondering if you are experiencing the same thing.
Sure. Fair question. Let's go point by point. With number one, with respect to tariffs, we don't have any meaningful exports to the US, so we're largely shielded from the tariffs, which is a positive. We do export to Europe, to certain premium four-wheeler manufacturers. That is actually looking positive. We largely the UK, but otherwise also overall to the UK, to Europe. The UK FTA, the India-UK FTA is actually very positive in that sense. With respect to our indirect exports through the OEMs that we work with, we have exposure to South America, to Europe, Africa, Southeast Asia, the larger Asian countries. That demand continues to be robust. That was point number one. Point number two, I think, was with respect to GST, which you asked. That obviously, like I also mentioned, very, very positive in terms of driving demand and growth. And we see that there is a meaningful increase in terms of, or at least within the larger public, there's very solid positive environment, especially given the festive season that we're currently in. And number three, I think your question was around, can you repeat what number three was?
Issue, Sumedh. I mean, is that an issue for you as well, for the businesses that you are or may enter in?
So, rare earth, actually, given the current positive talks that are currently happening between India and China, that is actually will make things significantly easier and will drive EVs further. That is our take from the happenings as they are undergoing right now.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Tech has changed. So should your tech show.
Hi, thanks so much for joining in to this special broadcast on NDTV Profit. Amidst global trade turmoil, with the US playing hardball and using tariffs as a blunt instrument, the Indian government is focused on a reform agenda that's aimed at bolstering consumption. And the spearhead of that is the rationalization of the goods and services tax. The proposal by the government, which was approved by the group of ministers, is to move to a two-rate regime from the current four-slab structure. 5% and 18% will be the two broad rates. The first reading of this implies a cut in the rates on over 150 goods and services. This will now be debated and hopefully ratified by the GST Council in a meeting that starts on the 3rd of September. On this special show, we're talking about how companies are gearing up for this landmark change and whether India Inc. believes that consumption and therefore growth is on the up and up. Joining me at this moment is B. Thiagarajan, who's the Managing Director of Blue Star, Sridip Nair Kesavan, who's the Chief Executive Officer of Heritage Foods, and Vishal Vittal Kamath, the Executive Director of Kamath Hotels India. Gentlemen, thanks so much for taking the time. And this is hopefully a measure that will bring a smile to all of your faces and certainly your consumers as well. So let me start from the perspective of the consumer durable space, because I think this is something that a lot of people are excited about. Not only air conditioners, but I'm hoping that you can give us perspective for the industry at large, Mr. Thiagarajan. We've spoken in the run-up to this event, and apart from a few inventory-related issues, the worry was about implementation. And the signs are that 22nd of September, at the start of Navratri, is when this will take place. Would you say that, on balance, this is a very positive move?
It is an excellent move. One could have asked for more. The industry had been asking for rationalization of GST, but we never thought that 28% will be brought down to 18% on all the categories. For example, in air conditioners, we have been pitching for at least 5-star air conditioners. You reduce it to 18% or 12%. But the announcement is much more than what we anticipated, and in a price sensitive market, for example, more than 90% of the buyers are first time buyers and 65% plus are from tier 3, 4, 5 markets. 80% of the models sold are entry level products and more than 40% are bought through consumer finance. You can imagine the consumer profile. For them, let us say 1500 to 2000 rupee reduction in price is a big thing, and it is going to result in explosive growth.
You know, I will circle back on a couple of things that emerged from what you just said, but I do want to go to Mr. Kesavan as well, because in the space that you play in, the price sensitivity exists, but the price tags are much smaller. So I'm wondering what you anticipate the impact of this shift to be.
Alex, thank you very much for having me on the show. Absolutely, I agree with Mr. Thiagarajan that this is actually a double Diwali gift, as Prime Minister put it. This is a big bonanza. This is something that the economy really needed. And if you look at actually the GDP growth in the last several quarters, we have had fantastic growth rate, but primarily they were all driven by services sector and the government capital expenditure. Even though consumption has been growing, but it has been growing a tad lower than the GDP growth rate. So we really badly need this for the consumption boost. You're absolutely right. In the categories where we operate, the price tags are smaller, but price sensitivity is very high. The biggest beneficiary of the proposed GST revision would be the categories such as ghee, butter, cheese, etc. These are all put together. The size of the organized trade today is about 65,000 crores for these categories put together, in which ghee is the biggest contributor at about 35,000 crores. Now, you know that ghee is actually a household consumption item, but with prices as high as 700 rupees a liter, it's quite natural that people switch to lower priced alternative or edible oils, which are probably imported into the country. Actually, India is a net importer of edible oils. So this will actually have a double effect as far as the economy is concerned. One, it boosts the consumption of our own home produced ghee. Secondly, it will reduce the burden on imported items such as edible oil, because the more ghee consumption means reduced consumption of other edible oils. So we expect this to have a significant boost to consumption.
Okay, so I do want to talk about the services space as well. And Mr. Kamath, one of the big talking points, of course, is that 7,500 rupee mark for a hotel booking, where anything below that would move to a lower rate. And this, I think, is a shot in the arm for a sector that is already being spoken about in various circles, about being one of the fastest growing in India, travel and tourism. What, according to you, is the fillip that you will get from a rate reduction here? And do you anticipate that the rates in the space that you play in will now get polarized even further, and that middle range of around 7,000 to 9,000 or 10,000 might just go away?
Namaskar. Nothing will go away. And the thing is that as you have an improvement in the GST, simplification in the GST rates in general, what happens is customer profiles tend to change. Now, as Mr. Tyagarajan said, many a times they are first-time buyers. But what about the second-time buyer? A second-time buyer is the kind of person who will take advantage of the GST rate being reduced and go towards what we call as premiumization. So there would be a saving on one hand, that today if someone was going to a simple restaurant, he still has the urge to spend a certain amount in his mind. Now that the tax is reduced, he might want to go for a better product. So whether it is in our industry or any industry, I do feel in the long run, premiumization which has happened post-COVID will further get a boost because of the rationalization of the GST. In our industry, there will definitely be, the 5% segment which was already there for the food industry, for the restaurant part, which is in standalone, that is already having a certain consumption based on a certain demand, festivities, celebration, or need-based dining. But when we look at the higher segments, when we talk about India as a MICE tourism destination, I think the rationalization of this 18% also is critical, because we are losing out our foreigners to Thailand, to Taiwan, to other nations who are having a very friendly GST policy or a taxation policy and a visa policy to help all these people come and increase their forex. So I think along with this 5% shot in the arm, we should get a shot in the 7.5 category also, because ultimately, if the volume of business goes up, the GST collection will go up. And that is something which I hope the government will look at and in the council meeting on even further on this 7.5 thing. See, this 7.5 cap was what logic has never been told. And considering that it's been there from the last 3 years, it does not account into today many of the tier 2 cities also crossing 7.5 because of inflation and demand perspective. So I think we look forward to the government bringing this and making our industry more friendly in terms of GST on multi levels.
Important point that you've raised, right? And the tendency of these slabs to remain unchanged for many years is something to contemplate as well. But I do want to ask both the manufacturers, and I am loosely using that word, sellers of products, whether they anticipate that capacity will have to be added if they think that consumption will get such a boost. Because, and I'll start with you, Mr. Tyagarajan, you are only speaking about, or we are only speaking about GST today, but there's more that is in the works, right? We've spoken about the implications of the IT reform. We've spoken about the monetary policy, which is favorable now and possibly heading even lower. You've got the 8th Pay Commission. So you've got several cylinders that are firing. Do you anticipate that not just you as a company, but the industry as a whole and private sector will have to significantly bolster capacity in the near term?
Of course, yes. It is a golden period. Even without the GST rationalization, some of the consumer durables were on a very high growth path with a CAGR projection of close to 19%. Many other categories, it is between 10 to 15%. Now, GST rationalization combined with the one more thing is the income tax rationalization happened actually. All these put together, it is going to drive consumption growth. Of course, you will have to watch out for a global economic slow down, whether we will be able to avoid it and protect ourselves as a firewall, that Indian economy will continue to grow, irrespective of what is happening in the globe. We have to watch out for that. But otherwise, if I were to take the period FY26 to FY31, it is going to be a golden period. There is absolutely no doubt about it.
Mr. Kesavan, you want to weigh in on that?
Yeah, in the long run, I totally agree with you that with consumption increasing at the rate at which we anticipated to, we will have to ramp up the capex, that we have in our pipeline to accommodate the kind of volumes that's going to come our way. If I could just talk about some numbers, for example, ghee in India, organized trade is roughly around 32 to 35,000 crores. That's the size of the industry per se. And the unorganized or informal economy is close to about 80 to 90,000 crores. We anticipate that it's just my simple estimation that in the next 3 years, the organized industry of ghee could double and become 65,000 crores. That's a CAGR of about 32 to 35%. And if we are probably, the industry is gearing, at this point in time, it's geared to accommodate a growth of about 20 to 25%. So this is close to about 10 or 15% higher rate of growth that we anticipate. So we will naturally have to accommodate that. But that said, I believe that we should also look at certain flip sides that we are, or rather actually watch outs that we may have in the short term. That is, for example, it is still not clear about the inverted GST structure that we have in certain products, and for example, the inventory. The timing of this particular announcement for our industry is very interesting, because of almost 40 to 50% of our sale happens in the festive period, which is September to November period, as far as ghee and butter is concerned. And the announcement is coming bang in the middle of it. And we'll have to watch out how the inventories pan out. So there might be short-term variations in the kind of sales numbers that we might clock. But in the long term, I totally agree with you that this is a good story as far as capacity building is concerned.
Yeah, important. And we incidentally have spoken to Mr. Tyagarajan in the recent past as well about the inventory issues. And I think what he had stressed very clearly was that the sooner the implementation takes place, the better it is, because less pain for the system at large, right? Because the distributors will have to hold inventory and bear certain losses. But I'm just wondering about how you rate this in the larger scheme of things. I'll come to you, Mr. Kamath. Give me a sense of the trend that you've witnessed already so far this year, because the latest aviation trends also seem to suggest that the second quarter was a little soft. So do you anticipate that the rest of the year, given everything that we've seen, including the GST push that we could see now, will be significantly better than what we've seen so far? And if you can put it in numbers, that would be very helpful.
So if you're asking me,
I'm asking Mr. Kamath.
Oh, you're asking me? Oh,
yes.
Sorry. Basically, the first quarter rather was a little soft because, as you know, we had Operation Sindoor, which basically did put a pause in the month of May, which is also a crucial month because there's a lot of corporate movement happening. There's a lot of holiday goers also. So certain of our industry sectors did suffer. But if you look at it going forward, now looking at the month of September, October, November, we are looking at very buoyant and robust growth. And regardless of whether the GST deduction happens or not, people will still go out. They will still holiday. They will still get married. It's just that now they'll have a little more money to celebrate and to buy more things. And like I said about the premiumization, we find that there's a value upgradation happening. Today, I will want to buy a branded product like Blue Star or Heritage, go to a Orchid Hotel, as compared to, compromise and buy some, white labeled AC, because my aspiration has improved. If you look at the car segment also, the premium segment cars, if you look at the alcohol segment in the premium with terms of single malts, and in hospitality also, Orchid Hotels are getting more traction than what they would maybe in 2018-19. So there is more demand for brands, and there is a further growth. I think all three of us are unanimous in the India story, in our own citizens, in our consumption story. and the aspiration that carries with it.
Very
so, yeah, that's how it works.
Very well put. And I like the statement because it makes a lot of sense, right? There are certain products and services that you will consume irrespective. And of course, if you consume and the rates are lower, there's more money in your hands. So weigh in on that, Mr. Tyagarajan. Do you also see people moving up the value chain sooner rather than later? And what are the implications for companies like yours?
See, in the normal course, for example, 3-star air conditioners, actually that constituted a lot, and some 30% of the total sales used to be 5-star. Now, since the price levels have come down, yes, while 3-star air conditioner buyers, a significant amount of them can migrate to 5-star because it makes business sense for them, because over the life cycle, they are going to save power. Earlier, it was that price band that was restricting them. So obviously it will happen. The second part is someone would have thought of buying one air conditioner for a bedroom. Now they may consider buying two. Little more money they have to spend because the per unit price has come down. They can afford two instead of one. So it will have a phenomenal effect. We have seen for a much smaller reduction. Here we are talking about 28% to 18%. It is historic. It has never happened in India. Even though excise duty and VAT was there.
Certainly. My last question to you, gentlemen, out of 10, I would like you to rate your excitement ahead of the rollout of this landmark GST reform and ahead of the festive season, which I think all of us are hoping is going to be a fantastic one. I'll start with you, Mr. Tyagarajan.
Out of 10, 15, I would say.
Okay, you've broken the scale. Let me go to you. Let me go to you next, Mr. Kesavan.
Can I go one up on Mr. Tyagarajan?
Please do so.
Yeah, so yeah, absolutely. I'll also go with 15, 20, 25, whatever. We're also super excited, especially because of the timing. For us, it's very critical. The categories that are going to be impacted are highly salient during festive period. There couldn't have been better timing for such a gift.
And Mr. Kamath?
I just like to say that both as an industry and as a consumer, both we are ecstatic. The reason being that we have suffered through so many challenges with multi-taxes that now with this simplification, anything happening is 100% satisfaction on our demands in terms of improvement. So I think there can be no debate about this at all, that as a consumer and as industry, we are extremely happy.
Okay, we began with smiles on our faces and we are ending with smiles on our faces. Gentlemen, thank you so much for taking the time.
Thank you.
Thank you very much.
Thank you.
All right, now that is a perspective from three companies and industries that are certainly going to benefit. But let me widen the scope and give you a sense from the associations that represent not just the large companies, but the smaller ones as well. I'm joined now by Sanjay Nair, who's president of ASSOCHAM. I don't need to introduce him or the association that he represents. And I'm also joined by Chandrakant Sarunke, who is the president of SME Chamber of India. Gentlemen, thank you so much for taking the time. Let me start with you, Mr. Nair, because there seems to be a considerable amount of excitement. And my previous panel has rated this 15 plus out of 10 in terms of excitement. I wonder what your initial thoughts are.
Hi, thanks for having me on the show. I would say, yes, there is a fairly high degree of excitement, but I think we have to wait for the details to come out in the next couple of days. I would say at a headline level, the simplification, the rationalization into two duty structures, and I'm hoping very much for clearer compliance, easier compliance, lesser form filling, lesser classification that lead to misclassifications. Anything and everything we can do to simplify the life at least benefits our MSMEs and SMEs big time. Half of them don't even want to, they really get hassled about just the burden of proof, the burden of filings, the periodicity of it. So I think we just need to simplify that. That I think itself will be a huge achievement. Besides, of course, the rate structures being rationalized and coming down in quantum. So that's kind of my headline view.
Mr. Sarunke, please weigh in on this, and thank you so much for taking the time, because ultimately in the context of what is happening on the global stage. And I think we're all cognizant of the fact that a lot of small companies are getting impacted by tariffs. But at the same time, what was just being pointed out about simplification and the ease of the burden for small companies, do you think there is more good than bad that is emerging from this situation?
First of all, I'm very much thankful to the Prime Minister and the Honorable Finance Minister to taking the lead to, reform the, GST structure, because it is impacting to the SME sector, particularly for those, rural area, those are into, manufacturing industry. It was, impact on the simplification of the logistics, improve the tax structure, expanded business reach, but also the imposing the challenges such as an increase compliance cost, complexity in the tax filing, cash flow issues from upfront tax payments also. Initial difficulties in adapting to the new system. I think the GST aims to create a single uniform tax system, replacing the multiple indirect taxes, which is leading to the operational efficiency, competitiveness in MSME sector, and especially for the current economic scenario in India as well as the global platform. It will be the beneficial to the SME sector, particularly those are also losing the benefits of the GST. I'm sure that this will enhance the profitability and efficiency amongst the MSME sector, and especially in the manufacturing industry, because India is looking to become a manufacturing hub, and the Honorable Prime Minister has given task to MSME sector to march towards Viksit Bharat. So without SME, India will not grow, and without India, the economic global
Important points that you raised. Mr. Nair, just